Secretariat. So I understand that quite a few of our colleagues will be delayed in coming because there have been two breakfast sessions that have been taking place, and so they will trickle in and we'll make allowances for that. We just hope that when they come in, they don't come in as a flood with noise disturbing the proceedings on stage. So let me first, by way of applause, can I find out if you enjoyed the gala dinner yesterday?
Yep.
And if the sessions yesterday were engaging?
Exactly. It was an entertaining night, I have to say.
It was?
It was an entertaining night. We had very good musical.
Okay, pretty good. Okay, so today, day 3, we've got quite a few topics to get through, but I think the essence of today is the future reimagined. Because a lot of the issues we've spoken about, whether it's harmonizing of systems, tariffs, visa regulations, it's the reality on the ground today. But I think today we're going to talk about what could possibly be. This is why we've invited guests who are great investors in the area of media, new technologies, new communication systems. We're going to talk about textiles, because I think one of the ways in which the continent can leverage its creative economies, which are valued at $1 billion currently, is to really support the nexus of manufacturing and fashion, apparel, and interior design, decor, and the like. And so we're also going to have that conversation. And to that end, this is why I'm dressed the way I am today. I wanted to showcase what it looks like when you're wearing something that is made in Africa across the value chain, from the cotton that is sourced through to the creativity, through to retail. And we want to encourage you to do the same. So on the ground floor is what we call the Sustainability Village. And this is where you can walk around and look at some of the creative artifacts and goods that are made on the African continent. As delegates, you've been issued a voucher, and that voucher is redeemable at the Sustainability Village on the ground floor. So we really want to implore you to go to the ground floor, have a look around, and utilize the voucher to buy something that is made, designed, and of African creativity. So please remember that. Another housekeeping note is that if you were a speaker yesterday and you lost your spectacles, we have them. So please go to the sound desk at the back. We have your spectacles. If you were able to see your way through and you're here, you'll find us at the back. And then a request is that please could you leave the headsets, the translation headsets, on the chairs. I know that some of our colleagues have been going into breakaway sessions with the headsets. It's not necessary. All the infrastructure that you need there has been catered for. Please leave the translation headsets here. And if you're attending the forum for the first time today, we have translation for you using these headsets in English, in French, in Portuguese, and also in Arabic. We also want to remind you to download the event app. It's called Event Case, and there you will find the agenda for the day. If there are any changes to the agenda, you'll be able to see those changes there. And any material that you want to download, you can do it there. Any of the discussions, the thematic issues, you'll find them there. So please utilize the event app. And I think on the housekeeping notes, that's about it. If you need the Wi-Fi, the conference has its own identity. So you'll go onto your Wi-Fi page, you'll look at the AfCFTA event, and then you will use the password ABF2023 exclamation mark. So ABF 2023 exclamation mark. Hanan.
Thank you so much, Lerato. So we've followed all the housekeeping rules. We're up to date as to what we got to do to keep up with the program today. You mentioned just earlier in your introduction that we are here reimagining what the future can be for Africa through this conference. And we're going to keep doing that for the 3rd day of the summit. But there's also a time and an opportunity to look back at the history of the single African market, not just the AfCFTA per se, which is, we know, 3 years of accomplishment, but the single African market itself. Nous avons aujourd'hui l'opportunité de aussi remonter un petit peu, revenir en arrière pour regarder un petit peu cette histoire qui nous emmène aujourd'hui à être réunis pour parler donc du marché unique africain. Un marché qui finalement est une idée qui a été animée et qui a été développée par les pères fondateurs du panafricanisme. And that's the reason why I urge you all to watch this video, the story of us from Kwame Nkrumah to the AfCFTA.
Enjoy the day.
The Committee of Foreign Ministers, officials and experts should be empowered to establish, 1, a commission to frame a constitution for the Union Government of African States. 2, a commission to work out a continent-wide plan for the united or common economic and industrial program for Africa. This plan should include for setting up a common market for Africa, an African currency, African monetary zone, an African central bank, a continental communication system.
It is important to acknowledge that the desire to establish a common market on the African continent in the goal to attain economic integration had been expressed by our forebears who laid the foundation for the face of trade today. The launch of the African Continental Free Trade Area, AfCFTA, marks an important milestone in Africa's long history of regional integration, as it is the largest free trade area since the formation of the World Trade Organization, WTO. A key objective of the AfCFTA is to create a single Pan-African market for goods and services by eliminating trade barriers and boost intra-Africa trade while ensuring free movement of business persons and of capital. The AfCFTA was created to transform the lives of Africans, where for the very first time since the end of colonialism, we have an instrument to regulate trade among African countries. Africa has been marginalized from global trade for many, many years, with a participation of less than 3%. Yet, we export over 80% outside of our continent. The time has come to own our narrative. This is the only opportunity we have to lift millions and millions of Africans out of poverty. With the AfCFTA, we have succeeded in sending products from East Africa, North Africa, and Central Africa to West Africa at reduced tariffs.
Faisons en sorte également que le marché africain soit le marché des Africains. Produire en Afrique, transformer en Afrique et consommer en Afrique. Produisons ce dont nous avons besoin et consommons ce que nous produisons au lieu d'importer.
The AfCFTA entered into force in 2019 and has achieved significant milestones. The AfCFTA currently has close to 50 state parties. The Pan-African Payment and Settlement System, PAPS, in collaboration with Afreximbank, has been rolled out with over 60 banks and 9 commercial banks joining the system so far. The platform is a cross-border financial market infrastructure enabling payment transactions across Africa. AfCFTA Adjustment Fund, in partnership with Afreximbank, has been established and aims at mitigating the negative impact of lost tariff revenue and other near-term effects of state parties in the implementation of the AfCFTA. The AfCFTA e-tariff book has been created and is available online to all. It is a web-based electronic tariff book containing updated schedules of tariff concessions aiming to facilitate the publication of information on rates of duty applied by AfCFTA state parties under their schedules of tariff concessions. The AfCFTA Rules of Origin Manual has been finalized and published. It covers the provisions governing the determination of the origin status of goods under the agreement. It enables economic actors ascertain the origin of the goods they will be trading across the continent. The AfCFTA Guided Trade was launched and initiated trade amongst 7 state parties with 96 goods with the support of the Secretariat. The objective of this initiative was to showcase that trading under the AfCFTA is possible and the necessary tools to enable that are available. The vision of our leaders 70 years ago is being brought to light in an Africa where women and young people can aspire to expand their horizons of opportunities beyond their borders. For the very first time, a legal framework will enable businesses to settle their disputes thanks to a dispute settlement body when trading with another country. The AfCFTA has opened Africa for investments while providing regulatory measures. This new era of trading is digitizing trade and promoting financial inclusion. It will take each and every African to make the AfCFTA work. We are creating one African market. The Africa we want is here. Let's accelerate the implementation of the AfCFTA.
Ladies and gentlemen, we're going to pursue with our program, but just before we move on to our next panel, the one that I will be moderating, I just want to go back to an information that Lerato gave you earlier. We do have a sustainability village on the ground floor, but it is actually on the ground floor that you will find the vouchers that you can redeem to purchase African-made products. So this is how it works. You just go to the ground floor, you get the vouchers, and then you can make your purchases. Juste pour préciser, pour ce qui est du village durable qui se trouve donc au rez-de-chaussée de ce bâtiment, il faut vous rendre donc au village durable pour avoir des tickets qui vous permettent ensuite d'acheter des produits locaux, des produits made in Africa, et on vous encourage donc à le faire. N'hésitez pas, ça se trouve au rez-de-chaussée de ce bâtiment. So, throughout this business forum, ladies and gentlemen, we've heard the word implementation, the word industrialization, the idea that as Africa we have to start transforming our own products so as not to be as reliable on importation and imported goods. This has been uttered time and time again by many speakers who have taken to the stage, and rightfully so. This is something that some African forefathers, we also mentioned that, have defended and advocated for before us decades ago. How many times did late Burkinabe President Thomas Sankara speak of the need for full-fledged value chains in cotton, for example, so as to not just have it and harvest it, but also to transform it, to be able to wear it, and then to trade it amongst ourselves and beyond. In the context of the AfCFTA, regional value chains are undoubtedly the way to go. With RVCs, the end product, the finished products, is exported by a country within the region, either globally or regionally. RVCs therefore offer opportunities to the countries in the region to climb up the value chain, and by using the region to boost their competitiveness to produce and export higher value added products. But in order to do that, to develop value chains regionally for the continent, producers of all sizes, including very small ones, need access to financing. That's obvious. Not any kind of financing that is adapted to the market. Let's be honest, financing is not always accessible to everyone across the continent, especially to certain actors that operate within rural value chains or demographics that have a little bit less access, like women and youth, for example. So something obviously needs to change and move forward and get better on that front. And who better to discuss the progress that needs to be done, that is also being achieved in this field, but also the many shortcomings that are still at play than direct stakeholders, experts in the field. So ladies and gentlemen, we have a fascinating panel on financing regional value chains in the continent, and I'm going to now introduce the panelists that are going to join me here on the podium to discuss this. Starting with Kanayo Awani, Executive Vice President, Intra-Africa Trade Bank, Afreximbank. Can you please give her a warm round of applause? Thank you. Also with us, Asha Leke, Senior Partner, McKinsey & Company. We also want to welcome him warmly. Thank you. Part of this panel, also Michael Awori. He's the CEO of the Trade and Development Bank Group, who's also going to join me on stage. If you keep, please give them a warm welcome so as to encourage them to share their thoughts. Also with us, Stéphane Ouedraogo, Vice President of Lilium Capital. And last and not least, Nathalie Akon-Gabala, Executive Director of the Pan-African Programs at the Mastercard Foundation. Thank you all for being with us today. Thank you for giving your time to speak about financing RVCs within the AfCFTA. I also want to give the opportunity to the audience to ask their own questions, to react. I know that usually when we speak about financing, when we speak about money, it usually makes people engaged. So we also want to have not just your questions, but also your inputs and your reactions to what the panelists will be saying throughout the session. So I want to be conscious of time and just urge you all to please try and be concise with your responses so that we can have an exchange with the floor. So I mentioned in my introduction that the right financial services have to be made available to businesses in Africa. I first want to hear from financial institutions per se about this, to get a grasp of what you've already done and what you're planning to do when it comes to RVC finance. And I will start with you, Michael Awori, CEO of TDB Group. Could you first explain what your institution does? So it's the Trade and Development Bank, and you're mostly implanted, if I'm not mistaken, in Eastern and Southern Africa. And so the question is, how do you operate to finance businesses in the context of RVCs?
Thank you, Hanane, and welcome as well to my distinguished panelists, and it's a real pleasure to be here. As mentioned, so I'm the CEO of Trade and Development Bank. We are a regional development bank active primarily across Eastern and Southern Africa. We specialize in trade finance, which is the majority of our business, as well as project and infrastructure finance. We also do syndications and early stage project advisory as well, and a few other areas I may touch on. When it comes to the question about financing development of regional value chains, I'd say our approach to that sector is, quite honestly, not that different from our sort of general approach to financing across our business, which is, looking at what do these entities need to succeed, and I'd say looking at sort of very, practical building blocks. What are the foundational elements that are necessary for success, right? And I think that applies whether you're a business in a capital city or an entity in a rural area. For you to be able to succeed, to supply your customers, you need to be able to produce the quantity at the quality level that's been agreed. You need to be able to deliver that product on time, at the place that's been agreed, at the agreed cost, right? And I think that kind of applies across the board. And so we sort of think about it in terms of providing, I'd say, the hard capital that's necessary to deliver, again, those foundational elements, as well as the soft capital. So by the hard capital, that tends to focus on the infrastructure, right? And as we think about, as you mentioned, industrialization, manufacturing, for us, a sort of a sine qua non, a prerequisite for that is power, right? And so we look at, how can we ensure that our countries have a power grid that's reliable, that's sustainable, that's affordable. And so we're devoting and deploying a meaningful amount of capital towards utility scale power projects. So to give you a couple of examples, in Kenya, we were one of the banks partnered with other commercial banks and development banks to deliver the Lake Turkana wind project, which is the largest wind farm on the continent. We're working with other commercial banks in Zimbabwe, supporting ZPC on the refurbishment of some of their thermal plants. We're partnering with the African Development Bank, together with the governments of Zambia and Zimbabwe, on the Batoka Gorge project, which is a massive over $4 billion power project, right? So delivering the power that's necessary for businesses to succeed. But we're also active on the other end of the scale, which is mini-grid and off-grid projects, because we realized for utility-scale projects, these are complex projects, it takes some time to deliver them, and looking at mini-grids, off-grids can be ways to deliver power faster to rural areas. And so we're partnering in that instance with the World Bank, and we've delivered capital to a few projects already across East Africa. But then really focusing now on the trade, we look at sort of what's the trade enabling infrastructure that we can support. So we look at sort of key trade corridors and what's necessary for those corridors to be efficient. So you could looking at ports, for example, and we've provided financing to a number of ports, for example, to expand their capacity to do ship-to-shore movements more efficiently. We've partnered with Trademark East Africa. We're working together on a number of one-stop border posts to really make that efficient in terms of moving goods across borders. Looking at, again, the transportation, we partnered with a number of commercial banks, again, and DFIs, for example, in Tanzania, to provide capital for the first couple of phases of the standard gauge railway project, which is initially going from Dar es Salaam to more internal Tanzania, but eventually this will be a rail link that'll go all the way to Burundi. So Burundi coffee farmers will be able to have now a more efficient way to bring their goods to the port in Dar es Salaam. And there's a number of other key road and rail networks that we're looking to support. So that's sort of the hard capital side. And then I'd sort of mention then on the soft capital side, where it's really about sort of the big picture, the environment, right? Is the environment conducive to businesses, for businesses to succeed? And this really kind of involves more of the advocacy, more of the training, more of the capacity building. Because frankly, just a lot more dialogue, right? And so one of the areas that we've been active here is, in East Africa, working with the European Investment Bank. For the last couple of years, we've hosted the East African Microfinance, SME, and MSME Banking Forum, where we're bringing together institutions from across the region, private sector and public sector, for 2 to 3 days of training, capacity building, dialogue. We run a sort of Shark Tank style competition for SMEs to pitch for funding. And these are primarily SMEs developed by our youth, primarily women-owned SMEs. So really giving them that exposure and that ability to showcase their capabilities. And this year we're looking to expand that to Southern Africa. Technology, that's an area that we're quite passionate about as an institution, looking at how could we leverage technology to enable us to serve our clients better, faster, cheaper, utilizing, for example, blockchain in part of our trade finance processes, which is a very paper-heavy industry. But now looking at how could we support the wider ecosystem, right, to digitalize. And one of the areas we've worked recently is with the World Trade Board. We've supported a roadmap, and Afrexim has been with us on this journey as well. So we've put out this roadmap about financial inclusion in trade and targeting that to MSMEs. And so that roadmap is again open, released about a couple of weeks ago, and I'd encourage the audience to download it. So that's kind of like the hard and the soft capital, and I think there's many other examples I'd go into, but in the interest of time, I'll probably pause there. But I think the one thing I would stress is, I think a common theme in my comments was partnerships, right? To be successful, we need to work together. And I think that's certainly true for us as an institution, but I think certainly true for AfCFTA as well.
Thank you very much, Michael. And you mentioned collaborating with various institutions and also Afreximbank, and this is right up your alley actually, since you are focused on intra-Africa trade. So I want to hear from your side about this, aspect of financing RVCs.
Well, thank you, and we're glad to be here and participating in this very important conversation. But as you could hear from Kwame Nkrumah, this conversation has been going on for over 60 years. And Afreximbank, we decided that we had to do something about some of these things and be deliberate about it. If you look at the numbers, I think regional value chain participation is about 2.7% as a continent of our value chains. And then on a global level, it's probably, maybe Acha can tell us better, 1 to 2%. We've always been on the margins, so we decided at the bank that we had to be deliberate about it. It can't just be happenstance. It can't just be a coincidence, especially if we're going to support the implementation of the AfCFTA. So over the past 2 strategic plans, Afreximbank rolls out strategic plans every 5 years. We decided to focus on implementation of growing intra-African trade. But closely linked to growing intra-African trade is industrialization. One of the problems of growing intra-African trade is that we don't have enough to sell to each other. We have to industrialize. We have to expand our value chains. And so the second pillar of our strategy is industrialization and export development. The third is trade finance leadership, because we also have to have finance to provide to players, economic players on the continent. So one of the flagships of our industrialization strategies and to enable us to expand value chains is promoting industrial parks. So working with partners, I like the fact that Michael talked about partnerships. We use all the instruments that we have. For instance, Afreximbank has a fund, which is an impact equity fund, to invest and partner with developers in building industrial parks. The reason we decided to do that was because at a time, a couple of years ago, countries like China were delocalizing. Even some countries in Africa, like Mauritius, were delocalizing and moving up advancing in manufacturing. It then meant that we needed to position ourselves to be a hub for industrialization. And then we decided to, look critically at industrial parks, also bearing in mind the infrastructure deficits, so that investors, businesses, SMEs can come in and plug and play. So our solution was within the fence and outside the fence. We brought in our equity impact fund to invest where we are promoters of industrial parks. Yeah. But we also brought debt to finance businesses there, to finance infrastructure within the fence, within the parks, but also to finance businesses within the park. We also provide, if I step back a bit, the 3 pillars we have under our industrialization strategy is what we call catalyze, produce, and trade. Under the catalyzation is the industrial park intervention, especially export processing zones. And then what that means is that we will not only catalyze hard infrastructure, but we'll also catalyze soft infrastructure to ensure that our countries have the industrial positioning policies, the right policies, to be able to drive, these value chains. So we provide a menu of products using the instruments that we have debt, we have equity, guarantees. We even support investment promotion activities into those parks. Recently, some of those parks are, for instance, in Gabon. Gabon Special Economic Zone, we worked with partners like AFC, in developing the infrastructure, even the ports, the ports of the Gabon Special Economic Zone, such that today, the Gabon is no longer exporting logs of wood. Yeah. They've gone up the value chain to even, you go into the Gabon Special Economic Zone and you see factories of furniture. In the same way, in Benin, Republic of Benin Republic, we're also supporting that industrial park, and some in textiles, which is the flagship of that park, is in the cotton value chain. Same with Togo. even Chad, where we're looking at doing value chain in beef. In beef processing, Mauritania, Malawi, and the list goes on and as to what we're trying to do to support that expansion of value chains and industrialize Africa. But I'll leave it there for now, because there are other things that we're doing, because even within the context of the industrial parks, we're also supporting standards and harmonization, because that's also a critical inhibitor to exports of and expanding value chains and things we're doing in the harmonization of standards, working with the Standards Organization, or African Regional Standards Organization, as well as other partners like the AU. We're also supporting a big, I'd like to also talk about the auto sector, where we are, because that's also important to the AfCFTA, auto, textiles, agribusiness, among others, where we supported the auto pact, working with AAAM, the African Association of Auto Manufacturers, to have a continental policy for the auto sector, aside from the fact that we're also supporting value chain approach to the auto sector, because that's what you have to have. A vehicle has 30,000 parts. It's almost like distributing those parts to different countries as part of the value chain expansion. We're also supporting with financing, as well as we're doing with industrial policies around the auto sector. I'll leave it there till probably when you come around again.
Thank you, Annie. It's interesting that you mentioned all the different ways in which Afreximbank does support regional value chains. There's so many sectors, if you think about it, that need to be developed and where industrialization is needed. I'm going now to move on to Lilium Capital, a bank that is primarily implanted in Western and Central Africa. Our panelist is from Ivory Coast and Burkina Faso, and he is much more comfortable in French, so I'm going to give him the opportunity to speak French, to give his answers in French. In the audience, you know that you have a translating device, probably on your seat somewhere, so feel free to use it to make sure that you keep up with what Stéphane Ouedraogo is saying. Alors, on va parler donc de Lilium Capital et donc de votre approche dans ce qui est donc financement des chaînes de valeur régionales. Et comment est-ce que vous abordez le problème en particulier?
Merci beaucoup, Anané. Merci beaucoup à nos différents panélistes. Ça me fait plaisir d'être là et de parler en français surtout, parce que depuis qu'on est là depuis 3 jours, pas beaucoup de personnes ont parlé en français, à part le président Issoufou qui a fait son discours en français. Donc c'est toujours important de parler français pour que les gens aussi voient que l'Afrique, n'est pas seulement anglophone. Alors, au niveau de Lilium Capital, nous apportons plusieurs solutions, parce que la bonne partie sur la partie du financement, c'est qu'il n'y a pas de compétition dans le financement. Tout le monde, il y a tellement de choses à faire qu'il faut participer au financement d'une manière intelligente. Donc la première partie que nous on fait, c'est d'apporter des conseils, comme mon collègue le disait tout à l'heure, d'apporter des conseils aux États. Parce que la partie la plus, pour moi, le socle de tout ce qui est chaîne de valeur commence par les infrastructures. Nous, au niveau de Lilium Capital, on apporte des solutions, des solutions qui permettent aux États de mobiliser les financements nécessaires pour leur permettre de pouvoir développer les routes, de pouvoir développer l'eau, l'énergie. Et ça, c'est le fondement même de tout ce qui est chaîne de valeur. Ensuite, en tant que fonds d'investissement, nous investissons directement dans ces différentes industries-là. Parce que l'Afrique est basée, les piliers du développement africain sont basés sur d'abord les industries extractives, qui sont une réalité. Pour certaines grandes puissances, ils vont nous parler de certaines notions que nous, on ne comprend pas aujourd'hui, parce que c'est le socle de nos économies, donc il faut investir dedans. Donc tout ce qui est minier, tout ce qui est énergie. Ensuite, la santé. C'est paradoxal, mais on est fonds d'investissement, mais on investit dans la santé parce que pour nous, la santé est primordiale dans le fondement de la chaîne de valeur, comme je le disais tout à l'heure. Nous investissons dans tout ce qui est industrie. Comme la vice-présidente Canorio le disait, l'industrie, si on n'investit pas comment on va faire pour se développer, pour transformer. Nous investissons dans tout ce qui est immobilier. Donc, en tant que fonds d'investissement, nous apportons une partie capitalistique. Alors, on a vu que tout ça ne suffisait pas. Donc nous avons investi massivement dans le domaine bancaire en créant Vista Bank. Nous sommes présents dans 4 pays africains, mais nous comptons l'être dans 14 pays à la fin de l'année, j'espère. Pourquoi? Parce que nous comptons apporter des solutions à nos entreprises locales pour se développer. Nous travaillons étroitement avec Afreximbank sur le Inter-Africa Trade aujourd'hui. Nous essayons d'apporter toutes ces solutions localement. Alors, au niveau des banques locales, on a intervenu sur un certain nombre de sujets. Je reviens sur la santé, parce que pas beaucoup de personnes parlent de santé. Mais quand on parle spécifiquement de financement des PME dans la santé, alors on a développé pour nous le leasing médical. Le leasing médical, ça apporte 2 choses. La première chose, ça apporte la capacité à des entreprises locales de financer une activité spécifique dans la santé, donc des équipements, etc. La deuxième chose, ça apporte la formation, parce que beaucoup de gens l'ignorent, mais quand on parle de leasing, on parle derrière de capacity building, de notions locales, de personnes qui apprennent à maintenir les équipements, qui apprennent à comprendre les équipements, etc. Donc ça crée de l'emploi et de la formation pour les jeunes, etc. Donc au niveau de notre groupe bancaire, on essaie à la fois de récupérer, de ramener des solutions africaines, internationales, localement, mais on essaie d'avoir des solutions spécifiques pour les différents entrepreneurs dans les SMEs. Un autre exemple encore au niveau du financement des chaînes de valeur locales, la chaîne de valeur minière par exemple. Il ne faut pas qu'on se cache, tous nos pays sont miniers. En Afrique, nous avons les 2 sources d'économie, comme je disais tout à l'heure, sont basées sur l'agriculture et les mines. Donc, il faut que si on veut avoir de l'influence, il faut pouvoir aller toucher ce qui nous lie, pas ce que les autres pensent qui n'est pas nécessaire pour nous. Donc, au niveau de la chaîne de valeur minière, nous allons commencer, nous finançons beaucoup d'entreprises locales pour leur permettre de pouvoir développer des activités à l'intérieur même des mines. Donc, en Guinée, nous finançons que ce soit l'équipement, mais nous finançons aussi toute la chaîne de valeur à l'intérieur des mines. Dans les mines, ça commence par la nourriture, donc le local, parce que beaucoup de gens ne savent pas, mais 80%, quand on regarde les statistiques, quand vous prenez une enclave minière, même au niveau de la nourriture, c'est importé. Donc, il faut avoir de l'impact, il faut pouvoir financer des gens qui ont la capacité de pouvoir fournir des poulets, même ne serait-ce que le poulet, à ces différentes mines-là. Donc, nous participons à ces différentes chaînes de valeur, que ce soit en équipement pour les entreprises, mais même au niveau de la nourriture. Alors, on s'est rendu compte encore que ça ne suffisait pas, parce que ça touche que 20% des Africains. L'inclusion financière est une réalité. 20% des Africains, c'est-à-dire que si on prenait, pas dans cette salle, mais si on prenait statistiquement, 2 Africains sur 10 ont un compte bancaire. Donc ça inclut les entreprises. Donc ça ne suffit pas. Donc concrètement, si on veut avoir de l'impact, il faut aller toucher les 80% qui restent. Alors les 80%, on a développé une application qui s'appelle Simba, qui est une banque digitale qu'on développe sur toute l'Afrique. On a créé aux États-Unis il y a quelques années, il y a 5 ans maintenant, et qu'on veut développer sur l'Afrique. Parce qu'on s'est rendu compte que la bonne partie des Africains, 120%, c'est-à-dire qu'un Africain a un téléphone portable. Donc aujourd'hui, la digitalisation, qui fait partie des éléments clés que la ZLECAP développe, est nécessaire pour créer de l'inclusion financière. Donc, pourquoi on a créé cette application? Pour apporter une plateforme aux personnes qui ne sont pas bancarisées. Parce que tout simplement, il faut pouvoir leur permettre de pouvoir avoir accès au financement. Pas avoir seulement le wallet que tout le monde a à travers les différentes wallet money, je sais pas, les portefeuilles que les sociétés de télécom ont, mais leur donner la capacité de pouvoir se faire financer. Alors, je donne un exemple. Une femme qui vend du poisson fumé. Je pense que tout le monde mange du poisson fumé ici. Mais c'est venu comment? C'est venu du fait que son mari partait le matin très tôt. j'en parlais hier, on parle très tôt, pêcher, qui revenait avec les poissons et qui n'avait pas à stocker, parce qu'il n'a pas d'énergie, parce qu'il n'a pas de frigidaire, parce qu'il n'a rien. Donc les femmes, les valeureuses femmes sont levées, ont trouvé une solution, c'est de le fumer le poisson, pour permettre d'avoir une capacité de stockage de durée un peu plus longue que le poisson frais. Mais nous, au niveau de Lilium, on a fait quoi? Cette application permet au moins à la dame de pouvoir suivre son activité pour que derrière une banque, une microfinance, une mésofinance ou les partenaires internationaux puissent dire « Ah, voici un flux qu'on peut aider à financer ». Donc, pour permettre à cette femme de ne pas seulement fumer le poisson, mais d'avoir du poisson frais, du poisson fumé, de le packager, de le stocker, etc. etc. Donc, au niveau de Lilium, voilà ce qu'on sait faire. On sait apporter des solutions aux Africains par rapport à leurs problématiques locales et qui sont réelles. Voici le premier point.
Loving the example that you gave with fishing and how women came up with solutions to conserve it as long as possible. Women are often the answers, aren't they? I think that there's a through line and a common theme that kept coming up in your three interventions, and it has a lot to do with saying that, of course, we have to finance our VCs, we have to bring money in for businesses to expand, for producers to be able to do what they do, but then this support and this development is much more complex. There needs to be other ways to support regional value chains. And I want to now give you the floor, Nathalie, of the MasterCard Foundation, so you can also talk to us about how exactly the foundation goes about supporting regional value chains.
Thank you, Annan, and good morning. Sorry, it's still morning. Good morning, everybody. I'm going to bring a different perspective. That is the perspective of impact and inclusivity that Stefan touched upon. MasterCard Foundation has a mission, and the mission is to advance learning and promote financial inclusion for more inclusive work. And how does this relate to financing value chain? Is that we are in the implementation of our Young Africa Work strategy, a 10-year strategy that has the ambition to unlock 30 million dignified and fulfilling jobs for young people by 2030. 70% of those jobs for young women. So strong emphasis on young people and young women. But what we've quickly realized through the implementation of the strategy was that first, most of those jobs will be in the agriculture sector, because the real transformation of Africa is through the transformation of agriculture. But secondly, those young people will have, in many cases, to create jobs for themselves. So the focus on entrepreneurship is at the center of our work. But then the next question to that is, how do you promote entrepreneurship for those young people? And we're looking at three areas. The first one is access to finance. The second one is capacity. The third one is around markets. So coming back to access to finance, what we've witnessed over the last 10 years, I would say, on the continent, and I can speak because I don't have any, bankers. At least, Stefan is a banker, but different. On the panel, is that really where there has been most creativity and advancement in terms of financial inclusion, it has been outside of the banking system. It has been through innovation, through the Fintech company, it has been through those different agri-platforms that have the potential to really access last mile and service entrepreneurs. So how can we promote more of this? But more importantly, all those fintechs who don't have the creativity but not the balance sheets, how can we foster partnership within the banking sector and those fintechs to really create innovative solutions? Because really what agriculture needs now are innovative solutions, and not only in terms of direct financial product, but also leasing, insurance, and really all the package that allow an entrepreneur in agriculture to prosper. Still around finance and access to finance, what we've also noticed was that there is a need to leverage local investors, because while the flows of financing coming into the sector are still largely dominated by international players, the ability to understand and accept the risk that present financing a value chain in Africa, taking into consideration the different, the volatility of the environment, can better be assessed by local investors. But they are operating with a number of regulatory constraints. So the foundation is asking itself, how can we support and catalyze this local investment in the sector? Now, coming to capacity, I still remember a conversation that we had with the president of the African Development Bank, Dr. Adeshina, around this point. And he shared with us that his dream was an Africa where young people in agriculture consider themselves as businessmen. And I think until our entrepreneurs in the value chain don't consider themselves as real businessmen in the agriculture sector, we'll not be able to achieve the transformation that we want to see. So being able to support them with the different training and mentoring that is required to become a real businessman and entrepreneurs, but also at the same time capability, the technical expertise and capability that a businessman requires in terms of accounting, in terms of hiring, etc., is also an area where the foundation is focusing. Lastly, to the point around market, and the point that is part of all our conversation today, I'm going to share an analogy and the way we see our role in supporting the entrepreneurs in market to really build a more inclusive market. So imagine a highway, and if you look at an highway, you have big cars and small cars on the highways. And AfCFTA represents this highway. The way we see the role of the foundation is to ensure that the small cars are also able to drive on the highway. Because both are very important. Yes, the big cars are going to pay for the toll fees, but at the same time, the small cars will use the side roads, and be able to reach places where the big car will not be able to reach. So make sure that both are driving in harmony on those highways where we see our role. And we're working with the Secretariat to support the facilitation of trade for those MSME, make sure that they understand the custom regime, it's digestible for them, they're able to access it, making sure that the young women that are crossing the border are safeguarded, and not harassed. But at the same time, market doesn't like small. You know, we all know that market is about aggregation. Market is about size. So how do we make sure that we support them, grouping into cooperative and different form of association, so that they represent a significant market? And last point on market. We also understand that the digital tool is a formidable opportunity to connect buyers and sellers. So how can we support the digital market and different type of technology-based platform for those entrepreneurs to be able to connect? Having said that, we know that there is an ecosystem in which the entrepreneur operates, and it will require many players. And I would say we have a diversity of investors on this panel, but obviously the public sector has a big role to play, but it will require convening all those actors around the table and really always challenging ourselves to think about inclusivity when we think about value chain financing.
Thank you, Nathalie. It's interesting that you're talking about the public sector having, much to say about this. We were unfortunately not able to have Her Excellency, the Minister SMEs Development of South Africa, who couldn't be with us. She would have probably given interesting insights from the public sector point of view, but regardless, we're going to try to make this a conversation that is comprehensive, probably with contributions from the floor. But I want to just touch on what you just mentioned, which is the ecosystem. We often hear when we speak to whether they're producers or entrepreneurs or owners of small businesses, mostly small businesses in Africa, that there is a problem with getting support, that there are shortcomings when it comes to getting finance for their projects, when it comes to growing and scaling. And then we have financial institutions, investors that offer solutions and that come into play and say that they want to help sort of bridge the gap and fill the void. But there's still that discrepancy. And I want to look to you, Ashraf, to maybe try to help us navigate this and understand better what the issue is with the ecosystem as a whole.
Thank you. Thanks, Anan, and a pleasure to be here, and thanks for the invitation. I think financing is one lever, but it clearly is not the only one, right? And my fear in some of these discussions is how do we make sure we don't throw money after the problem with no impact, right? If I look at how much money Nigeria has thrown at the power sector over the last 15 years and, with really no improvement in generation capacity, how do you avoid that? And so as we think about it, we say there are a number of questions that need to be asked. One is, what value chains are we talking about? What value chains need to be financed as a priority? Two is, within those value chains, what are the real bottlenecks to intra-Africa trade? And what are the key unlocks? What financing will be one, but it won't be the only one. Once we know what are the key unlocks, the question is, what are the interdependencies amongst these? And how do we make sure everything is moving forward so that finance as an enabler really helps us get to where we want to go? And I'll give you two examples because we're working with the foundation, with the MasterCard Foundation and also with the Secretariat exactly on this. And we said, look, let's think about first prioritizing the value chain we want to really show progress on, and then we'll work on the others. So we've worked with them to prioritize 4 value chains. One is automotive. 2 is agriculture and agro-processing. 3 is pharmaceuticals and vaccine manufacturing. And 4 is logistics. And I'll just compare and contrast 2 of these, right? If you look at the automotive value chain, today it's about a $21 billion value chain across Africa. About 85% of all the cars in the continent are actually imported from outside of Africa. About 14% of cars are produced in one country and then traded within that country. Mm-hmm. And then about 1% of cars are produced and traded across Africa. So the intra-Africa trade is incredibly low. Yeah. But we do produce cars. We produce cars here in South Africa. We produce cars in Morocco and a few other places. But most of what we produce is exported, be outside of the continent. So there the question is, how do you then, of course, increase production, but then how do you facilitate the intra-Africa trade? Mm-hmm. If you take on the other extreme, vaccine manufacturing, of all the vaccines administered globally every year, 25% are administered in Africa, given the population and the young population on the continent. But of all of that 25% of vaccines, less than 1% is manufactured locally, right? So we manufacture very little in general. Most of the vaccines that actually come from India. Now we saw that with the COVID crisis, right? We needed COVID vaccines, and there were none that were available, and we couldn't even produce because we're not producing anything. And I remember President Kagame always talks about how, he had actually ordered vaccines for the Serum Institute in India. He had paid them $6 million, and then the next day India stopped exports because they wanted the vaccines for the local population. So we're sitting there, having paid the money with no vaccines. So we said, okay, fine, what do we do about it, right? And this is where we took this whole approach of saying, we need to produce more, very clear, but how much more, right? How much of our domestic demand we want to satisfy? Is it 20%? Is it 40%? Is it 60%? Is it 100%? So we ran the analysis, ran the scenarios, and we aligned everybody around a 60% target to say by 2040, we want 60% of all vaccines administered in Africa to come from Africa. But then you have to make sure everybody's supportive. So we, organize, again, this was the AfCFTA, organizing a big sort of summit where all the stakeholders, the financiers were at the table, the international vaccine manufacturers, the big pharmaceutical companies, the regulators, the donors, everybody came together, and the public sector to say, okay, fine, let's align on this aspiration. And at the AU Summit, I think it was 2019, the AU launched the Partnership for African Vaccine Manufacturing, PAVM. Perfect, so that's one thing. But how do you make that happen? So we have to then understand within that, what are these constraints? And we developed this thing called the Framework for Action, which has 8 bold programs. One of the bold programs is financing. Somebody has to finance this, and we need about $30 billion over the next 20, 30 years. And we've worked with Afreximbank, we work with African Bank and a number of others to say, okay, fine, how do you finance it? But they will all say, it's interesting, I'll finance these plans, but I need to make sure there's a demand on the other side. How do I make sure there's demand? So, so the question, how do you aggregate demand? And I know Travels was talking about this yesterday. So thinking through, the pool procurement mechanism, because you want to make sure that, each country on its own is too small. So that's about what Gavi does. Let's pool the demand across all of our countries. And through that, we can also negotiate better prices, but also the manufacturers know that there's a demand on the other side that they need to deliver on. But again, as you think about it, and we're doing some work with Gavi now to say, even if we did it today, because we don't have the scale of, say, in India, will be more expensive, right? So is it right to buy vaccines in Africa if it's more expensive, or should we go to the cheaper source? Some people actually believe it shouldn't be that. It should be competitive, and you should go to the cheaper source, just go to India. We're saying, okay, fine. If we're more expensive, what is that differential in price, and who subsidizes that, but also for how long, right? Because you can't be uncompetitive for too long, right? So that's a bit of the analysis we're doing now to say who's going to close that gap, but how long do you close that gap while waiting for our manufacturers to become globally competitive, because that's what we want. Because if you don't have that, then the financiers around the table here will put money in a plant, the plant will start producing, there'll be nobody on the other side to buy, they'll lose the money, it'll be uncompetitive. But you also need the regulators. Who's going to regulate this? How do you make sure the quality of this vaccine coming out of this plant? So how do you build the capacity of the national regulatory agencies? You need a tech transfer if you're going to produce these vaccines. Where is the technology going to come from? And how do you make sure we get that on the continent? You need the talent, right? Where's the talent going to come from to man these plants, to actually produce the engineers who are going to work in these plants? How do you build that talent at scale for the continent? So you need to put all that together, and then you need to then make sure this program is well managed and orchestrated and tracked and monitored. And so Africa CDC now has a secretariat that's driving it, and we're supporting them, but it's across all of these dimensions. Each one on its own is never going to get us there. All of those have to come together. And so I just want to say, as we think about the regional value chains, that's just one example on vaccines. How do you replicate that for automotive? And the challenges will be different. How do you replicate that for fish? How do you replicate that for meat? How do you replicate that for pharmaceuticals? And that's what it's going to take for us to really move the needle and come here, call it next year, the year after, to start to really see the movement on the actual value of inter-Africa trade versus just having a conversation about it. Thank you.
Thank you, Ashaleke, senior partner at McKinsey & Company. I just have to remind it to everyone, for kind of giving us this overview of how much more there is to be done when it comes to developing value chains in different sectors. So I think we've laid the foundation for how we should be moving forward, what products are available already to who exactly, and what kind of support is also being offered by the different financial institutions, but also investors and stakeholders when it comes to regional value chains. But I want to hear from the audience, and hopefully we will have some challenging questions for our panelists when it comes to this subject. And as you may know, there are 2 stances with microphones. So if you have reactions, inputs that you want to contribute for now, please feel free to step ahead, or maybe just first raise your hand, and we will start just exchanging with the panelists, and then I'll get back to asking a couple more questions before we wrap up. Anyone? Okay, we have a gentleman there behind in the back. If you could please step forward. Maybe introduce yourself. Thank you.
Thank you very much. My name is Tonderai Leonel Njowera. proud African at heart, a civil and water engineer with interests in infrastructure investments, and amazing panel. Thank you for bringing this forward. My questions are really around innovative finance, particularly for the last mile delivery, especially in SMMEs and startups. And amazing panel for this, amazing presentation already. What is the current status in terms of innovative finance right across these value chains, especially towards SMMEs within agriculture, within transportation, I mean, just right across all of the value chains that have been made? And secondly, how is the conversation around climate adaptation finance? I think I've read that once within the whole conference. Maybe I wasn't listening, but as Africa, climate adaptation is quite important. And so what is the conversation around that? Thank you.
Do you have specific panelists you want to ask this question to, or can they just take it away?
Round about innovative finance, I think it would go to Natalie, but everything else can be taken away. Thank you.
Thank you. So we'll start with this question, and then we'll get back to the audience in a bit. Natalie, if you want to pick up on the first one.
So I will try to answer. I think there is much more innovation needed in the space. As I mentioned, in the ag space, what I've seen emerging, we've seen emerging was those platforms where a farmer can access at the same time information around price, market, but can also access loan, can also access insurance product. But when you think about the entire value chain and where you see the interest of most young people and MSME in terms of off-farm and on-farm activity, you really need to see this level of innovation at also secondary level and tertiary level in the agriculture value chain. So much more is needed. At the same time, what I've said is that we have seen more innovation that was really led by technology. Those innovations lacked the balance sheet and the liquidity to really be able to sell their product at scale, to make their product available at scale. So the opportunity is really for the banks to work in partnership with those type of technology-driven innovation in the space to allow financing and to promote financing at scale through the value chain. But much more is needed, definitively.
The gentleman had another question on climate adaptability. And I don't know if someone wants to maybe try to give an answer, a response to his second question. Yeah, go ahead, please.
Before I answer, I want to draw Natalie's attention to that banks also innovate. There was an assumption that innovation happens outside the banking sector. It looks like you haven't heard of a bank called Afreximbank.
Oh, wow. You're right. Should defend it.
I'm sure you heard of Africa Trade Gateway, which is an ecosystem of digital solutions to support intra-African trade. The Pan-African Payment and Settlement System is an innovative program, to ensure that we deal with informality of trade, multiplicity of African currencies, and to ensure that Africans trade in local currencies and reduce the foreign currency cost of trade. You may also have heard about MANSA, the KYC repository that allows KYC, the challenge of compliance costs, to be limited, by the fact that we can provide KYC information on the continent through a repository of information. That is also a cooperative arrangement that allows other banks to pull in, because a lot of banks are leaving the continent, international banks, because of the cost of compliance, right? You may also have heard about Africa Trade Exchange, which is an e-commerce platform that allows for, and it's, all these are collaboration, perhaps the collaboration with, you may have seen it in the presentation by the AfCFTA Secretariat with the AfCFTA Secretariat. We also have, I was just talking about ATEX, which is a solution, Afreximbank, UNECA, the AfCFTA Secretariat as well, to support intra-African trade, and even more recently, fertilizer, and food exchange in the context of the Ukraine crisis. Intrastate transit guarantee system that is technology-enabled, which we are piloting in Comesa, to ensure that trucks moving across land-linked countries and other countries without having to post customs bonds at every border. That's also innovation, that's impact. Our ETC, Export Trading Companies Initiative, would allow ETC, because that's what succeeded in countries in regions like Asia, where SMEs or MSMEs can now become indirect exporters, in the value chain, such that the ETC initiative allows, now we're working on a regulatory framework with the African Continental Free Trade Area Secretariat to ensure that ETCs can now finance or pre-finance those SMEs that are indirect exporters in the value chain, because it will be very ambitious to think that MSMEs can be direct exporters. In the context of the cross-border trade as we know it today, and I think Acha talked about the problems of intra-African trade not just being finance. There are others, and so I wanted to draw her attention to the fact that there are banks that innovate, and also to talk direct about climate adaptation. Yeah, there are things that are going on. We are working on, with UNECA again, on the battery precursor program, which is a climate adaptation program, supporting an industrial park arrangement between Zambia, and DRC. That's to promote sustainable auto industries through that an electric vehicle industry. Even with the government of Kenya, we're also looking at a project on water irrigation to support the farmers. I just want to leave that those thoughts there that is happening. I don't want to go into things that we are doing at Afreximbank, effective financing around factoring and forfeiting that ensures that those businesses that can't walk into banks, because we know the SMEs would have the challenge of perceived issues around creditworthiness, and that banks will decline their transactions. Yeah. So it was on that account that to support SMEs particularly, that we introduced a factoring initiative in Afreximbank. Thank you.
Thank you very much. Nathalie?
No, thank you, Kanayo, and this is very encouraging, but you would agree with me that Afreximbank is not the typical commercial bank on the continent. That's what I was really, and
I know Stefan will react. Stefan will react to that. And I even forgot to mention about the last mile that Stefan talked about. While I was trying to adjust my system, I know he mentioned Afreximbank. And the reason we support banks like Vista Bank Group is because we want them to deal with the last mile. And then the 4 banks we talked about in the region, as we developed our banking acquisition strategy, as international banks are leaving the continent, we're trying to place them in African hands because the Africans have nowhere to live to. And that's how come those, and because we know that their strategy is SME development and SME, we also have our own SME development program, but it's to support the SMEs. And that's why we try to support them and, to make sure that those assets, as BNP withdrew, we are placed in African hands. Thank you very much.
Thank you. We're going to go back to the audience. Ooh, there's more hands now. I think the lady over there in the middle was, young woman. We're going to try, and then we're going to go back to you. Sorry, sir, just after her. Thank you. If you could please introduce yourself, and if you have a specific panelist you want to speak to, just specify. Thank you.
Can you hear me? All right, my name is the Startup Bay. My birth names were lost in the revolution for supporting startups. I'm Ropafadzo Sandra Shoko. I'm a lawyer by profession, and I work with startups from Zimbabwe primarily, and also advise startups in Cameroon. And I represent the young people that you speak of. I even represent younger people than me in high schools and primary schools and tertiary institutions, because those are the startups I work with. And I think one thing that everyone here forgets is innovation or innovating in Africa is sort of a luxury, you know. I'm in university right now, and I can afford to write a test and fail, and then know that I have a final exam coming up. But when you're innovating as a young person, especially the startups I work with, for you to just do a business or have an idea and try it out, you are sacrificing bread and butter money. So the question and the session I have is to say, what sort of platforms or services can we get for angel funding or risk-free capital? Risk-free in the terms of, I, as a young person, can afford to ideate, innovate, and make things happen. That innovation, you all keep speaking of, what platforms can be provided for that? Because that's a luxury. Like, I have so many young people, so many startups that have had brilliant ideas, but they cannot afford to start, fail, and learn because platforms like that do not exist. Unlike in the Western countries, because I've also done studies there, and I've seen that they've got that platform, and that's why they keep coming with different innovations, because they have that luxury. So that's an session I put to you, and probably even to the government representatives here present as the startup bay.
Thank you so much. Does someone want to take that question? Okay, so it's going to you apparently, Nathalie. Non, ok, all right, Stéphane.
Non, mais c'est toujours bien de voir que la jeunesse a une volonté féroce de pouvoir créer de l'innovation. Mais l'innovation aussi on ne doit pas confondre deux choses. On ne va pas créer, recréer des choses. Quelquefois, il faut juste copier et puis coller. Parce que c'est ça aussi l'innovation aussi en Afrique. Parce que nos besoins sont quelquefois primaires. Alors nous, au niveau de Lilium Capital, on est membre de la Chambre de commerce américaine pour l'Afrique. Je pense que le représentant directeur général est ici dans cette salle. Nous avons pris l'engagement d'investir 100 millions de dollars sur les 5 prochaines années sur les startups, les jeunes et les femmes en Afrique. C'est un commitment. Donc, voici une solution pratique sur laquelle vous pouvez venir et on va trouver la solution.
Une petite question pour moi, pour que ce soit plus précis. Comment est-ce qu'on accède à ce gros portefeuille que vous avez?
Alors, encore une fois, nous avons deux manières de toucher les sociétés comme les différentes startups. Première chose, c'est de venir en tant qu'investisseur. Deuxième chose, c'est de venir en tant que banquier, en apportant la solution financière. Et la troisième chose aussi, c'est de faire des dons. Donc, nous intervenons sur ces 3 points-là. Donc, les 100 millions de dollars de commitment que nous avons pris pour les 5 dernières années, on l'a annoncé publiquement lors du voyage de la vice-présidente des États-Unis en Afrique il y a quelques jours. Donc, c'est une réalité et je pourrais prendre contact avec la jeune dame tout à l'heure que je ne vois plus dans la salle pour plus en discuter.
So for the young lady in the audience, Stéphane will get in touch with you so you guys can talk things out. Nathalie.
So, we are always amazed with the level of creativity, innovation, but more importantly, solve local problems that young people have. When you put them in a room and you give them the opportunity to pilot, fail, restart, and start again. And the way we've tried to really make sure we always keep this pulse and promote young people innovation at the foundation, we set ourselves our target. We have a target that says that 20% of our programs will be implemented by young people, will be youth-led. And we targeted something a few weeks ago in Kenya where we tell to the young people, come with your idea. And we're not going to ask you to design a long program with 3 pages of, account, history, etc., where you certainly won't qualify. We're going to meet you where you are. Come with one sheet, a concept note of what you're trying to achieve. And during 1 day or 2 days, you'll be able to meet with staff from the foundation to finalize your idea. And if the idea is strong enough, then you will access grants. Because you need grant at this early stage of when you are still testing and you want the space to be able to fail. So please reach out to the foundation. We're looking for creativity. We're looking for working with young people because they have the solutions. They really do.
Thank you, Nathalie. You've heard the call to contact her and contact the MasterCard Foundation. Sir.
Hi, my name is Yofi Grant from the Ghana Investment Promotion Center. My question is a broad but pretty complex question, so, I think it will go to Acha. So we all recognize that capital is key in a lot of the transformations that we want, whether it's innovation or whatever it is. Yet Africa, with all its resources, not less than 40% of the world's remaining resources, a huge population of 1.4 billion, we still command less than 5% of global FDI. Intra-continental investment is less than 5%. Cost of credit and availability of credit to young people and women particularly is high cost and not available. So, and still, I mean, if you have to go outside for finance to Africa, it comes at a premium. When we really, the issue of risk in Africa, it's more of a myth than a reality, because there are businesses in Africa that have been over here for 100 years and making money. So what really is that needling point? Acha, this question goes to you because I remember reading that you did indicate a few years ago that the number of African companies that generate a revenue over $1 billion a year are less than maybe 480, and many of them are multinationals. So what is that sticky point that we can't break through? Is it because we are all borrowing in dollars and pounds and foreign currency, and which command a premium? And then secondly, what do you think the impact of the diaspora will be in resolving this complex situation? And what do you think regulation will do to demystify this high risk thing in Africa?
A very complex question, Yofi. Thanks for sending it to me. But I think part of our issue is exactly that. We're relying too much on foreign players to support us, right? I think we did some work as McKinsey, just looking at how much more we can generate internally from our resources. I put out this report talking about the 100 billion public finance opportunity. Just look at the revenues that we generate internally, right? Look at Ghana, right? What is tax to revenue in Ghana? I think it's less than 15%. Nigeria tax to GDP or tax to GDP is about 7%. In emerging markets on average it's 30%, right? So I think part of it is how do we generate more revenues ourselves as countries to invest in these projects, right? And two is then the little revenue we generate, we use most of it to pay off the debt, right? So I always say, as Africa, I say we don't have a debt problem, right? If you look at debt to GDP, it's typically 50, 60%. We have a debt servicing problem because a lot of our revenue we use to then go pay off debt versus using it to invest in these projects, to invest in social infrastructure that we need. And so part of it for me, a lot of it is looking internally. And of course, it's important to rely on our friends to support us, but let's try to figure out ourselves, how can we generate more revenues in our country? And it's a country by country basis. And how do we then figure out what investments, who we want to attract to invest in our country, right? And I always say, investors, they don't invest in countries per se, they invest in projects, right? But they have to believe that that project, we have bankers here, that project is going to provide them a return on the investment in a context where it's a globally competitive world, right? If they don't set up this call center in Ouaga, they could go set it up in Casablanca, right? Or they could go set it up somewhere else. So it's very competitive, and that's what some of our governments need to understand. And so for me, I'll look internally and try to understand what we can do before we look externally to what our friends around the world can help us with. What can we do to make a difference? And that's also where the diaspora comes in, right? How can we rely more on our diasporans but provide them with opportunity? They all want to give back, right? They're all around the world. They're missing the continent. For whatever reasons they're not here, but love to give back. But do we have the right instruments, right? These diaspora buttons or things like that to allow the remittances, to allow them to give back, and then once we receive that money, how do we put it to good use? So again, for me, it all starts with us and recognizing that there's a ton of resources that we have on the continent, and we need to put it to better use for our people.
Thank you very much, Ashaleke. Yes, we'll get back to you in a minute.
Sorry, and I don't want to dominate the conversation, but also to say that the AfCFTA just dealt with the protocol on investments that I think should help. There's also the initiative around the Pan-African Trade and Investment. Emily is there. Of course, he's the expert investment agency as well. These are all instruments to help promote Africa. What we call it an Afreximbank is because we've also done a study. We have a sabbatical program, and the inaugural one dealt on what we call the Africa Direct Investments. One of those studies we are going to launch in the course of this year as we ourselves mark our 30th anniversary as a bank is Africa Direct Investment. But what I do find is, again, it's not just really about capital, it's also about information. Lack of access to trade, market, and investment information. We have to make information that people know where to go and invest and what opportunities exist. And of course, there's also the place for governments, ease of doing business and stuff like that. But when I started my conversation, I started with industrial parks. The reason I did also do that is because I know that in some of those parks, and there's also a protocol around that, is the fact that sometimes you find yourself having a single window where businesses can come in and invest, without the rigors, of bureaucracies around the structures of the country. So lack of access is critical. People don't know where to get information. And there's also a legacy of colonial inheritance, for a want of a better word, is to see where are the opportunities. And one of the things that we have done also is introduce, talking about digital solutions, is a trader club, which is trade information and trade regulatory information. Information is critical for investments to move across borders. And of course, we also have the Inter-African Trade Fair. The third edition is happening in Cairo this year. And it's also a platform where investments can be exchanged, as we've seen it. We have an Intra-African Champions Program. And that's for businesses that have the muscle, who are looking for opportunities across the world, where we support them to see that they can invest in. And we've seen a lot of them moving across borders, as in the financial services sector, as I just mentioned. Thank you.
Thank you very much.
Anand?
Yeah.
So if we just
yes.
add on
we'll
really quickly,
yeah, go ahead.
Just picking up from Asha, I think it's about making African capital work for Africa, right? To your point that we need to look internally and support our institutions before we can be able to attract foreign institutions and not to be reliant on foreign institutions or foreign capital, right? So just real quickly, one of the things that we did at TDB a number of years ago was to introduce a new class of stock in our risk capital, specifically targeted towards African institutional investors. So African pension funds, African insurance companies, so they're able to now invest in our capital. As a bank, we can leverage that capital 3 to 4 times, and it's more capital that we can then deploy into projects across our region, because ultimately addressing the question that there isn't enough capital, right, that we can attract across our region. And then picking up on another one of Asha's points around the foreign currency problem, right? So then it's looking at how can we develop our local African capital markets, how can we bring these pension funds, insurance companies, and structure transactions where they can invest in an infrastructure project, for example, but in local currency that de-risks the project, that creates more opportunities for them to invest in locally, and ultimately generates on a sustainable basis our capital markets and helps our capital develop our countries.
Thank you very much. So we're almost done with time. I'm just going to give the opportunity to the lady in green, please, to come forward, ask a quick question, and then we're going to move on very quickly.
Thank you very much for giving me this opportunity. I'm Amelia Chambade from Uganda, Senior Presidential Advisor to the President. I always enjoy these narratives and conversations by the financial institutions. We're talking about fighting for Africa. I advocate for a woman who has never had any education, the vulnerable woman, a woman who wants to improve on herself to support her family. I've listened to all these conversations. You're all talking about development investments, and then you just mentioned SMEs. But you have to look at the micro, small. What affirmative action do you have for the ordinary person? Because if we are saying we're working for Africa, that's great. But the women, the vulnerable groups, they cannot access you.
I'm sorry,
Do you have any
I'm just going to have
action?
for you to just wrap it up. Ask a question, please.
So much. And I wait for your answer. Thank you so much.
So very quickly, who wants to take that answer on?
Sure.
Very briefly, please, and then
Just
we'll
really quickly, thank you, my sister from Uganda. Just to give you a very specific example. Again, as a wholesale institution, we are separated somewhat. There is a gap, but we have supported an institution in Burundi, WISE, which is a female-owned and managed bank and MFI, which specifically targets female entrepreneurs in Burundi across a number of sectors. So MSMEs and micro enterprises in Burundi. Working with WISE, we've provided not only capacity building to upskill their ability to evaluate and appraise their opportunities, but we've also provided them funding. So directly increasing their capacity and their availability to deliver capital to the exact sort of entrepreneurs that you mentioned.
Stefan?
Thank you. I want to give you an example now because I talked about the fish before, but I want to speak specifically for Uganda. I was in Uganda two weeks ago. We are going to finance a woman who actually built a small resort, not a resort, but a small hotel in Sese Island. And now she needs to scale up and she needs to develop. And I went there and I saw what she did. It was amazing. For me, it was the first time to go to Uganda, to go to Lake Victoria. I was amazed. I'm from West Africa, and going there, for me, it was incredible. And we are going to finance her to help her to promote the resort and to promote tourism in Uganda. So it's specific. We thinking about not only the big company, but we're thinking about individual entrepreneurs. And this is a typical example in your country, in a specific region, Sese Island.
And we're going to end with you, very briefly, if you will, Marianne.
And just to respond to the lady in green is that I don't think we can afford to paint the entire walls with one brush. You know, we financed an industrial concern in East Africa, you know, in the cashew value chain. In the one factory that we financed, because they get jobs as well. We're not necessarily talking about financing them and their business. It's the financing ventures that give them the capacity to get jobs as well. And the whole conversation around industrialization is employment. Across where women will benefit, young people will benefit when they graduate as well. That cashew processing factory has at least 1,000 women. They didn't have to submit their CVs. Thank you.
Thank you very much. Thank you to our panelists for this brilliant conversation. I know there's so much more to be said, and I think that we can continue having these conversations outside of this room. So, to all of you who probably wanted to bring some input or even ask more questions to our panelists, you'll have the opportunity. Some of them are probably going to hang around for a bit. Thank you very much for being with me and for, guiding us through this financing for AfCFTA for RVCs. And now I'm going to give the floor to Mark Edo, who's been giving me the eye for the last 20 minutes, who's going to be in conversation with Walid Hareb Al-Falahi, CEO of the UAE Trade Center. Thank you so much.
Thank you very much. It was an admiring eye, actually, that I was giving you. That was a wonderful panel. Family photo, go ahead. Whilst they're taking the family photo, we've got a lot more in the program. We're going to have a one-on-one fireside chat, and then we've got another panel after that. Now, Walid Hareb Al-Falahi is the Chief Executive Officer of the UAE Trade Center, and he's also the CEO of the Dubai consultancy. I have to ask you to exit my stage, please. All of you, you have to please exit my stage. Thank you. I love you, but you have to leave me. This is my stage now. Thank you. Okay. I'm going to start again with gusto. It's the third day. I've still got energy. I've still got something left in the tank. I hope you do too. Okay. As I was saying, Walid Hareb Al-Falahi is the Chief Executive Officer of the UAE Trade Center. He's also CEO of the Dubai Consultancy, which he founded in 2005. The Dubai Consultancy focuses on creating high-profile, highly targeted business networks where potential buyers can meet suppliers and their products on common ground. If you ask Walid what his strongest skill is, he'll simply say networking. He's a master at putting people and businesses together, and he has success stories to prove it. He's masterminded several projects in Ghana, in Nigeria, and further afield in Iraq and Saudi Arabia. Please welcome him as he joins the stage. Walid. Okay. This is Walid. I don't know, in the Dubai consultancy, I guess if I came to you and wanted to sort of hire your services, I would pay sort of quite a bit of money, but you're here now, so we're going to get this consultancy for free. So make sure you use it and ask some questions. Okay, let me get straight to it. When I first met you, when I met you back there, one of the first things you said to me is, I'm not really supposed to be here, considering my story, and I found that compelling. Why did you say that?
I thought you would not mention it.
No, you said it.
See, I have to warn everybody, moderators also can be very dangerous these days.
Yes, they are, like loaded guns.
Yeah, I was mentioning to him something, but then, see, basically as a kid in the Gulf, I was into sport. I thought I'm going to be the next Pelé or Maradona, but I think my father realized that there is something more into it. But a lot of times, there is expectation that comes with it, that people don't think that you will finish something. So I was at that period of my life where I barely finished high school, I think 2 grades from failing. I went to the US, and going to a city like San Francisco is full of
distractions.
Too much distraction. And again, it took me almost 6 years of fun, until I received a letter saying that they are canceling my scholarship. It shook me a lot. Why? I come from a family where I'm the eldest. Nobody have finished their education. I was the first in the family to go overseas and study. And it hurt me a lot that I go back to my father and my mother, and I have not finished anything.
You failed, effectively.
Failed. So it hit me hard that I have to go. Actually, it took me 2 years to finish. 6 years to play, 2 years to finish. Which then also coming to back to Dubai in 96, 97, it was the first FDI agency in the world, in my opinion. Why? Because Dubai was a lab, was a lab for a lot of projects that is happening. Trial and error was existing, and for to get I was the one who developed a product called Fortune Hunt for Dubai, how to attract. It's a very detailed model that we built strategically. The best part of it is what? Is the aftercare model. A lot of African countries, they go overboard in trying to attract FDI.
Yeah.
But where is the FDI? Inside the country.
Yeah.
If a lot of these countries focus on developing their local industries and putting money, putting expertise, it will reduce the pressure on FDI.
Yeah, and that's the solution for unlocking African capital.
Exactly. So that's something I want. But back to what I was saying, it's gone through some time. I think everybody go through that period, either in education, in business. You will fail. But take that fail with a bit of comfort, Failure sometimes make you stronger. I failed in too many areas. But, alhamdulillah, with hard work, with network, with mentors, even at age 50, I have people who are mentoring me. So that's who I am.
You talked about investment. It's tremendously difficult in this environment of all this crisis and risk aversion and fear. Sometimes for a small company in Africa to find investment, you're more likely to find a chicken with teeth. It's extremely rare.
My brother, I'm fasting. So.
Yeah. Rates are really unfavorable as well. When you do find the money, it's not concessional by any stretch. It's really expensive for Africans. There are businesses. These are the businesses that are supposed to be the backbone of the AfCFTA. What's your advice in attracting, or your approach to attracting investment to the African continent through, say, the UAE Trade Center?
See, let me explain what is UAE Trade Center. UAE Trade Center, I came to the government. Dubai is like a big supermarket. So I came to the government, I said, I want to develop UAE Trade Center as a market access to UAE product to Africa. The first thing they told me, we don't have money. I said, you guys don't have money? They said, no, we don't have money. I said, okay, I will invest in it. So what I did is I went, I looked at Kenya. Why? And Kenya, and specifically Nairobi, because Nairobi has similar characteristics with Dubai. And there is always, the first thing you look at when you buy or you develop a product is the logistics side of it. So just between Dubai and Nairobi, there is 22 flights per day. Whether it's passenger or cargo. So we looked at Nairobi as an access for us to East Africa. But also we looked at, since Yufi Grant is here, also we looked at Accra as an access to West Africa. So we started in Nairobi, we looked at it, and this is something to share with, always there is an unexpected thing. So I went, we took a showroom almost the size of this And then our friend COVID came. He shut us down for almost 8 months. We have no activities, sitting, doing literally nothing. Then that's where the innovation of COVID and what brought we decided to go online. And we started building a product called Order and Get.
Order and Get.
Order and Get. Building on the capacity. I mean, just looking at some of my Kenyan friends, I used to travel back and forth between Dubai and Nairobi, and I see people carrying bags.
Yeah, suitcases.
Suitcases.
Full of products.
So I started asking them, what do you do? They said, no, we're an SME. We take these products, we go into Dubai, we buy these things. And the amazing thing about African men and women, and I really applaud them, a lot of them, they have second job. You know, especially Kenyan women, I think, there is one in front of me here, they have a second job. Guys, you have to applaud yourself. Africa is not, you know, don't paint it black. Africa, believe me, I go to Kenya, I see the potential in everything I see. Have you guys remembered your avocado? You know, I was laughing. I met an Italian company, and they said, we are one of the leading avocado oil producers. And I'm like, does Italy produce avocado? No. They bring it from Kenya, and they sell it. So we started looking at developing this market access, developing an online portal. But where we were surprised, we developed a B2C platform. But you know what we started getting? People telling us we want 15 tons of rice, we want spare parts, but do I stick to B2C? No, but that's not B2C. Then that's B2B.
Yeah.
So we started looking at it. Then we started getting calls. People, they don't go to the online portal. They call you, you know, we want this, we want this, we want this. And that's why even we came up with the slogan, don't come to Dubai, Dubai will come to you.
Good slogan.
You know, we started looking at the journey. I mean, if any SME here?
I'm sure there are some, yes. There's many of them.
Yeah. See, we started calculating how much it costs to go to Dubai. Ticket?
Yeah.
1,200, 1,000.
Hotel?
Hotel.
Food, transportation.
So we looked at what? We looked at least 2,000 to 2,500.
Yeah.
We called it a credit.
What, that 2,500 was a credit?
It's a credit.
So it's like traveling without moving.
Yeah. So we started what? We started buying stuff for them, putting it, you know, whatever they require, we go, we assure. And also we have the ability to procure even better than some of them because of the knowledge, market knowledge. But then we went also one step further where we said, all these SMEs, we started offering them what? Trade finance. But here is the shock. Any bankers? Bankers?
No, they've all left the room.
They left the room.
Can you go get the bankers and bring them back? We need to bring the money back into the room.
You know what is so shocking? We go and we outsource money. And we outsource it at certain percentage. I will not reveal my percentage, but
it was favorable.
Very favorable.
Well, it's not difficult to be favorable in Africa, though. If you're in Nigeria, it's like 25%.
Yeah.
Ghana, 25%.
No, but listen to this. So we went to source that money, and we got it at single rate. And usually, forgive me, any government, we don't give the money to government. We go, we sign with the government, but then we give the money to banks to make sure that they help you in KYC, they help you in making sure that the money goes, and there is also return, security return for us. But what we shocked that African banks, they want to make a killing from my own money.
Well, you're saying they're greedy.
You know, I'm bringing them the money. You know, we had about $10 million that we were trying to inject in one bank. I will not say where. And we gave them money, and we were shocked that they want to make more money than us. You know? And what they're doing KYC. So I told I told the bank manager, I said, why you guys? They said, we have risk. I said, what risk?
Yeah.
So, and I'm shocked. A country like Kenya is 19%. In Ghana, 25%.
Yeah, Nigeria too.
Cameroon, 35%. Guys, that's not fair. Honestly, the banks, the banks, you guys are there to help economies. You know, you guys are talking about why Africa? Africa need, if there is project, there is work, there is less poverty, there is, everybody benefit. And a lot of it is driven by banks. So I encourage that banks, they need to be realistic in their lending processes. Okay, you need to protect yourself, buy insurance. By the way, banks buy, even the money I'm bringing them, I am buying the insurance, not them. So which means they're getting free money sometimes. So that was also another element that we add value, which is we also source the trade finance. But then what made, in my opinion, is the game changer is the logistics.
Yeah.
Today,
shipping, time and money.
Today we are able to hedge logistics from, for now, it is Dubai to East Africa, but our aim also is West Africa. We are working on that. Also Egypt, from Egypt. You know, Egypt is one of the countries that is very close to my heart. But when you look at the logistic connectivity, it's very weak between Egypt and Africa. Egypt is one of the biggest powerhouse of Africa when it comes to product and services. But if you look at the number of connectivity that exists, but we are starting now to look at leasing some planes. We are even sourcing wide body planes to put at least 1 or 2 planes in the system. But we started now. Now today, I can ship from Dubai to Nairobi to Mombasa for $5 to $6 a kg, which was not even possible. Today, I can ship in 2 to 3 days. And by the way, this $5 is custom duty, door to door. What does it tell you? I make my money. I make my money, and also I let other people make money.
Along the chain.
The challenge is people want to make millions in one go. It doesn't work. You know? So I think that's the final product that we put on the line. But also we are coming up now with new tools such as auctions.
How does that work?
You know, you go online, you can buy now product from Dubai, you can auction it, you buy it, we deliver it for you. Also, we are pulling a lot of stocks, pulling a lot of discounted product. So in the future, you'll see some of these products coming along in our...
Well, we're here at the AfCFTA Business Forum. From your perspective, what do you make of the AfCFTA?
It's a really amazing idea. This idea now being converted into initiatives, more initiative coming through. Guys, you have to support it. If you guys talk, every time I hear we want this, we want this, we want this. You want this, you have to support it. Support it is not talk. I attend so many of these meetings. After people leave the door, there is nothing. And just one simple advice. When you come, bring that much cards or go digital. Like now, I am a stingy guy. I'm not bringing any cards. Okay? Push. You never know who's sitting next to you. You never know. So you come to these events, network. Second, come up with projects. A lot of these events is built on what? On network. Their role is to help you meet. But just out of 1 day to 2 days, now I am discussing 1 or 2 projects with some individuals. Am I better than anybody? No. All of you guys are better than me. You know, this is a great opportunity. So the initiative, we need to support it. It's a very ambitious initiative. If it succeeds, at least it will add 20, 30, 40% benefit to Africa. That's my view.
For those that want to network with him, come and grab your spot at the mic now and ask a question. So you have to stand up and ask the question at the mic as they're coming to the microphones. One very important part of the AfCFTA is trade facilitation. I know most of us know what that is. I'm talking about simplifying, standardizing and harmonizing the procedures and the rules around making the movement of goods between the seller and the buyer smooth, basically.
Yes.
It makes business less costly. It makes it more competitive, right? How do you, what is your thoughts on that? How do you assist companies in that regard?
I mean, I'll come to that, but see, one of the biggest hinders of growth and movement is custom.
Yes.
You get a good custom. See, people think by hacking the rates, flow of business they will earn more. Actually not. This is, I'm a big believer. You know, I'll use an example of Dubai. Today our custom duty is 5%. But the amount of cargo that we are moving is beyond mind-boggling. So a lot of times, these countries are, you know, trying to hold on how much tax they can earn.
Yes.
Also, every country wants to earn separately, you know, and that's one of the biggest challenges that I hope AfCFTA can solve. One single tax that can be applied all over the continent. You know, it's mind-boggling. You go to Kenya, there is a number. You go to Uganda, there is a number. This is within the same line. Huh? It's very challenging, and it affects trade and business.
Okay, I think we've got your first question, the lady there in white. Please identify yourself.
Right, thank you so much. My name is Dr. Janine Uwimananiko, and I represent Africa Private Sector Summit, which is a thing to do tank based in Accra. And our focus is mainly trying to create enabling environment for the Africa Private Sector Summit under the FTCA. So we look at policy element as well as the implementation. So now my question to you is, and what you as an individual, you went to government with an idea, and they said they didn't have money, but you were able to say, I'm coming in, I don't know if you was coming with a heart of private sector, to say I'm coming in and I will invest my money. What sort of environment, enabling environment that allow you to be able to leverage and bring this successful model that you've got? You mentioned a lot of factors that they are not new, the real, in terms of the bank having, you know, and each country wanting to eat their pie. On this precious continent, we do have a lot. And this is the essence of this conference. But the issue is, after this door, what will happen? And that's what we're talking about. The private sector is the backbone. The Africa private sector is the backbone. But we need as well a legal framework that will hold government accountable, but hold as well the private sector accountable in these dealings. So from Dubai perspective, we are learning what was there and what will tell us is a bullet magic to allow the private sector actually to bring money. It wasn't not in your pocket, but to government and the whole population in Dubai, but also as South Africa. I'm from East Africa, by the way. I'm from Rwanda. Thank you.
Thank you very much.
Great question. So basically, what was the soil like when you planted those seeds?
See, nobody will give it to you easy. Government will not give it to you easy. UAE Trade Center is a private-public partnership. They give you the umbrella. government will give you the umbrella. Don't expect them to put money with you. If you put them, they will even sometimes, if they put money, they will chain you. That's my belief. But if you have an idea that can show investors, can show customers that there is an ROI. See, UAE Trade Center was built through companies that we give them market access, and then we can provide them with opportunity to make money. Once we told them this, we showed them this, they started putting money. So in actual reality, it's best money, other people money. You know, we use that philosophy.
Yes.
So we started giving people value. Once we gave them value, they started investing with us. A lot of times people want people to put money before, then they use it. No, show them the value, show them the benefit, they will put money with you. So that's how we tackled it.
Okay. Next question is from the best looking dressed man under 35. Yes, there you are. Okay, go ahead.
Thank you for the remarks. I think I do not take the mark. There's some gentleman here. And
oh, he's giving you a run for your money, I see. Yeah.
He is.
Go ahead.
All protocol observed. Thank you, moderator, prestigious guests, people from all over Africa. Once again, all protocols observed. I am Rizani Kennedy Ramatea from Stellenbosch, and I'm from a social tech company called We Earth. So what we do, we created a social currency called Social Points. We have a social media platform that optimizes community engagements with corporates to the local economy, with the local economy. So what we do, we say to people, list your problems on our platform, and then they vote it up. When they vote it up, one thing that we also do is that we show corporates that this is a problem in your field. You might benefit from this, and then they can come there for marketing. We take 30% and we put it into a system called Social Bank, where we convert it to social points. And now with the social points, we redistribute it to the people who can come and solve the community problem. So we give it back to the public. And the public can go and take that 30% and buy from local businesses. Now, from your perspective, sir, for me, I am looking at big business and linking them up with small businesses so that they can support that. From your side, how has it been important to look big businesses to allow more people, to facilitate people who are not trading over $100,000 or something like that so that they can participate in the greater market? The successors, the farmer that just does a bit of farming on the side or so, how has that been important for you to link your money and big corporates into making sure that they can trade and trade with the world through your platform? Thank you.
Interesting. Thank you very much. Actually, I like what you are doing is social impact. You know, and this is very, very interesting idea. I applaud you for such an idea. Because it's not only making money, it's how do we solve problem using a tool, technology as a tool. See, what we do is we work for these grassroots, MSME, SME. We help them procure better. We help them procure cheaper. We give them product access. We give them product at 2 to 3 days speed. You know, I shared that rather than you going to Dubai and spending $2,000, $3,000 dollars, that's money. For SME, $2,000 is a lot of money. So what we do is also, these are one criteria of people that we focus on to help them fulfill at the best price possible. You know, so that area is a very important area for us.
Okay, another question over here. Go ahead. Just introduce yourself.
Hi, everyone. My name is Moise Hampanda. I'm originally from Zambia, and I work with Africa Equity Group. We are in the venture capital space. And one of the things we do is we raise funds from the outside world and come and invest it in Africa. And the challenge has been, most of the funding we get is from the US, and that funding is very expensive. You mentioned something like, you know, the interest rates in Dubai are much favorable. So I just wanted to know, like, specifically, how does someone like me access that kind of funding? Thank you.
I mean, there is companies that deal They are VCs, angel investors who are, but in the end of the day, they need to see projects. Whether you are a VC or an angel investor, they need to see your project. They need to see what stage of development it is. And then I think if your product project has the right mix for these people, I think they might look at it and consider it.
Yeah, because you've invested in some very interesting projects yourself, like a solar project in Ghana. How's that?
I'm glad Mr. Yufi Grant is here. Actually, I don't know anything about solar. You guys say, yeah? I have no idea about solar. I went to Ghana for different purpose. We met with Mr. Yufi Grant. It's not an advertisement for you, Yufi. Yeah? I went to Ghana, I met with Mr. Yufi Grant, and then he said that one of the areas they are looking at solar. So I went looking for, people who do it. I brought several companies. I said, we have this project. And what was supposed to earn from it? I think almost $100,000. But then I started realizing that the component to build it is not difficult. So I started building these components from sustainability study to acquiring the land. So now I reach a stage where I have a valid project. Even if I try to sell it today, it will get me between $7 to $8 to $9 million. So from $100,000 to almost $7 to $8 to $9 million. Why? Because we built the model. Now we are at the stage of starting the project, So a lot of times things might look very difficult, glim. But sometimes you have that courage to go and build it and develop it.
Wise words. Another question there, sir.
Okay, thank you very much. My name is Lucimadio Simao. I'm from Angola, but currently living in South Africa for 8 years. And I do business here as well. I'm the founder and the CEO of Professor Consultancy. And I've created a platform which is called Entrepreneurs NBA. If I have to extend that, Entrepreneurs Network and Business Advancement. So which is a platform that allows entrepreneurs and aspiring entrepreneurs to be able to connect with resources so they can be able to grow the business to a sustainable economy. And many more things are under it. But now there's one thing that I want to ask, and it's very personal from my perspective. Because we're talking about investment and skills development, which is important. But there's one thing that is not being said since the beginning of this event, is retention of talent in Africa. Okay, so, sorry about that. We are creating a lot of activities in the continent to support skills development. But the same people that we are providing those services, they are traveling to Europe and to America looking for opportunities. What are we doing with our programs? Number one. Number two, to allow retention to take place in Africa, there's only one thing in my perspective. It is governance. We need to reinforce corporate governance from the high level. And when I talk about corporate governance, it is not the top to decide what has to be done to those who are at the bottom. It is the bottom to tell the top what we need in order for us to get where they are. Okay, so in this room, I can see the majority of age is on 30 upwards. What about those who are lower? We need them. We need to hear them. So now, just to cut short, because otherwise I'm going to be talking here until tomorrow.
Please don't.
What would you advise corporates in South Africa, specifically, on how they should govern their activities, their operations, to ensure that the microeconomy is empowered? Thank you.
First of all, you know, jack of all trades, jack of all none. I mean, you have to be honest. This is not an area where I know tremendously, specifically for South Africa. There might be people who are much better than me who can give their input into that. But very simple, you know, youth have area that they add value, and any corporate has youth and development. I don't know if, you know, even in UAE we have a youth minister.
Yes.
You know, so, and countries also they have that. So I don't know if I can be, I'm an expert to answer that question.
Yeah, but you've answered quite a few questions, which we're very grateful for. So please give a round of applause to Walid Hareb Al Falahi.
Thank you, sir.
Thank you very much. As Walid makes his way off the stage now, I'm going to bring on the next moderator because we've got another session coming up. This session, in fact, actually, I have my MC. You can come and do it if you like. Yeah? So perhaps you should introduce them, and I will gracefully exit the stage. Thank you very much.
Thank you very much, Mark, for passing the baton. We're going to continue on with our program and our next panel, for which I'm going to introduce the moderator in a few seconds. So this one will be about doing business in Africa, investment protection and facilitation under the AfCFTA. And I'm going to welcome and ask you to please welcome warmly our moderator for the session, Professor Ernest Kofi Aboti, Dean of the UPSA Law School, Managing Partner, Access Legal. If you could just please join me on stage to take over this panel. And for this conversation in particular, we also will have sort of a scene setting that will be conducted by Sim Chabalala, CEO of Standard Bank. If you could also please welcome him and give him some applause. Thank you so much. Thank you.
Excuse me.
They will activate it.
Congratulations. Good to meet you. Yes.
Your Excellencies, Professor Mbengwe, friends and colleagues, it's my great pleasure to join you this morning, and what a privilege it is to be with you. I have no doubt that everyone here is familiar with the main findings of the joint AfCFTA Secretariat and World Bank joint study on the likely economic effects of the AfCFTA. As you all know, the study finds that deep integration, which includes harmonization of policies on investment protection and facilitation, would reduce the number of Africans in poverty by 50 million, create income gains of 9%, and most impressive of all, would cause a doubling of intra-Africa trade by 2035. These could sound like dry statistics to a normal person, but behind every number is a better life for the people of our beloved continent. These are therefore results worth celebrating and worth working very hard to achieve over the next decade. I think it's only appropriate that I express my sincere thanks on behalf of all of us at the Standard Bank Group to the Secretary General and the AfCFTA Secretariat as a whole for their remarkable series of achievements in making the world's largest free trade area a reality. This really is an achievement of world historical importance. At the risk of saying something controversial, I'd like to speculate that if the AfCFTA would have happened elsewhere in another continent, it would have attracted a great deal more attention. Let me immediately add that Africa's relative lack of international coverage is also an advantage for us, because we do not often get the global spotlight, we have considerably more autonomy to forge our own destiny. This capacity is going to get more valuable in the decades ahead. It is now clear that the period of unipolar globalization, which began around 1990, is over. That period has given way to a new era of heightened nationalism, increased tensions between the great powers and their allies, and unfortunately, higher barriers to free flow of ideas, capital, goods, and people. But thanks to our relative detachment from the tensions that dominate the global north, thanks to the Africa Union, and thanks to the AfCFTA, Africa is an increasingly attractive exception to these trends of increased fragmentation and heightened tension. As the great Kwame Nkrumah said, at the dawn of Africa's independence, 2 generations ago, we face neither east nor west, we face forward. This stance of active non-alignment is understood by the West, as The Economist points out just this week, and I quote, America and all its allies are trying to recalibrate their message to the non-aligned world. Countries don't want to choose, and we don't want them to. America is therefore pursuing diplomacy in places it has neglected. Thus, if we continue to make the right policy choices as Africa, the current geopolitical setup will enable us to continue to grow very fast and to attract a great deal more foreign direct investment. Strictly speaking, the AfCFTA investment protocol protects only intra-African investment, but certainly does not limit its utility. As we at Standard Bank can testify, one of the questions that would-be international investors always ask is how confident we are as African businesses about investing in a particular place or sector. Our confidence is one of the strongest signals to non-Africans that they would also be wise to invest. Next, and as a broad generalization, intra-African investment is usually more developmental than FDI from other countries. So, since I've quoted a leading African luminary, let me quote another one, Amilcar Cabral, who reminds us that mask no difficulties, and claim no easy victories. As I've already said, AfCFTA is a really significant victory, but equally there is still a lot of work ahead. Our distinguished panelists will enable us to identify most of the difficulties that still need to be addressed to increase intra-African investment. And in the spirit of that debate, let me just make 3 quick points. The first one is that from the perspective of a pan-African financial services business, it would be extremely helpful if the AfCFTA could create a legal framework that would give equal comfort to both country authorities and investors about property in the form of data, and that data should be capable of moving between jurisdictions. Second is about the protection of dividend flows. People should be able to get their dividends out when they are earned. And third, is the point that there are severe shortages of transport and energy infrastructure, and our experts at Standard Bank expect the value of this to be more than $3.4 billion. Closing this gap will require a combination of public, private, and international funding, and multiple approaches, including public-private partnerships, and a willingness to make use of Africa's brown and transitional natural resources in our own interests and to support our own development. Yes, we will play our part in managing and mitigating climate change, and in a just way, away from the reliance on carbon-based energy. But this must be at a pace that makes sense for the people of Africa and that acknowledges our right to follow our own path to economic and social development. With that, I thank you very much and hand you over to the great professor. Thank you.
Thank you very much. CEO, please come. I would like you to join us. You've provided very good context for our conversation. So please, if you may just take your seat. At this stage, I'm going to ask the presentation, another short presentation from Professor Makan Moise Mbengwe. Professor Mbengwe is joining us on Zoom, I understand, and he's going to speak on the presentation of the Protocol on Investment to the AfCFTA and how it innovates in terms of investment facilitation, promotion, and protection. 10 minutes of presentation. Professor Mbengwe.
Thank you very much, Mr. President. Do you hear me well?
Yes, I can hear you. Oh, we can hear you.
Yes, thank you very much. Thank you very much, Mr. President. Excellencies, honorable delegates, and friends. Mr. President, I'm hearing an echo.
Unfortunately, we have some breaks. Technical team, can you kindly rectify that? Please proceed. I'm sure we can hear you.
Okay, thank you very much. And thank you very much for the invitation. I'm sorry that I cannot be there with all of you in town. Mr. President, allow me to start by saying that the investment cycle is based on 6 fundamental pillars. First, what we call investment attraction, then what we call investment admission, then investment facilitation, the third pillar. The fourth pillar is investment protection. The fifth pillar is investment retention. And the sixth pillar of investment cycle is what we call investment expansion. So giving the possibility to an investment to expand in the industry. Among those 6 pillars, the most important pillars are actually investment facilitation and investment protection. The reason why I'm saying that these 2 pillars are important is because all the other pillars that I've mentioned depend on those 2 pillars, which are investment facilitation and investment protection. You cannot have an effective policy of investment attraction and admission if those policies do not rest on investment facilitation and protection.
Professor Mbengwe, can you hear me?
Yes. Yes, I hear you.
I think we're having a bit of trouble hearing you. You're breaking up.
That's my feeling. That's my feeling because I can hear that from my computer.
Right. So in the interest of the economy of time and everything else, may I ask that you try and see if you can rectify your connection, if it's from your end, or our technicians also
my connection is perfect. My connection is perfect. It's on the other end.
Okay. So can I just put you on hold for now while we put our panel together? We'll come back to you. Hopefully we'll have rectified the difficulty, and then so that we can actually economize time and all that. But thank you very much, and I apologize for the difficulty from our end. So at this stage, I'm going to ask my panelists to join us on stage, starting with Florizel Liza. Do we have Florizel Liza with us? Yes, kindly join us, please, at this stage. Lerato Mataboge, I apologize if I massacre your name, Lerato. I'm supposed to know how to. I think under AfCFTA we should practice how to pronounce African names. So I apologize for that. May I ask if we have Professor Landry Signy? Please, just make yourself comfortable. Professor Landry. And then finally, penultimately, Chris Erasmus. No, I understand he's not here. Finally, Mohan Vivekanandan. Mohan, please, join us on stage. Okay, so as we wait for the technical challenges to be corrected, let's have a conversation. I'm going to first of all start by thanking Sim Tabalala for providing us with the context for the conversation. I think, for right or wrong, Africa has been described as exhibiting higher thresholds of risk when it comes to investment generally. And overall, we do not attract as much investment as other parts of the world. You have just given us a template. So I'm going to ask all of you to perhaps tell us, maybe in 1 minute, your own impressions of the current profile of the continent as an investment destination. Let's be honest, African leaders travel the world telling people to come and invest or telling countries, to come and invest in Africa. But from a commercial standpoint, does Africa present a viable case of investment in the current landscape of the continent? Starting with you, Sim.
Yes, it does. And there are a couple of data points to support that proposition. Firstly, the return that investors generate adequately rewards them for the risks that they assume in whatever jurisdiction they are operative in. So if you use ourselves as Standard Bank as an example, we are operating in 20 countries on the continent. We're able to make investments and we're able to get our dividends out and generate returns that are superior to the cost of risk, firstly. Secondly, there is an increasing awareness and a harder drive by leaders on the African continent to make sure that the legal and regulatory environment, in particular the rule of law, the ability for you to be able to contract and hold people to account in terms of your contractual obligations is respected, and that is happening increasingly. Thirdly, particularly in the East Africa region, people have recognized the need for integration so that you have got larger population pools, larger markets, and therefore easier ways to sell your goods and your products. But clearly the most important thing, which is what these discussions are about, is the imperative for Africans themselves to be able to move their goods, their ideas, their people, their capital, and their investments with ease between the various jurisdictions on the continent.
Thank you for that opening. Yes, from the United States perspective.
So a couple things I think that are important, at least looking at it from the U.S. side. There is a perception of risk in terms of investing in Africa that I think is not completely warranted. There are risks in doing business in Africa, as is true in other emerging markets around the world. So Africa is not unique, but I do think that there are some perceptions of risk that do need to be addressed. And I think that's one of the things Corporate Council on Africa is trying to do, bringing together all the stakeholders to talk about what's the real risk, to address issues of risk mitigation, what are the tools that we can use. I won't go into that now, but there are tools that can address that risk.
We'll come back to that.
And I think, last but not least, that we have lots of U.S. investors in Africa. Often people say, well, where are the Americans? Where are the U.S. companies? They are here. They are investing. But a lot more could be done. And I'll just end by saying that this is, I think, the point at which the kind of investment Africa is looking for could change significantly with AfCFTA, the reduction of barriers amongst the Africans, the protocol that's being done on investment here within Africa should also have secondary effects for those from the outside, like U.S. investors who want to come to the continent and take advantage of a large market, 1.3 billion people, $3.4 trillion economy. They would not have gone to small economies across the continent. And so this is really that time when it could happen. And I did say last, but I think also because of things that happened during COVID and breakdowns in supply chains globally, that this is really a good time for U.S. and everybody else to come and invest in supply chains in Africa and build up their manufacturing and other investments that are really relevant at this point.
Okay, I have a difficult task, and my difficult task is I'm moderating a session at a time when majority of my audience are hungry, and so the level of patience is not, I don't have a higher patience threshold. So what I'm going to do is I'm going to unfortunately be interjecting sometimes in the economy, in the interest of time. So please understand me. Lerato, let me just stand. So as someone from a country perhaps with the largest, perhaps the largest exporter of investment on the continent, perhaps, I suspect that your country may have more to worry about risk generally on the continent. Is Africa a safe place to invest as we speak?
Africa, certainly. Look, there's high risk and high returns. I think our CEO has articulated that. I think one of the important things that South African private sector has done since the 90s is to really take that risk and prove to the rest of the world that Africa is attractive for business. I think one thing that South African corporates have done across the board, whether it's financial, telecoms, is to give confidence to other external partners to say there are opportunities on the African continent. So the ability and the deliberate strategy by both government and private sector to go into the continent, to find opportunities, to use our diplomatic capital, government relations with the rest of the continent, to prove that intra-Africa investments can happen and they should happen. Right. And where we sit as South African government now is to say, how do we put greater impetus to the intra-Africa investment agenda? And how do we begin to do the, as they call it in other parts of the world, the hunting as a pack, as it were, where we have a proper compact between private sector and government to de-risk further the continent, to deal with regulatory barriers, to deal with some of the challenges that our companies are facing around, say, repatriating capital and profits, etc. So the next conversation should be about the type of compact that we need to ensure efficiency in the investments that we are making.
Professor Singh, please. Yes.
Hello, everyone. So a few points I would like to mention. When we speak about the African Continental Free Trade Area, we have to also think about why are we trading and why should we trade through a regional trade agreement? What are the expected benefits and what are the strategies to address the barriers related to those expected benefits? So why investment protection is extremely important, protecting against expropriation, also having a fair administrative treatment, judicial treatment, preventing discriminations among others. So on one hand, you protect the investors. On the other hand, you also protect the worker or the citizen, so you protect against corruption, or violation of human rights among other points. So in order to achieve these goals, agility is critical. So we speak about the gap between the risk, the perceived risk, and the actual risk. One thing I like to do when I teach those questions, and some of the elements are included in my most recent book, Unlocking Africa Business Potential, I like to compare globally the risk or perceived risk. And when you put things in perspective, you look Latin America, to a certain extent also Africa and Asia have a relatively similar or conversion level of risk. However, the African businesses or investor or the global investor in Africa are the one who pay the highest premium, perception premium. Right. So it's really important to have this change in culture. And as CEO Flory also mentioned, a lot of work is being done in the US at the Brookings Institution, for example. We hosted an event not later than last Friday with various ministers and C-level executive discussing how to reduce or bridge the gap between the risk and
Sorry to cut you. We'll come back on some of the conversation. But Mohan, let me just have your take on this finally. As someone who works for DBSA, you work for a company that is substantially into infrastructural investment on the continent. You've invested heavily. What is your perception of risk, particularly in terms of dealing with government, the private sector, and in terms of your own innovation to minimize your risk threshold?
Good afternoon, everyone. Thank you very much for the invitation.
1 minute, unfortunately. 1 minute.
From the DBSA's perspective, our focus, as you mentioned, is around financing sustainable infrastructure. And while we are a South African government-owned entity, our mandate is Pan-African, and roughly 40% of the financing we do in a given year is outside of South Africa. Traditionally, the infrastructure we finance have been funded through the balance sheet of the ministries of finance. So often we provide funding to the ministries of finance, and then those funds were ring-fenced for the infrastructure projects. But what we've seen over the last few years is that a number of the countries are facing very challenging situations. And so that model of financing infrastructure through the public balance sheet is shifting. And so as an example, one of the things we're doing now is to put a lot more emphasis on working with private entities and funding into private structures, whether it be in the energy sector, in transport logistics, in digital infrastructure, and even in certain social infrastructure, affordable housing, hospitals, student accommodation. So that model is one way of trying to manage the risk of funding through the public balance sheet, which is under stress.
Right. It's very important that we hear Professor Mbengwe's presentation because it's going to give us a context of the investment protocol on the AfCFTA. So that would allow us to understand and have a discussion in proper context and not just in the abstract. So Professor Mbengwe, if you can hear me and if our technical team have done the work, I'm unfortunately going to restrict your time to 5 minutes this time. And being a professor, you are used to giving students time. So please, go ahead.
Thank you, Mr. President. I hope that you're hearing me well.
Yes, I can hear you clearly now. Please proceed.
Okay, thank you, Mr. President. I understand that now I only have five minutes. So what I was saying in my previous intervention is that investment facilitation and investment protection are fundamental for what we call the investment cycle, because all the other pillars of the investment cycle, such as investment attraction, investment admission, but also investment retention and expansion, are dependent on investment facilitation and protection. The major problem in Africa is that for a long time we have been clinically isolating investment protection and investment facilitation from each other. If you look at the dominant regulatory framework that has been put in place on the continent through national investment law or through bilateral investment treaties in particular, those regulatory frameworks, they mainly focus only on investment protection and kind of ignore investment facilitation. And it is only in 2012 when we were negotiating the Pan-African Investment Code, which was the first continental model on investment regulation in the continent. It was only at that time that actually reflection started on the continent on how to better balance investment protection and investment facilitation. But the Pan-African Investment Code insisted on the fact that this should be balanced. It didn't really provide guidance on how to better ensure balance or equilibrium between investment facilitation and investment protection. So the investment protocol, the AfCFTA, that was negotiated last year was an opportunity, a new opportunity to actually really foster a framework on the continent that would both take into account investment facilitation and investment protection. And so if you look at the current text that has been adopted by our head of states in February of the investment protocol to the AfCFTA, what you will see is that investment facilitation and investment protection are both objectives of the investment protocol, but they are also both part of this very structure of the investment protocol. So you have a specific chapter dedicated to investment promotion and facilitation, and you have a specific chapter dedicated to investment protection, where you find traditional standards of investment protection, but with an African flavor, so with an approach that is adapted to the continent. But since my time is very limited, I would like to emphasize just 5 aspects which I think are very important to keep in mind when it comes to investment facilitation and protection under the investment protocol. First is that investment facilitation and investment protocol in the investment protocol have been shaped in such a way to make Africa an investment destination. This is what we want, making sure that Africa
Africa would become an investment destination, and then provisions have been crafted in such a way to push forward that idea. Second, what you will see in the investment protocol is that both investment facilitation and investment protection are pursuing the same function, which is to promote, to foster sustainable investment. What we want with the protocol is to facilitate sustainable investment and to protect sustainable investment, so investment that's contributing to the sustainable development of our country. Third, both investment facilitation and protection within the investment protocol are there to encourage responsible investment. You have a whole chapter of the investment protocol dedicated to investors' obligation, and those investors' obligations are supposed to feed our approach, our vision of investment facilitation and investment protection. Fourth, what you will see is that investment facilitation and investment protection through the investment protocol are there to booster what we call investment cooperation. What we want to do here today in the continent is to make sure that home state and host states cooperate when it comes to investment, but also that investors and their investment would cooperate with host states in Africa. And I think this is a very important aspect. And then last but not least, Mr. President, of course, investment facilitation and investment protocol, and investment protection, sorry, under the investment protocol are supposed to lead to what we call dispute prevention. So what we want is to avoid, disputes crystallizing between investors and states. And so the whole facilitation and protection is there to ensure more dispute prevention and avoiding getting into settlement in the continent when it comes to investment. So in conclusion, we can say that the investment protocol has innovated and has brought what I could call the idea of facilitative protection. And this is great because it shows that we were able to come with an Africanization of how we see investment facilitation and protection. And then with that protocol, we could really come as rule makers for the benefits of our investors and for the benefit of boosting intra-African investment. Thank you, Mr. President.
Well, thank you very much, Professor Mbengwe. I have just one question for you before we let go of you. And the question is, the protocol appears to repeat something about African protocols that has generally been criticized, and that is what is called the clawback clauses. These clauses that give with one hand and withhold with the other. So for example, we say the host state is supposed to do X, Y, Z, but subject to local law, the host state is allowed to deviate, for example. And that sort of allows that discretion of host states to sort of exempt themselves on grounds of local circumstances by reason of their legislation. So how much assurance can you give this investment community gathered here that we are not going to face some of these challenges, for example, that have been faced under old protocols like the African Charter on Human and People's Rights, which had all these clawback clauses that have been generally criticized? Can you please address that and assure the people?
Thank you. Thank you so much, Mr. President, for that great question and comment. Mr. President, when you look at the text of the investment protocol, what is provided right now is that in a reasonable period of time, national laws, and in particular national investment laws, are supposed to align with the investment protocol. So the whole idea of the investment protocol is to build a common framework for the regulation of intra-African investment throughout the continent. So the whole idea is really to have national investment laws at the stage of implementation to align with the investment protocol. So it is hoped that we will have a rather common level of facilitation and protection on the continent. Then, of course, I agree with you that there are challenges when it comes to implementation, and we need to make sure with the support of the Secretariat of the AfCFTA and the future Pan-African Investment Agency, we need to make sure that those institutions will be used to actually assist, support our government on how to align national investment laws to actually avoid the situation you are describing where a state would be able to use their domestic laws to circumvent provisions under the investment protocol. But the flexibility, Mr. President, the flexibility that is given when it comes to domestic laws under the protocol is normal. It's normal. It is part of any investment regulatory framework. That investment regulatory framework has to be deferential as much as possible to the domestic laws and regulation and to the domestic policies.
Right.
And let's not forget that the Master Agreement, which is the agreement establishing the African Continental Free Trade Area, has one principle among several other principles, which is the principle of flexibility. So it was agreed since the beginning that the AfCFTA would be based on flexibility, and flexibility from a legal point of view means giving a certain room of application to domestic laws and policies, and this is the reason why you have so many renvois. But there will be alignment, and we believe that the protocol is very, very balanced, and it is there, as I said, to create a win-win relationship between states and the investment community.
Excellent. Because I took some time of yours, you're free to stay with us if you have some time, and we may come back to you occasionally because you are really the expert on this, so that you can guide us through some of the conversations that may still touch on this, because there are a few questions I would need you answering. In case you do have the time, we'll be happy that you be on standby. At this time, I'm going to ask you, unfortunately, please permit me, I am trying to avoid a mass exodus, so I'm going to start with you, Sim. As someone who heads a bank that is trans-Africa, you're in various countries on the African continent. What is your experience, and I'm going to give you just 2 minutes on that, what is your experience in investment facilitation of the continent? From literally just showing up in town to completing a project and having an investment working in the country. What is your experience in facilitation? Because Africa hasn't particularly done too well with the World Bank's ease of doing business generally. When it comes to the indexing, we haven't particularly been doing the best on the continent. So how can we separate the ease of doing business, which creates a sense of the investment climate prevalent in a particular country and doing business generally, from investment facilitation? What is your experience about investment facilitation in Africa?
I think the experience is varied and it differs by region. I wouldn't want to pick out unfairly any particular regions, but clearly the region with the best laws, regulations, and ease of doing business, the ease with which you form a company, employ people, buy plant and machinery, make loans, recover those loans, dare I say it, hire and fire staff, is clearly the East Africa region. And there are some lessons to be learned from that.
Not West Africa?
Go ahead. The differences are marginal.
Go ahead.
But I think there are some lessons to be learned. Orthodoxy is important. And as the governor of the South African Reserve Bank often says, if the authorities implement unorthodox policies, they will always have orthodox outcomes. And as I say, the East African region has got the best examples of facilitation.
From an outside perspective, I'll come to you, Florizel. What is the experience generally of the U.S. in terms of your, and in this case I suspect reflects many foreign companies outside the continent. What is your experience in terms of facilitation? One of the major criticisms in this area has been the issue of corruption and the tendency of, from regulatory bodies to government agencies to whoever is supposed to facilitate the process, everyone wanting to have a piece of the action. And I am aware that the United States in particular, the US companies, and I've had experience of this as a lawyer, US companies particularly have challenges with this because of the FCPA hanging in somewhere, and there's always this worry. And lawyers have developed a new term called facilitation fee, whatever that means. And we are speaking investment facilitation here. So what is your experience in terms of your advisory to American companies to go out and invest. You have a local legislation that makes things difficult for them when they come to town. They have to compete with others. What is your general experience?
So obviously, you've touched on one important issue, which is corruption. But in fairness, there's corruption in lots of places. The other thing that we hear about is sanctity of contract. And one of the things that U.S. companies will talk about and come to us to help them work on is there's a change in administration. You worked out your investment agreement with the previous people in power. And then, so it's not, that is not corruption, but new people will come in and they will say, oh, well, no. That's what you did with the other folks. Now, you need to deal with us. And now they're back to square one. There are cases where agreements in terms of investment, excuse me, have been put on hold, reviewed by the new administration that's there, and then a request for renegotiation. And this is something that for a lot of companies, I think it's not just US, but I can only speak to that. This is problematic because, you put your resources in, you've started the process, you've hired people, you've gone down a certain path, and then whoops, now.
But realistically speaking too, and let's be fair about this, are there no circumstances where you have very unfair contracts negotiated between foreign companies, not just US companies, foreign companies and African countries, and many of these influenced by the imbalance of negotiating power and the whole general influence of bigger countries, smaller country officials, frankly, let's be honest, with our respect, some of whom are not very well informed, and and then all kinds of things are signed. And then new governments come, they do these reviews, and they realize some of these contracts, frankly, cannot stand, yet they are frozen in stabilization clauses. How do you, as corporate counsel, I'm sure you very much face this all the time.
Right. Well, so then you have issues of what's the definition of fair, okay? So with one group of people, you've negotiated, they thought it was fair. I don't take the position that Africans are negotiating deals from a place of ignorance. I think that, each group of folks knows what it is that they would like to get out of the investor. Now, there may be contracts that go way back, and, historically, they were set up at a time when it wasn't. But I'm actually talking about things where it could be in the last decade. And, the Africans who negotiated, they think they did the best on behalf of their people and so forth. Now, the next government comes in and says, oh, but that was unfair, or we don't like the provisions, or we don't think that that agreement actually meets the goals that we have, which are now different than the goals that the last set of folks had. So again, I would just say that, having consistency, because at the end of the day, businesses want to come to places where there's certainty, where there's transparency, okay? And I think that African governments that are dealing with foreign investors are quite capable of providing that. So that's a big request. The other thing we hear about is getting your money out. People get their resources in, they have to be able, it's already been touched on, they have to be able to get their resources out as well. And there needs to be certainty about the possibility of doing that, the time frame for doing that as well. So I'll stop there.
I'll come back to you very shortly, Lorato and Professor Signy. But may I ask you, Mohan, what is your experience from your bank's work of the major infrastructural impediments, the kinds of infrastructural deficits that impacts on investments across the continent?
Okay, thanks for the question. In terms of the projects that we've funded, to begin with, what's interesting is, given the significant need for the infrastructure, right? That need is clearly quite evident, across a number of the sectors we're operating in. The real challenge has been that there's also quite a bit of financing, both within the continent and from outside, that's very keen to make these investments. Because generally speaking, the rates of default have actually been very low in the infrastructure investments. It's partly because there's a lot of structuring that goes into it, especially into infrastructure transactions on the continent. And generally, we ensure that the offtake risks are mitigated, right? For us, the biggest issue actually is the fact that there aren't enough of these projects for us to deploy capital into. And I'm sure Standard Bank would probably say the same, along with the financiers, the TDB group and others that we work closely with. We're actually sitting on a lot of capital. We want to be able to deploy it, but the amount of time that it takes sponsors to work through all of the challenges to get a project to a position that's ready for financing, and the amount of money they also need to put into different studies to get there is quite daunting. And I think that is, if anything, is the challenge that we need to work on as African countries and as African financiers, is to shorten that time period to get these projects, because the capital is absolutely available, and the returns we're able to earn on African infrastructure are quite reasonable vis-a-vis the risk involved.
Lerato, as a government official, one of the criticisms has been in the area of regulations, that some countries are overly regulated and others are under-regulated. For the overly regulated, the problem is you make things too difficult, and it becomes, which also then heightens the prospect of corruption. Once, too many things, so many steps to comply with. And then the under-regulated too, you do not have enough regulation in spaces where you have certainty and protection, to talk of intellectual property, talk of technology transfer, all the other complications that companies are particularly interested in. What is your take on the question of especially regulation and government's overall role in investment facilitation, especially under the new protocol?
Environment for private sector to thrive. But there has to be balance, another area that I'm very clear about, by preserving the ability for governments to regulate in the public interest. COVID taught us a very hard lesson, because lockdown, in terms of, inability to continue to operate in the normal way. And as South Africa, I won't mention necessarily the companies, we are busy as government with litigation that says you interfered with my ability to operate my investment. But if we recall the period, it was about making regulations in the public interest. So there will always be that tension that we need to be very careful about, even in creating this framework, the investment protection framework, because both sides, we can't have unfettered rights, right? That says complete deregulation, and let's make sure that private sector gets 100% everything private sector requires, and then the other extreme where government over-regulates and over-interferes, etc. So it's about finding the sweet spot in the middle, because we have to, as government, maintain the policy space to, in certain instances, take decisions in the public interest that may impact particular investments.
Right.
So that balance is
Right.
very, very key.
Right, thank you. Now, Professor Signy, given the issue of disparities, follow up to her question, the issue of disparities, some countries overly regulated, others under-regulated, and given the fact that an investor needs to familiarize himself with the multiple countries, 52 at the last count of these countries. To what extent is harmonization called for? And I will ask Professor Mbengwe to also give me a 1 minute take on that. To what extent is harmonization called for, especially in light of your research in your book? To what extent do you think the harmonization would really, ease things so that we can have an African investment code which every country perhaps adopts, and just know that code, and you show up in the country, and you don't have to now, get used to the peculiarities of that country.
Thank you. So if you allow me first, as an academic, I may name some countries which have performed extraordinarily. For example, Rwanda in terms of facilitating investment, Cape Verde, Botswana are some countries which are doing very well, and I think we should celebrate our countries on the continent who are leading the way. So related to the harmonization, that is, I'm working on that question for about a couple of decades. I've been working on it for about a couple of decades, and of various continental initiatives. It is complex, and it is complex everywhere. So that's why the coalition of the willing is extremely important, because predictability is key for companies to do business. Corporations in the US were very excited about the AfCFTA and much more excited than the government initially, exactly because of the prospect for an harmonized regulation throughout the continent. So yes, the policy space, as mentioned, will remain extremely important because government should also act to deliver public goods and services to the citizens based on the priorities of the moment. But to also echo what CEO Flory said, it is extremely important in the context of the rule of law for corporations, but also policymakers to understand that when there is a commitment, this commitment means something. If not, there's no ground for doing business if anything could be reassessed and challenged over and over and over. I have another point to add, probably in the context of digital transformation, digital trade, the fourth industrial revolution, but perhaps I will make it later.
Okay. Professor Mbengwe, your question is in the context particularly of the fact that given the rules of origin, many companies outside the continent will now think of the possibility of locating on the continent to take advantage of the rules of origin and to be within the space of the zone, the trade zone. But we have a protocol, which is a fantastic start. Is there an expectation that this protocol will evolve into a common continental investment code? Or from where you sit, do you have the impression that there is no appetite to get to that level of legislative bite where all countries will pretty much, and I heard that from what you said earlier about flexibility, countries like the tendency to, have, they call it margins of appreciation, to have margin of appreciation, or you think that we can get a code where the continent is bound. And I'm asking this because, let's be honest, businessmen and women like certainty. And so the idea of political nicety at a certain level, which can be deviated from, can sometimes optimize the perception of risk, which is not too good. Your take, please.
Thank you very much, Mr. President. Mr. President, I think that certainty doesn't mean uniformity. I also think that predictability doesn't mean uniformity. We have to be realistic. During the negotiations of the investment protocol to the AfCFTA, there has been a lot of discussions on this idea of harmonization, whether the idea behind the AfCFTA is to harmonize investment laws and investment policies on the continent. And the position of I would say the consensual position was that harmonization is not needed. What is needed is alignment. What is needed is that, all African countries agree on a framework. What does it mean agreeing on a framework? That they agree on what are the fundamental principles and objectives that should regulate or that should guide intra-African investment flows on the continent. And on that, our countries agreed. They agreed that what they want is sustainable investment. What they want is responsible investment. What they want is investment of quality. From the moment all countries agree on that, I believe that there is the predictability, there is the certainty that you are talking about. Now, how this is going to be implemented at the domestic level, I think that if we are realistic once again, we need to admit that not all African countries have the same level of development. Not all African countries have the same position. Some of them are capital exporting countries these days. Some of them remain capital importing countries. So if we are realistic at that level, we need to admit that there should be some sort of variable geometry. But variable geometry is not in terms of what is the fundamental framework is about. And on that today, I think with the investment protocol, we will have more predictability. We will no longer be into over-regulation or under-regulation, etc., because the protocol gives clear guidance to all African countries on on what is the path to be followed, but with giving a bit of flexibility, which I think is fundamental when it comes to the implementation at the domestic level. But investors in the continent should not be feared of that, because again, the investment protocol is giving the clear framework on how all this will operate.
Excellent. Don't worry, Professor
Mr. President, I don't know if you can allow me to jump back quickly on the issue of investment contracts that you raised.
I will let you come back. I will let you come back if you can just hang on a second. So, Professor Signy, 30 seconds. You want to come
Yes. Although I agree that alignment is extremely important, in terms of regulation, implementation makes the difference. And that's why going beyond alignment, I think providing the tools and creating related to special and differential treatments are important. So those elements are very important. So yes, alignment, but much more than alignment is needed if we really want to have a strongest framework to deliver on the promises.
But I think we can also agree, and again, agreeing with Professor Mbengwe, we can also agree that it's sometimes hard to move from 0 to 100. You know, we have to move. This is a continent that formerly didn't have an investment protocol. So we've moved, and I think we are at the state of protocol. At least countries have come along. It's easier to move from protocol to something else than from that to a code. That I guarantee we probably have only one signatory. I can only imagine that country, but I'll mention it. So at this stage, and I'll come back to you on the question of contracts. What has been your experiences, if at all, and where you sit, even if not directly, you have monitored quietly on the side as your clients battle things out in court with contractual failures with government, investment failures, and things that have had to result in court. And as someone who is a lawyer, I understand how long cases in African courts can take. You'll be lucky to live and see the end of it. Question is, to what extent, what is your own expectation of the dispute settlement process or the dispute prevention process? What are the mechanisms of investment protection within the context of dispute? Because often we think of dispute settlement, but the settlement process is a cost item, and sometimes it impacts very negatively on the whole investment. It breaks down relationship, it delays the process, it can be difficult to get people in sometimes to testify and speak on the cases. Question is, how do we deal with the dispute process so that disputes do not mature, and if they do mature, how we manage the process?
I do think that disputes are inevitable, and that is why I suppose lawyers have always existed since time immemorial, and they continue to make money. Second point would be that you would hope for much more clarity on commercial law, and it would be great if commercial law could be harmonized. Because at the moment you've got different principles. You've got Roman Dutch law and some elements of common law in South Africa. You've got the Napoleonic Code in certain countries, etc. So it would be great if it could be harmonized, and they're basic principles. And then thirdly, the court systems could be streamlined and harmonized as well. Even accepting the sovereignty of countries, there are principles that could be applied to speed up dispute resolution through courts. And then fourthly, and most importantly, the identification, training, and management of the judiciary is important. It's been our experience that in certain countries, not only are they fine countries in the sense that people get fined a lot, but also that people litigate a lot, and you spend a great deal of time in courts. And as I say, lawyers make a lot of money from that process.
What advice do you give your group, the Corporate Council for Africa? I mean, what advice do you give Corporate Council in terms of how, one, they manage their own external counsel and they manage the prospect of litigation involving projects in which Corporate Council is involved, especially on behalf of American companies?
Well, I think, I mean, I'd just be repeating a number of the things that Sim mentioned, but I think the clarity on the commercial law policies, but also the courts. Sometimes there isn't the clarity of which are the courts that you can go to, what are the processes, the legal processes that can be pursued. Often, we have found that dialogue is obviously better than going to the courts. But sometimes, you know, you can facilitate the dialogue between the government, if it's the government that's involved, and the investor. We do try our best to do that, and sometimes that works, you know, that dialogue. But if it doesn't work, then they have to be able to know, okay, where do we go next? Because this is, you know, do we go to the international courts? What do we have to do? And we've seen some U.S. companies that could not resolve it in terms of the domestic courts because of various issues there.
And I'm sure many of them want to hear this. If you can add it very quickly to your answer, the question of the fact that a chunk of international contracts have a dispute settlement clause and a venue of arbitration, which usually is either in Paris because of the ICC or in London. So two things. How do we make Africa an international commercial arbitration center under the AfCFTA? And especially given where you sit, how can we, because often in the negotiating process, countries are eager to sign investment deals. So some of these clauses, they may not be happy, but they'll sign anyway. And it's in Paris, it's in London, because there's a sense that the services are there, there's a sense that the supporting infrastructure is there for that, or the facilities. How can the AfCFTA bring these disputes, these big disputes into Africa? It could be in Johannesburg, it could be Cape Town, it could be anywhere in Africa.
Well, I'm definitely not an expert on that, but I would say that I would look at the dispute settlement provisions of the protocol for what the AfCFTA amongst its parties want to do, and then I would say let's build on that, because, you know, as you look through the draft, you see elements of some of the bilateral investment treaties, you see different elements that they've brought in from the many investment protection and dispute settlement provisions that are out there in other trade agreements, preferential trade agreements. There's so many of them. And you can tell that they've pulled from the different ones. So I would just say, if you're going to establish on the continent a continental-wide dispute settlement process or framework, then that's the thing I think that foreign investors hopefully can go to, instead of going to the typical international tribunals.
Thank you very much, Florizel. I'll come to Lerato, but Professor Mbengwe wanted to chip in something on contracts. And again, given your expertise, I don't know whether you want to have a short bite on the dispute settlement thing, because under the AfCFTA, you have the option of going under what is called the DSB, but the DSB gives an option for arbitration, and the arbitration doesn't indicate, the rules do not indicate whether you should do it in Africa, or I think essentially the discretion is to the parties. And I'm just saying this because, to be honest, these things are not said, but the negotiating imbalance between host states and home states in these major investment agreements tend to play out in terms of some of these provisions on whether we should hear it in Africa or we should hear it in some other European country. And that's what I would like. Prof, if you can just come in with that. Briefly though, a minute and a half.
Thank you, Mr. President. There's a lot of food for thought here, but But very, very quickly, Mr. President, just to jump back, I think we should not be obsessed also with law. Law is just a means and is not at the end of the spectrum when it comes to promoting intra-African. We have areas like OADA, the Organization of Harmonization of Business Law in Africa, where the focus is on harmonizing laws, and we do not see there that investment flows are more important. So what is mostly important is really to ensure a favorable investment climate in our countries. And how do we ensure a favorable investment climate? Is first and foremost by promoting investment facilitation. So I think that one of the big challenges with the investment protocol is how we're going to help our countries to come with a common framework when it comes to investment facilitation, transparency when it comes to rules and procedures regarding the establishment and admission of investment. And this is where I think the bet is and where we should mostly invest. Now, when it comes to dispute settlement, Mr. President, maybe just as a matter of information, it's important to keep in mind that during the negotiations last year of the investment protocol, what our governments agreed upon was simply on the avenues of dispute settlement that would be available under the protocol. So they agreed that there could be state-state dispute settlement. They agreed on dispute prevention, that the idea is to make sure that we de-escalate as much as possible disputes on the continent, and they agreed on what they call dispute resolution. So the possibility for investors to settle amicably their disputes with host states. But then the protocol is providing that this year there will be negotiations of an annex, of a very specific annex on dispute settlement and dispute management. So the issue of dispute settlement and dispute management has not yet been exhausted when it comes to the protocol, because it is this year that our countries are going to negotiate detailed rules and procedures. Now, on the idea of Africanizing dispute settlement, I totally agree with you. This idea is not new. Since the Pan-African Investment Code, there was already an idea of why not creating an African investment court. So the idea of creating an investment court that the EU is pushing forward today is not a European idea. When we were negotiating the Pan-African Investment Code, there was already this idea of let's establish an African investment court so investment disputes involving African countries would be settled in Africa. Now, again, we have to be realistic, and maybe it would cost a lot of money to establish such a court. But I agree, and this is what we are trying to do, Africanizing in the settlement of investment dispute, making sure that our disputes are being handled in Africa and as much as possible by Africans, because the idea is not, the problem is not just to delocalize the settlement of those disputes in Paris, Geneva, London, or Washington, but also who's sitting to settle those disputes involving our countries. And so from a sociological point of view, we need also to make sure that we will put in place an African roster of experts that can be there to help managing and settling disputes. But yes, definitely the idea is to have it in the continent more and more often.
The SG, the Secretary General of the AfCFTA, has recognized that every year Africa loses $5 billion in forex to the dollar and other foreign exchanges. I think this is the equivalent of the PAPS, the dispute settlement component, that we should not be sending our disputes to Europe and other continents, where we have to fly lawyers, we have to fly experts and all kinds of people to go and testify. There is a lot of forex loss in that. And if we can do that in Rwanda, or we can do that in some other African country, I suspect we can keep some money for ourselves. And so thank you for that comment. My final question goes to Lerato. And Lerato, government-to-government cooperation and investment. To what extent are you satisfied with the current landscape? And are there any obstacles that readily come to mind? I mean, are governments cooperating enough in Africa? concerning investment at the level of institutions, at the high level of political office?
That's such a wide question. Are they cooperating enough? From my experience and having been supporting a number of South African corporates and our DFIs and commercial banks, commercial entities to go into the continent, I think collectively as a continent, we have to address perceptual issues that we carry around our own investments in our own jurisdictions. Intra-African investments can only succeed if we begin to shift the Afro-pessimism that we have. There's many unfortunate examples that I could give, but we have found that the treatment that some of South African corporates would get completely differs from what an external investor would get in the same locale. And we can only ask ourselves if that is driven by how we perceive our own African investments and African products, because it also lends itself to the intra-Africa trade conversation around consumer preferences and preferring what is not African to what comes from outside. Similarly, with intra-African investment, we have to have a clarity of purpose, and a clear mission to say we do want to see African enterprises building the infrastructure. We do want to see African enterprises thriving in each other's economies. That, for me, would be the foundational issues. The government-to-government cooperation on the continent is always optimal. We have the platforms, the diplomatic platforms for conversation. But at the granular level, where we have to admit investments or where we have to optimize the landscape for investment, we really have to start to interrogate our own perception around intra-African products and intra-African investments in our own economies. And the same applies to South Africa, by the way. I'm not saying that it's just about external, it's also about South African own treatment, right? Of fellow African capital or products. So that's another layer of conversation that we need to have among ourselves as Africans.
Right. Talking about treatment of our own, a story someone told me recently was that some passports, which are often non-African passports, will get you quicker African visas than African passports. And I think, as funny as that sounds, I think it's important that we pay attention to some of these things. The fact that if someone shows up in town with an American or European passport and is looking for a visa in a particular embassy in Africa, talking about the differential treatment, chances are that that person or that applicant is likely to receive a much more favorable treatment. So these perceptions, it may look a bit pedestrian, but it's important because they all feed into it. And as we come to a close in our conversations, I'm going to ask you, and forgive me if you are the last. I'm going to make you the last now, Sim. Not because I don't like you, we're close, but I'll come back to you. So, Mohan, just one sentence and one suggestion, the way forward. What do you think in the context of the current landscape? So the same question to all of you. What do you think in the context of the current landscape is the one suggestion that you will give to improve Africa's prospects on investment, especially under the AfCFTA?
I mean, from our perspective, I think the key is to get more domestic resource mobilization happening and to build the local capital markets. We've seen within South Africa, as opportunities are opening up for investments in, for instance, the energy sector and now in the transport sector, the local capital markets are able to come in and provide the long-term capital in local currency that's needed for that infrastructure. So we're seeing a lot of 20-year funding now taking place in rand. Now, that's not possible. It's very difficult in the majority of the African countries that we operate in. So we end up still financing in dollars and euro. As the local capital markets are built out, as more pension funds are being created and other institutional investors come in, our ability to finance with them in local currency as well, I think is going to provide the capital that's needed more than expecting foreign investment to come through. The foreign investment will then follow, but having that local currency, the local capital markets coming in, local investors investing in their own countries is going to be absolutely critical to growing the economy.
Thank you. Professor Landry?
I just want to say that there is no better time that now to unlock and accelerate trade, continental trade in Africa, it is not an option. Without speaking with one voice, Africa, even speaking with one voice, we still represent less than 4% of global trade. So we should take our responsibility and accelerate the implementation of the AfCFTA. And we are fortunate to have an incredible leadership, whether at the head of the AfCFTA Secretariat, but also overall on the continent to unlock that potential. Thank you.
Dorato?
Our view is that intra-African investments are the future. We need to be deliberate, and as governments, to support homegrown enterprises that are going to develop this continent, whether it's infrastructure, it's industrial capacity, etc. We're not closing out external partners, but I think if there's any era that showed us that self-sufficiency as Africa matters, it was what happened with COVID when we were cut off from the world. So it says, where are the African enterprises that can create those value chains that we need? Similarly, invest in the necessary infrastructure. So our next agenda has to be very clear around what intra-African investment mean and what kind of support measures, regulatory, incentive, etc., that we need to have as Africa Inc., the government and the private sector of the continent.
Excellent. Florizel?
So, two ideas I have. One, I noticed that there's a provision, at least in an early draft, for investment promotion and facilitation that establishes a framework for cooperation and coordination amongst the different investment promotion agencies nationally. And I would just say one of the things we notice is that there's a lot of competition. There's like, okay, we have this investment promotion agency in this country and this development board and, investment development board in that country. Suggestion, what about creating some sort of continental approach, say by sector, so that different African countries that are trying to promote investment into the same sector, whether it's health or, it could be cashews or whatever it is, and instead of country by country, all competing to get the investment, that there's a more coordinated approach. The second suggestion that I would make is one sort of continental facility that addresses diaspora investment. At least from the U.S. point of view, it's a very untapped, I'm not talking remittances now, I'm talking about like investments. And it shouldn't be country by country. South Africa is trying to get South African diaspora to invest, or Ghana is trying to get Ghana diaspora to invest. What about a continental approach to incentivizing and supporting diaspora investment? So those are just two suggestions. Sectoral and not competing one against the other, but all together. What do we do together to get investment into producing pharmaceutical products or medical equipment or whatever it is, production of batteries for electric vehicles, what could be done across the continent? And second, how do you tap diaspora investment?
Excellent. Sim?
In the context of the new generation investment principles that are contemplated in the protocol, this articulation of countries being able to legislate in their own interests as they think about sustainable development, social and economic development. In that context, it would be great if Africans would speak with one voice and loudly, particularly in places like Brussels, about what it means to adapt and to mitigate against environmental degradation globally and on the continent. Put differently, the human being is absent from that debate, and the African is very absent from that debate, and other people are dictating our destiny. Thanks.
Thank you. And finally, but not the least, Professor, okay, Thank you. But finally, before we go, Professor Mbengwe, I ended up giving you more time, as you can tell. So if you can just give us 30 seconds to 1 minute, finally. Yes.
Thank you very much, Mr. President. And I agree very much with all the excellent proposals and suggestions made by my co-panelists here. And me, I of course want to finish on Africanization. The need to make sure that, whatever we do in terms of investment, facilitation, protection, attraction on the continent is based on an African vision. And of course, Africanization doesn't mean excluding best practices from elsewhere. Africa was always a bridge to the rest of the world, and we should continue to be a bridge, but we really need to come today with an African vision. We need to present ourselves as rule makers and not just as rule takers. And I think that the investment protocol, when it will be revealed to the world, will show that actually Africa could come with an African vision. I agree that this African vision still need implementation, and we have tools for implementation, but the world will see that we came with an African vision where actually the African people were put at the center, where climate issues were put at the center, global health were put at the center of our vision of what the investment framework should be. So let's push for that Africanization, and let's make sure that Africa really become an investment destination. Thank you.
Thank you. In my haste to, not disrespect people's lunch time, I was rather prematurely closing the session, and then I saw a hand up. I haven't taken questions. So this is having the dessert, but somehow you still have to go back for a little bite. So I'm sorry, but I'll allow, is it 3 questions? Let me see the hands first of all, and then we decide. So 1, 2, 3, any more hands? Okay, that's it. So we'll have the 3, and then afterwards, sorry about this, you just quickly come back on that, and then we'll wrap up on that, please.
Yeah, thank you so much, Mr. Moderator, and all the presenters for such an excellent insight. Coming to what Professor Hajar said, Africanization, I think I do agree with him, 100%. But one of the questions that I would like to put forward here is, how about thinking of a Bill of Rights, the private sector Bill of Rights for the FTCA? Do we have such a framework? So far, what we've got is from the government side. We haven't had the Africa private sector itself sitting and looking at this FTCA and be able to say, what Bill of Rights do we need to put in place that will speak to the Africanization? Yes, we need to learn from others to deal with some of the comments that you mentioned about imbalanced power from the big shots like America and others, but we need to contextualize and be real, speak to models that speak to ourselves. Thank you.
Excellent. Thank you very much. Next question. So the last one can just also go close so that we can just, are you the last person? Kindly, please, just go there.
Yeah, thank you. Thank you very much, moderator. I'm John Bosco Kalisa, the CEO of East African Business Council. Allow me to commend and appreciate the panelists in terms of their submission. Mine is not a question, it's just a suggestion while we are talking about investment protocol under CFTA. And also taking, and appreciate my friend from Stanbic, who shared the experience of East Africa and what we have done differently from other regions. One, that we have established one-stop center, not only to attract investment, but to offer aftercare service for investors. That has been lacking in Africa. You attract investors, but you don't follow them to see what they go through. So I think that is very important. 2 is the treatment of what we call cross-border investment. When you look at our investment protocol, we tend to give more incentive, more facilitation for FDI as opposed to African investors. That is Very wrong. That is very wrong. We need to build confidence and trust to our own African investor. That's where we need to start. Give confidence, give more incentive to African investors before you look into non-FDI.
Thank you.
Finally, allow me to invite all the delegates that will be having an East African Trade and Investment Forum in Uganda on around the 30th August to 1st September. Karibu sana in East Africa. We are ready to facilitate you, to give you comfort, come and sample the beauty of East Africa. Asantini sana.
The Secretariat will send you an invoice for that advertisement. This is a business forum after all. All right, go ahead, please. Yes?
Yes, thank you, Mr. Chair, for giving me the floor. I would like, first of all, to commend all the panelists for their brilliant intervention. So my point is related to Africanization of dispute settlement of investment in Africa. Because as we know, the disputes in the sectors of investment are most of the time settled out of Africa. And the reason is quite simple. Arbitration clauses in such contracts are proposed in model contracts. And they have international arbitration centers that put in place some these arbitration clauses. So my point is, how likely can we in Africa or under the AfCFTA develop our own model contracts? I think if we can get to that point, maybe we can at least try to secure investment settlement under AfCFTA.
Okay.
So
thank you very much. Again, in the interest of time, I'm just going to make it very short. Professor Mbengu, I think the first question may have been directed at you, but if anybody wants to take a bite at that. Yes, Professor Signy, the question of the Bill of Rights for investors.
Yes, thank you. That is a very important.
Please make it short. Please make it.
Very important question. We have worked with the World Economic Forum and numerous African and global multinationals to release a report, AfCFTA, a new era for global investment and business in Africa, and African head of state and CEO of global multinational and African multinational have also asked us to prepare a plan of action, so which is the next phase. Yesterday we had a meeting, a couple of hours yesterday morning, working with various corporations. So the work is in the making, and please join us. Do not hesitate to engage. I co-chair for the World Economic Forum, the Regional Action Group on Africa, with Chido, who is the head of Africa at WEF, and we work very closely with the AfCFTA. And as you know, Excellency Wamkele Mene, he wants to be certain that all those processes are Africanized. Myself, an African, I'm the lead author for that report.
Thank you. Professor Mbengwe, very briefly. Oh, no, I think the last question was on the code. Yes. Can we put together a model of African contracts? Florizel, do you want to take that? Being corporate counsel, I think the advice is, can we have model contracts that sort of compel these things? And of course, I mean, speaking from my own perspective, contracts are voluntary, so that's where the problem starts. It's hard to get parties to agree to things they think might affect their own investment prospects. And I'm saying, when they're adopting these contracts, the tendency is one to get to the deal and sign the contract. And if the sticky point is the dispute settlement clause, which says in the event of a dispute, let's go to the ICC in Paris, or let's go to London, or New York or somewhere, then the worry is, why should we allow the entire deal to collapse merely because we can't agree on disputes? And by the way, as Professor Mbengu said, dispute, like the legal aspect, is supposed to be a back end, not a front. The expectation is there will be no disputes. But as Sim said, it's inevitable. Dispute may still happen. However, if that is the reason the whole deal will collapse, I guarantee you, 2/3 of lawyers will say, it's okay, let's just sign this. Worst case scenario, we'll go to Paris. My worry, and I was just saying this from the perspective of how the AfCFTA Secretary General, his very hard work and the entire Secretariat through PAPS is now saving Africa, or trying to save Africa, some $5 billion every year in forex losses by reason of these changes of foreign currency changes. And so this could be a small component of it as well, where if we have all these disputes being resolved here, in fact, London makes millions every year attracting disputes from all over the place to be settled in London. apart from the fact that lawyers are kept at post, and I'll be happy to be one of those, it's also important because it saves money and it keeps money here. All these witnesses and other people who have to be transported and transshipped to other places to go and resolve one simple dispute, we can have that in Africa. So that's the reason. But it's a challenge because these things are resolved at the negotiating table, and it's a question of what, you want to say something? Yes.
I wanted, because I would be remiss if I don't
Go ahead, please.
inform the House of the creation of the dispute settlement body.
Correct.
That was
under the AfCFTA.
Yes, and it was actually created. It was endorsed in February this year, and this body actually will have 7 members from the continent, independent, professional, etc., to oversee the disputes. We already have 5. We're waiting 2. And it's a cross-section of countries.
Right.
One is South Africa, Egypt, Chad, Cote d'Ivoire, etc.
Right.
So the structure is there, right? So I just need us
for people to be clear.
Progress in Africanizing the process.
The process, yeah.
And getting African professionals who are going to be sort of the independent arbiters, for lack of a better term, should issues arise. It's a step in a longer process, I understand, but I think it's important that we recognize how far and commend the Secretariat, really, for the work that has been done to get us here.
Right. So we have a dispute settlement board, which is the first step. And worst case scenario, if you want to go arbitration, try and still do it in Africa so that we can achieve a lot. I saw you trying to insert yourself beyond the third person, and I would allow you, but make it crisp and very quickly, please.
Kabile, and I am a representative of the University of the Western Cape. So I hear you guys and everything that you guys are saying, but the most important thing that we are not fundamentally articulating is youth. And I come here as a youth representative of what actions are you guys taking to ensure that you're solving youth problems? Because obviously knowing that we are the leaders and we do have a say in also in how the country is being run. And also with experience in the education system, not much is being done. There's a lot of theory, but there's a lot less practical opportunities for youth. For example, how many graduates who finish 3rd year, 4th year, but who do 7 years but still end up nowhere? They're doing all of these applications, but they're not finding jobs. So my thing is, the point I want to raise is, can we also review the education system and also ensuring that each and everyone is represented? Thank you.
No, thank you. Anybody wants to take that? No? You want to comment on that? Very briefly, yes.
Great point. I think the Secretary General, at one of our very first engagement after being appointed as Secretary General, one of the things he mentioned in our collaboration, he had a couple of key focuses: young people, women. So how to empower them, and initiatives have been developed, including a draft memorandum of understanding now on, which is at the table of the AfCFTA Secretariat, on providing specific opportunity for young people, empowering them, building capacity, and ensuring that the skills that they will acquire are aligned with the skills of the future. And to finish on this one, it's at the heart of our work. With various institutions, for example, what's the impact of digitalization, of digital transformation on the future of work, and how to train future-ready leaders, knowing that between 2015 and 2035, 450 million young people will reach the working age, and only about 5% will have the most secure work, about 20% will have quite average quality work, and 75% will have to either create your own job or you have to innovate or disrupt the economy. So this is at the heart of my own work as well, and happy to further discuss later. But again, the Secretary General, at one of our very first engagement, he mentioned that that was his top priority, and he asked us to develop, to help or collaborate with him in developing a plan.
I can confirm that one of his very first speaking engagements, the Secretary General spoke at my university and spoke on a platform to a general community. But at the university platform and is very interested in curricular reform. He has mentioned to me on many occasions how he would like our curricula to reflect the AfCFTA. So that is true. I think there's that desire. Only yesterday I had a meeting with the Africa Youth Organization on the AfCFTA, and with another member of the Secretariat on behalf of the Secretary General. There's a desire. So rest assured
that's what I was going to mention.
Please
that
go
there's
ahead.
there's a women and youth protocol of the AfCFTA,
Right.
which is I think the key place where the kind of issues the young lady raised are being addressed. And I know that the only female head of state on the continent, President Suluhu of Tanzania, is the AU champion for that particular protocol of the AfCFTA. So there are meetings that are being held and things that are being done under that particular protocol.
Shall we put our hands together for our panel? The last 2 days for me just inspires me in one direction: the sheer gathering of expertise, the sheer gathering of knowledge on the continent, the fact that Africans are leading conversations about Africa and not being lectured by externals, the fact that, frankly, you see that Africa appears to have come of age and we have our people, and we do have people. That inspires me about the prospect of the AfCFTA, and I would like to thank people like Professor Mbengwe, who has worked very hard on the protocol, and the expertise of everybody else on the panel. I will just take the opportunity of going through again. Professor Flores Oliza, who's the CEO of the Corporate Council for Africa. Lerato, whom I've apologized to about the surname in case I didn't mention it right again. But Matabog, is it? Matabog here, yes, I got it now. Who's the Deputy Director for the Export and Import Promotion. I'm sorry, Deputy Director General for the Export and Import Promotion Council for South Africa. Thank you, well corrected. Professor Landry Signey, who is a Senior Fellow in Global Economy and Development of the Africa Growth Initiative at the Brookings Institute. And Professor Makani Moyes Mbengwe, who is a professor of International Law and International Organizations at the faculty in Geneva. And then finally, but certainly not the least, and before that, Mohan Vivekanandan, who taught me how to pronounce it, but I still got it wrong, who's a group executive of the DBSA. And then finally, Sim Chabalala, who is the CEO of Standard Bank. I would like to thank my distinguished panel for wonderful show of brilliance, knowledge, and expertise in the various areas of your calling, and thank you for sharing your perspectives. I would like to thank you for all the patience that I've been working tirelessly against to avoid a mass exodus. My name is Kofi Abuchi. Thank you. Thank you.
To the panelists, can everyone hear me? Thank you. Thank you for this brilliant conversation, everybody. I will give you a few minutes to just take a photo, a family photo right here on stage, and then I'll start giving information on what's to come with the rest of the day. There have been some changes. There was supposed to be a conversation with Kois Becker. If you've been following the program, it was probably on your event case app, but this has been canceled. So we're going to move directly to our lunch break. And before I let you go, I want to just bring your attention to what's coming after that. So we have to come back in this room or in the other breakout rooms for 2:30 because the breakout sessions will start at 2:45 sharp. So please make sure that you're back on time so that we can follow through with the program. So for the first set of breakout sessions after lunch, parallel session 1 is happening here in this room on transports and logistics to unlock the one African market. We have a parallel session 2 on textile and garments. And then number 3 is on the role of the Chambers of Commerce and the implementation of the AfCFTA. And finally, breakout session number 4 on product integrity and traceability. Now, after this first set of breakout sessions, which will last about, if I'm not mistaken, an hour and 15 minutes, there will be another set of breakout sessions, and there have been changes with these ones. So the parallel session number 1 will not take place in this room, but rather in breakout room 2. So there will be a swap with the session 2 that will be hosted in this plenary. So you'll have number 1 in breakout 2 on building synergies in investment, promotion and facilitation, and then session 2 that will take place in the plenary on promoting fintechs for cross-border trade, and then finally session 3 on making technical regulations work for African businesses is going to happen in breakout room number 3. I hope that was clear enough. If anything, you can always find assistance, outside of these rooms. There's some people that can point you to the right direction. But please make sure that you're back with us after your lunch break at 2:30, because we will resume with the first set of breakout sessions at 2:45. Thank you so much.
Hey. Two, yeah, hey, 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 yeah. Hey, yeah, yeah, ah, ah. 2, 1, 2, yeah, yeah, 1, 2. Two, two, yeah. Ah. 2, yeah. Hey, hey, yeah. Ah, yeah. 2, 2, yeah. 2, yeah. Hey, hey. 2, 2. Yeah, yeah. Hey, hey. Hey. 2. Yeah. 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 Hey. 2, 2, yeah. Hey, hey, hey. Ah. Yeah. Hey, hey, hey. Yeah, yeah, yeah. Hey, hey, hey. Yeah, yeah, hey. Yeah, yeah. Two, yeah. Hey, hey, hey. Two, yeah. Hey, hey, hey. 2, 1, 2. Hey. Hey, hey. Yeah. Hey. Yeah, yeah. Hey, hey. Hey. Yeah. Hey. 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 Yeah. 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 Hey. Oh, oh. Hey, hey. Hey, hey. Hey, hey. 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 Yeah. Ah. Ah. Hey. Yeah. Ah. Yeah.
vous avez eu un déjeuner agréable et que vous êtes énergisé, que vous avez plein d'énergie pour la suite de cet après-midi avec les sessions parallèles qui vont commencer dans quelques instants. Dans cette salle plénière, il va donc y avoir la première session parallèle. Et dans quelques instants, je vais inviter le modérateur de cette session à me rejoindre sur le podium pour la modérer. Je tiens juste à préciser pour les personnes qui font usage des outils de traduction qui sont disponibles. Alors, vous pouvez effectivement les utiliser. On vous invite à les utiliser. Il y a 3 langues, donc le français, l'anglais et l'espagnol. Mais je vous invite également à les laisser où vous les avez trouvés, car on a quelques boîtiers qui ont disparu tout au long de cet événement. Donc, on va vous demander, s'il vous plaît, de faire attention à les laisser à leur place. Vous avez aussi à votre disposition, normalement, sur les sièges, des magazines qui sont pour vous. Vous pouvez partir avec. Voilà, c'est un petit cadeau du sommet de la SLECAF. You also, I'm sure some of you have seen that we have left magazines on the seats for you. You can leave, it's grab and go. So it's for you to take with more information on what the AfCFTA Secretariat is doing. So feel free to take them home. And yeah, I'll be back with you in a bit just to introduce the next breakout session. And I am told that our panelists and moderators are ready for breakout session 1. Let me just remind you, the topic of the session, it's transports and logistics to unlock the one African market. And I'm going to now please ask you to welcome warmly our moderator for the session, Dr. Gainmore Zanamwe, Senior Manager, Intra-Africa Trade Bank, Afreximbank. Thank you very much, ladies and gentlemen.
Well, thank you very much. Ladies and gentlemen, good afternoon. And the struggle continued. We started a few days ago, and I think we all had some wonderful discussions. And this is also another important session, another important panel where we now need to focus on how do we get goods moving from South Africa to Egypt? The proverbial Cape to Cairo, or is it Cairo to Cape? We'll find out. And we actually want to zoom in on maritime, aviation, and we'll also allow the panelists to actually talk about some of the challenges that they've been experiencing in terms of trying to move the goods across the continent. And we will also try to see how best can we come up with the practical solutions that will make the AfCFTA work. Gainmore Zanamwe is my name, and I'm basically at Afreximbank, the African Export-Import Bank, which is your bank. And I would like to probably highlight that transportation has always been a key sector that we've been working on at Afreximbank. We have actually put a number of interventions to support the transport and logistics sector. We know that the main problem we are having is that the bulk of the goods are actually moving by road. And we want to see if we can look at putting some of the goods that are moving by roads through probably maritime, through rail, and these are some of the things that we need to look at. But logistics is also another key component. So without much ado, I would like to call our able scene setter, patient Sabia Tambwe, to basically come on stage and set the scene so that our panelists can then start sharpening their tools. So Mr. Sabia, please, the floor is yours, and take us through. So can we give him a round of applause? Yes, yes.
Ladies and gentlemen, good afternoon. Mesdames et messieurs, bon après-midi. Molweni, habari za mchana. So, just a quick one. I'd like you to keep your interpretation equipment because I will mix French, English, and Swahili. So, everybody will be comfortable with that. Thank you, Dr. Genmo. Let me start by express my appreciation to African Continental Free Trade Area Secretariat, and in particular to His Excellency Wamkele Mene, the Secretary General of AfCFTA, and all the team of AfCFTA. It has been asked to me to talk about transport and logistics sector. What are the challenges? But I just introduce the panelists. I would not like to say more, but if you can just watch with me this video that will summarize what I will say, and I will come to the conclusion. Thank you very much. Technical team, please. Video.
African countries have unanimously realized that Africa's development depends on its total integration. This is the backbone of the African Union's Agenda 2063, the imperatives for the new African vision. This decision was taken at the African Union's Golden Jubilee Summit in June 2012. This strategic framework for the transformation of the continent over the next 50 years, which is based on inclusive growth and sustainable development, inspired young Africans to create a support structure, African Desk, based in Dar es Salaam. African Desk is a support structure between development actors and continental institutions dedicated to building capacity to achieve the goals of African integration. African Desk works to promote and improve communication routes on the African continent. The improvement of the various corridors linking the ports to the landlocked regions of the continent is an integral part of the efforts provided by African Desk. The functioning of ports, roads, and railways is scrutinized by experts in the field. Infrastructures that need improvement are exposed and proposed to companies that can intervene within acceptable timeframes so as to not delay the smooth delivery of goods from one country to another. African corridors are also a focus for African Desk. One thing is certain, Africa's corridors are breaking down barriers and ensuring equitable growth. The challenges surrounding corridor development are more in view with the creation of the FTAA, the African Continental Free Trade Area, which is pushing for improved corridor development in all its aspects. African Desk also looks at customs modernization, trade facilitation, technology, and the digitalization of freight transport systems. African Desk, in partnership with African universities, promotes and popularizes the objectives of AfCFTA, which spearheads African integration. Training modules for government officials and private sector economic operators are provided on the following topics: the AfCFTA e-tariff, customs and trade facilitation, elimination of trade barriers, creation of the African Common Market, digital, negotiations, creation of small and medium-sized enterprises, youth and women employment, all of which are at the core of African Desk's work. Ultimately, high-quality and sustainable infrastructure is needed. Transport infrastructure for border trade, communication infrastructure for e-services, energy infrastructure to run industries, water and maritime infrastructure for transport, logistics, and sanitation. African Desk, your partner in integrating the continent and building the Africa we want to build.
Thank you. I'm Mr. Patient Saïba Tambwe, Executive Chairman of African Desk. African Desk, which is a Pan-African institution. We are in consultancy, advisory, and implementation. And we are based in Dar es Salaam, Tanzania, but working across all Africa. Be ready, I will talk in French now. Je suis sûr que 80% des participants à cette conférence ou à ce forum, je disais que je suis sûr que 80% des participants à ce forum ont tous voyagé par avion. More than 80% of participants of this forum traveled by air. But you must know how tough it was for you to travel from your origin to Cape Town, which is our final destination. I will just give you a few examples. Do you know that if you have to fly from Kampala to Mwanza, Kampala is in Uganda, Mwanza is in Tanzania, but near Uganda. You can't fly straight from Kampala to Mwanza. You have first to fly from Kampala to Dar es Salaam, and from Dar es Salaam to Mwanza. It means when we are talking about air sector in our continent, it's still a very big challenge. L'espace aérien africain est encore fragmenté autant que l'économie africaine. Et pourtant, il y a déjà des décisions qui ont été prises, notamment la décision de Yamoussoukro en 1999, qui a demandé à ce qu'on puisse libéraliser l'espace aérien africain, que l'espace aérien africain soit unique et qu'il n'y ait pas 54 espaces aériens. Et je pense que les Européens, ils ont déjà réussi ça. Vous pouvez voyager soit par exemple de Bruxelles à n'importe quelle destination d'Europe, soit de Lille à n'importe quelle destination d'Europe, et vice-versa. Pourtant, en Afrique, il est encore difficile de pouvoir ouvrir les espaces, ce qui rend évidemment moins compétitive l'industrie de transport aérien au niveau de notre continent, l'Afrique. Ça, c'est un challenge. Le deuxième challenge, I was saying that airspace of Africa is still fragmented as the economy. Because you can't travel from, for example, from Kampala in Uganda to Mwanza in Tanzania, which is close. You have to go first in Dar es Salaam, the capital city, and from there you have to go then in Mwanza. If you have to fly straight from Kampala to Mwanza, it can be maybe 30 minutes flying. But for that, you might spend even all the day to travel. So we need really to open space. Je voudrais faire une réflexion aussi, et ça va permettre évidemment, dans le panel, nous allons encore approfondir. Il est très facile d'avoir des partenariats entre les compagnies africaines, les compagnies aériennes africaines, avec des compagnies étrangères ou celles qui sont en dehors du continent, mais très rarement, on a vu des compagnies africaines entre elles faire le partenariat. Aujourd'hui, je salue le partenariat entre Ethiopian Airlines et Askai. Ça, c'est une très bonne chose et on voit combien c'est vraiment en train d'aider, ce partenariat est beaucoup en train d'aider les passagers aériens au niveau de l'Afrique. Mais on doit aller plus, on doit aller plus loin. Regardez, il a existé le partenariat, je ne sais pas si c'est déjà rompu, on a annoncé la rupture. Il a existé le partenariat entre KLM Air France avec Kenya Airways. Why can't we have a Pan-African Air Company? On a tenté l'expérience de Air Afrique, mais ce n'est pas allé loin, et c'était essentiellement les pays de l'Afrique de l'Ouest. But I think we need a Pan-African Air Company. Look, what if Ethiopian Airlines, South African, Kenya Airways, Rwandair, Air Côte d'Ivoire, and so on, what if they come together and create one company? So that company can compete with KLM Air France, with Emirates, with Air China, and so on and so on. Mais dans le même temps, ces compagnies ne vont pas mourir. We'll still need all those companies regionally. Rwanda can fly, Ethiopian Airlines can fly, but together they can create one company, and that company will be very strong worldwide. That's one of the challenges, and I think that what we need is really to open the sky of Africa and to make Africa as one space, one airspace. Coming to maritime sector. Doctor, I will just illustrate it with a small example and I will conclude. Look at this map. Africa is surrounded by water. Indian Sea, Atlantic Sea, and Indian Ocean, Atlantic Ocean, and Red Sea. Do you know that only non-African shipping lines are the ones who deserving all Africa? If you have to move your cargo from Mombasa to Dar es Salaam, for example, which are very close, you have to use Maersk, Sema Segem, and whatever you need. It's not possible that we continue dreaming to build a strong Africa while we are still depending on other people to transport our goods. If you have to go, if you have to go from Cape Town or East London just up to Walvis Bay, it will be those conglomerates that they have to move your cargo. Of course, Dr. Gedmore said that we'll be using more road transport. Yes, that is a fact. But to move heavy cargo and a big volume in short time, we'll be needing maritime sector and railway, because that will be good for cost. The cost will be low. So, by conclusion, what I need to recall is what? We still have some example in Africa. Africa used to have shipping lines. South Africa had to have shipping line. Cameroon used to have shipping line. Democratic Republic of the Congo used to have shipping line. But again, those was fragmented companies. We need to revamp and to create a Pan-African maritime shipping line. It's not impossible, my sisters and brothers. Look, I was talking about the ports. Actually, all the ports are owned by Bolloré, by all those big conglomerates. So, not only they transport our good, but also they control all the ports. They put the price what they need, and in the manner they need. So, we need Africa private sector to raise up and to invest also in those infrastructures, to get the ownership, for example, or the shareholder of the management of all those big ports. And also, and I appreciate that Afreximbank is really pushing the support of investment in many sectors, as well, and among others, the transport sector. I think Afreximbank should also try to push the private sector of Africa to invest in maritime sector. That is very important, not only in maritime sector, but also in air sector. In conclusion, let's just say the creation of a Pan-African air company, the creation of a Pan-African maritime company or shipping line, it's possible and we have to do it so that we can be competitive vis-à-vis our economic bloc. Ladies and gentlemen, thank you. Asante sana. Mungu awabariki.
Thank you very much, my friend. I think since you came to Cairo last time, I didn't know that this is what you were planning for Afreximbank, but we are up for the challenge.
That's good.
I think the Pan-African airline is going to be established. Afreximbank is ready to finance. Shipping industry is another sector, and we basically own less than 1% of the shipping industry. Who own all these goods that are moving from Africa abroad? These are our goods. Why can't we do more in terms of actually investing in the shipping industry? I think these are some of the issues that we really need to address. Thank you very much. And let me now call upon my you can sit. Let me call my other panelists so that we now get to the key substantive issues to see how best we can actually look at the challenges and try to find the practical solutions where the private sector, the government can actually work together to create an efficient and effective transport and logistics system that will actually facilitate intra-African trade under the AfCFTA. So I would like to call all our panelists, please come on stage and let's basically start the discussion. So whilst they are coming on stage, we would like to ensure that those that have got questions, get your questions ready. We would like to actually ensure that you ask those very difficult questions. We've got a capable panel, so they'll be here to actually address all your questions. We also want you to actually focus on providing some solutions. The solutions can come from the panelists, but they can also come from you. We want this to be a dialogue. This is our Africa, so we really need to work together to ensure that we have effective transport and logistics systems that can support the AfCFTA. So whilst they are taking their seats, I would like to basically briefly start by introducing them, and then we get straight into the discussion. I will probably start with some of the key. I think we have already heard from Mr. Patient Saiba Tambre, and you will also be coming in and contributing. We also have Geoffrey White from Agility, the CEO for Agility. You'll be speaking to us on the wonderful work that is doing on warehouses, which is a critical component on logistics. We also have Dr. Paul Adaliku, who is the Secretary General of MOCA, and Secretary General, welcome. And we are looking forward. I think you heard the issues. The maritime sector in the continent needs to actually be improved, and you've been doing some wonderful work in Western and Central Africa, so we look forward to hearing some of those practical solutions. Aviation was always mentioned, and it's a sector where we came up with a number of documents, the SATAM, Single Aviation. So how can we move to implement it? I think the Secretary General of the African Airlines Association, Mr. Beth, will basically help us to see how can we fly better. I flew all the way from Cairo. I will not even tell you the routes that are used, but I need solutions. Then we also have an important sector that really needs to be moving the bulk cargo, the bulk goods that are actually currently moving by roads, but they don't belong in the roads. So we would like to hear from Transnet, what is it that they've been doing to actually develop the railway system in the continent. The railway system in the continent, except a few countries, is actually in a dilapidated state. We really need to call a spade and focus on what needs to be done. So Ms. Yolisa Kani, the Chief Business Development Officer for Transnet, will actually help us to unpack that. Then we also have Dr. Daniel Macaulay, who is the chairman and CEO of McDan, which is also another important entity which is doing a lot in the logistics and multimodal transport business. And we also have the Secretary General of the African Shippers Council, Dr. Ogola Giscard Lilian, and we had some engagements with the Shippers Council, I think a few years ago. One of the challenges they actually posed to us is that we actually probably need to establish an African bank which focuses on financing the maritime sector. I think we would like to hear more on how we can move and take that from the talk to actually operationalization. So we'll be looking forward to that discussion. So let me now start with you, probably agility. There's a lot of things that are going on in terms of people from outside Africa, people from the African continent. They want to come and set up shop. They want to establish business. But the infrastructure is not always there. What is probably, from agility's perspective, what are some of the challenges that we are seeing in the logistics space, and what is agility doing to actually facilitate those foreign companies to come and easily set up shop in Africa, as well as other manufacturers or producers from the continent? Please, the floor is yours.
Thank you very much, and it's a pleasure to be on the panel. So Agility is a $7.5 billion Kuwaiti publicly listed company. And our Africa strategy specifically is to build a network of warehouse parks across the continent. So we're not addressing all the logistics issues around moving goods on the continent, but we think that actually having proper first world infrastructure and first world warehouse parks is actually a huge enabler of trade flows and the ability for companies to go. So we started this several years ago. We're open in Ghana, we're open in Cote d'Ivoire, we're open in Mozambique, we're under construction in Cairo in Egypt, we're under construction in Nigeria, we're hopefully adding Kenya soon, Morocco soon. And the concept is build a Pan-African network of warehouses that is ideally aligned with the movement of goods as the movement of goods eases up from country to country and region to region. Now, interestingly, if I look at empirical data and what we actually have in our existing warehouses that are already open and leased, firstly, each site is ideally a hub and a center for commerce and attracting foreign direct investment and supporting SME development. So ideally, our projects are 500,000 square meters per location. That's the same as about 80 football pitches, to give you some sort of concept. So we buy a big piece of land, and then we build warehouses. And very critically is we commit the capital, and we build the warehouses, and then we look for customers. We can build them specifically for customers, but we identified that two of the big constraints to doing business in Africa is how long it takes to do anything, and the lack of capital that's available. So we're funding the capital and building the warehouses, and we complete them and try and match supply and demand, sometimes more successfully than others. But so, for example, you can come to an Agility warehouse park on a Friday, sign a lease for some space, and you can move in on Monday morning. So what we're doing is taking away what would normally be a 2 or 3 year process to build a warehouse, et cetera, et cetera. So we've got a concept of build and they will come. Now, interestingly, if I look at my existing customer base, so this is the people who are actually already tenants, we've got about 50% of them are multinationals, big international companies coming to do business in Africa. And what we do is we make their process much easier and much quicker because, as I say, they can come, they can look, they can sign a lease and move into a warehouse the next week. So their mobilization into African markets is much quicker. The other sector we have, the other 50%, is SMEs. And interestingly, it's SMEs that want to get into proper first-class facilities. They want to have the security that comes with that. And there was a recent study done where they were saying we've saved 50% of our losses on inventory have disappeared since we moved into a first-class warehouse park with proper security. Proper warehouse parks brings proper efficiency to your operations. But the overriding message probably today from both of those customers, and just one last point on the customers, the customer mix is also interesting. If I look, it's 50% SMEs, 50% multinationals, but actually 40% is doing traditional warehouse storage and distribution, 60% is doing packaging, processing, agri-processing, added value to imported goods, etc. So some sort of commercial business rather than traditional storage. But the big takeaway from all the existing customers, and this isn't a survey, this is just feedback from people who are with us currently, is our business is constrained because we cannot move goods regionally and across border. So a Ghanaian company in our Ghanaian warehouse says, my market is 35 million people in Ghana. It's incredibly difficult for me to include Togo and include Nigeria and include Abidjan because I just can't get efficiently across the border to support those markets. So you're constraining that company to a market of 35 million, when in actual fact it should be a West African market of 235 million people. So I think that's really fundamental. And we get the same from both multinationals and SMEs saying we want to expand and do business regionally, but it's incredibly difficult. Our concept is to have warehouse parks in all the major cities so that you can move goods from one to the other. So we're a sort of first runner for the Continental Free Trade Agreement, and we believe in it, and we believe in the impact it will have hugely. The last final point is, which is sort of adjacent to that, is I have numerous conversations with companies saying, okay, we're coming to set up in Africa and we'll come to Ghana or Cote d'Ivoire or Mozambique to set up distribution. They look at how difficult the process is and they say, actually, we're not going to come now, we're going to sit on the fence and still operate out of Europe and ship to each individual country. So as one by one, the tariffs come down, the ease of doing business gets simpler, the flow of goods gets more efficient, there is a massive market potential to grow as the 1.4 billion market evolves.
Thank you very much. I think that's excellent. And I think in the continent, we always have this challenge. Anything that we try to do, it takes forever. And even if we are doing nothing, it also takes forever. But I think agility is now come with very practical solutions on how to help people who want to do business. But he highlighted a very important issue that, okay, goods can actually be produced, processed, manufactured in these warehouses. How do you then ship them throughout the continent? Let me quickly jump onto Transnet. So you had the challenge. The goods are being manufactured in South Africa, in Ghana, in Egypt. And we've always been talking about the need to have even the Cape to Cairo railway. It has not been put in place. In South Africa, Zimbabwe, Zambia, DRC, we've been talking about the North-South corridor. The railway is still dilapidated. So I want to hear from Transnet, what are some of the challenges really affecting the railway and the ports, and what is Transnet doing to address these issues? We want the AfCFTA to work. So the challenge is to you, Transnet. So over to you, Yolisa.
Good afternoon, and thank you so much for that question. I mean, how much time do we have?
In Africa, we always time, but we will limit it to 3 minutes.
Look, I'll start with the obvious. I mean, we have a deteriorating infrastructure. And in the case of South Africa, I mean, that's something that started 30 years ago. I mean, it's a policy decision that was taken that there wouldn't be any, or there will be less investment on rail infrastructure, including maintenance. And 30 years later, we are experiencing the impact of that. That's number one. And as a result, instead of the road hauliers becoming a complementary service to the rail freight industry, they've become a tough competition, right? If you look at the market share in terms of the goods that are being transported via rail, and that's a direct result of the ailing infrastructure, we're looking at about 20% or less, right? And I mean, it goes without saying that bulk commodities cannot be and shouldn't be on trucks, they should rather be on rail. That's number one. That then creates another problem for the rail authorities, which is a weakened balance sheet. So if the volumes were there, the balance sheet would be stronger and therefore would be able to invest in more infrastructure. What we're dealing with now is the basics, which is maintaining what is already there. We haven't even started talking about expanding the network, right? And as Transnet, when we look at opportunities, we're more likely to look at rehabilitation as opposed to expansion because there's just no, our balance sheet is weakened, and that's something that's known by everybody. It's not something that that is for me to hide. Policy reform is another problem. If you're talking regional integration and you're talking different kind of gauges, then you have a problem because you're going to struggle with integration, you're going to struggle with interoperability. Capacitating our institutions, right? If you look at the Southern Africa Railway Association, it's not for a lack of trying, but the real issue, amongst other issues, is that there is no capacity to do the work that they intend to do, right? The aging infrastructure, including the non-existence thereof. If you look at the countries that are closest to South Africa, all of that railing stock is coming from South Africa. None of it is coming from Zimbabwe, none of it is coming from Zambia, and none of it is coming from the DRC. And it's an opportunity for us, but I mean, if you flip it on the other side, is that you can't be a railway authority and not have rolling stock, right? And I suppose, I mean, I could go on forever. The last issue or challenge that I would like to pose is the fact that I don't think we've actually had I suppose, a deliberate conversation about why are the concessions failing? Why the concessions are working out? I mean, we've got East Africa that has tried. We're also getting into that space as South Africa, but I don't think we've actually had a conversation about what it would take to make a concession work. Because again, we can't be a solution to every problem. It's impossible, right? And then you ask us a question, you ask me a question, what are we doing about it? I just want to say first and foremost, Transnet is open for business in Africa. What we've done is, as opposed to being the big Spartacus company with all the solutions, we're basically saying we'll offer what we can, but not all the solutions should come from Transnet. One of the things we've decided to do is to form part of SA Inc. So when we see an opportunity, it's not an opportunity for just Transnet to solve. We go in with the private sector, we go in with the DFIs, and we'd rather offer a solution as opposed to one piece of the puzzle, which is the freight and logistics solution to the problem. What else are we doing? We are speaking to our neighbors. We're speaking to Botswana about revitalization, that Botswana corridor, the Botswana link between Botswana and South Africa. We're speaking to Swaziland about doing the same on the Swazi rail link. But the most important project that we're working on currently is the DRC to South Africa North-South rail corridor. I think two important milestones that we've achieved in that regard is that the railway authorities have all agreed that we need to revitalize that corridor. It has a potential of 1 million tons without fixing the infrastructure, 5 million tons if you fix the infrastructure. It's currently doing 500,000 tons per annum, if not less, right? The second one is that we're at a point where we're speaking to DFIs, they have an appetite of assisting with developing a bankable feasibility study. And I suppose once we're done with that, it goes without saying that we're well on our way in terms of revitalizing that corridor. So I'd like to hold it at that. I've answered your question on what the problems are. I think there are no knowns, and I've also spoken just a little bit about what we are doing in that space. Thanks.
Thank you very much, my sister. I think you and I need to talk. After this, we really need to structure a transaction on railway and start getting it implemented. So I think this is very important. The railway is actually very critical in terms of the movement of goods, and we really need to focus on that one. And one of the issues that we've also seen in the railway is basically you can put the system, but the harmonization of the gauge is a very fundamental issue that we really need to look at. And also, ensuring that there is operational efficiency. I think that is also a key issue. And in Africa, there's always a challenge that we put infrastructure, but there are other people who will just remove that piece of railway. And so there are also safety and security issues. A mindset change is required, but we'll get there. Let me now move away from rail straight now to the maritime. I think these two sectors, they actually complement each other. I want to start with Dr. Adaliku, Secretary General, Maritime Organization for West and Central Africa. You have heard the issue about maritime, and I understand that you have identified a number of problems and challenges affecting the maritime sector. Can you briefly tell us about what MOCA has been doing to try and address some of those challenges? Because UNEC has just done a study which has actually shown that there's a lot of potential in the maritime sector. They are saying for us to be able to actually facilitate the implementation of the AfCFTA, we actually need about 135 vessels worth 4 billion. So the opportunities are there. Where are we getting it wrong? Probably you have got the answers. What are the challenges and solutions for the AfCFTA?
Thank you very much, Dr. Genmore. I'm quite delighted to have been invited to this forum. I am the Secretary General of the Maritime Organization of West and Central Africa. This organization has been in existence for 48 years, founded by the heads of states of all the countries in West and Central Africa, dealing with maritime issues, security, shipping. As a matter of fact, the Union of African Shippers Council, whose Secretary General is here, is an organ of MOCA. We also have the Africa Ship Owners Association, ASLA, located in Cotonou. It's also an organ of MOCA. So we deal with all maritime issues on West and Central Africa sub-region. One of my mandates is to transform this organization into the Africa Maritime Organization. We are a small version of the International Maritime Organization, hoping to transform into a bigger organization known as the Africa Maritime Organization. I'm delighted to have been here in the morning session where the first panel spoke on the issue of funding, how to provide funding to support infrastructure on the continent. You cannot talk about AfCFTA without providing adequate resources to fund the infrastructure, including vessels, including the rail lines, to support trade among African countries. So I was quite delighted with the presentations that were made at that session. Let me talk about other challenges that we see affecting AfCFTA in the maritime sector. There's the issue of high freight rates. The freight rates among African countries are quite different, and these are based on government policies. I would have loved to see the Ministers of Trade and Investment, the Ministers of Transport and Maritime Affairs at this event, but it is a stepping stone. Hopefully in subsequent editions, they will be invited. So at my organization, my board, my governing council are the 25 Ministers of Transport and Maritime of these countries. I report directly to them through a minister who is the chairman of the council. And so talking to MOCA, you are talking to 25 countries at one stop. We see issues of inadequate storage facilities. George White of Agility talked about building storage facilities. We have 20 coastal countries and 5 landlocked countries in MOCA. Now, how do the landlocked countries deal with storage facilities in their respective countries? The case of Nigeria, they have been able to build inland dry ports. In talking to the ministers of transport of Chad, Niger, and Burkina Faso, they want to look at the Nigerian model in building inland dry ports because they don't have access to the sea. So where they can store their goods, both for incoming and outgoing. So the issue of funding the establishment of these inland dry ports is very critical. Low fleet ownership, another critical issue. On the continent of Africa today, there isn't a regional or continental shipping line. The continent is dominated by all the big shipping companies, as our introductory speaker had mentioned. Now, how do we address that? Now, in the case of Nigeria, we have to look at best practices. Nigeria has established what they call Cabotage Vessel Financing Fund, CVFF, Before coming to this position, I was Director of Maritime Safety and Security in the Ministry of Transport of Nigeria. There is $500 million in that fund today, awaiting disbursement to the local private sector to enable them acquire fleet, knowing that this is a very expensive venture. When this goes into effect, hopefully by the middle of the year, we'd like to see other African countries look at that model to see how they can finance the acquisition of vessels in their respective countries. And I'm sure that after this discussion, Afreximbank would like to engage with you also to see how we can address this. Now, the 25 countries have also come together to establish the Regional Maritime Development Bank. Now, this has been in incubation for about 10 years. In the next 60 days, we are launching that bank with headquarters in Nigeria. The leadership of the bank has been put in place. There's a president allocated to Nigeria, vice president Cameroon, vice president Cote d'Ivoire. Once that management system is inaugurated in the next 60 days, the bank will come into operation to provide single-digit interest loans to players in the maritime sector to acquire fleet and deal with maritime issues in their respective countries. Again, we are in discussions with AFDB in Cote d'Ivoire, where our headquarters is domiciled, and would like to also engage with Afreximbank to see how they can take the 49% shares allocated to the private sector in this bank in order to boost the capital base to allow Africans own fleet that will compete on a regional basis or even on the continental basis to address the issues of moving goods between African countries and each other. Now, there's also the issue of absence of shipbuilding and ship recycling facilities on the continent. There's weak legal frameworks, there's development of port infrastructure, as well as piracy, banditry, and safety and issue of security. Now, you cannot talk about African trade when we have to deal with issues of piracy. If goods are moving from Kenya or Egypt to South Africa and the vessels are attacked in the Gulf of Guinea region, of course, it will slow down the whole concept of AfCFTA. Well, how are we trying to deal with this issue of piracy on the continent? In the Gulf of Guinea, for instance, Nigeria is a big player in that area. They have set up what they call Suppression of Piracy and Other Maritime Offenses Act. This is a law that allows for principles of hot pursuit. Now, recently, the countries of Togo and Cameroon have similarly enacted these laws signed by the presidents of their countries, and MOCA, in collaboration with the International Maritime Organization, is organizing a regional conference on dealing with piracy issues and harmonization of this legal framework so that if there's any criminality in West and Central Africa, the same law will be applicable to these individuals. To date, these three countries have captured, prosecuted, and imprisoned pirates because the existing national laws are not meant to address issues of criminality at sea. So special laws have been enacted under this act to deal with the issues of piracy and insecurity at sea. So these three countries have put in place this framework, and we're looking to escalate and use their models for the rest of the 23 countries that are members of MOCA. It's also a good example for other African countries to learn from. Now, we have also seen that many countries under AfCFTA said, okay, let foreign vessels come and flag on the continent. When they flag their vessels in Africa, like in Liberia, which is #1, yes, they generate revenue from it. That revenue goes where? It goes back to Europe. It goes back to other places. It is not a good model. What is the return on investment for the African countries? So we're looking to see how Africans can come together and establish regional vessels, regional shipping companies in order to keep the capital on the continent. Perhaps I will pause here for a moment. There are a number of other issues I would like us to discuss, but let me pause here for a moment. Thank you very much.
Thank you very much, sir. I think the issues that we've highlighted, they are very practical. We really now need to focus on investing in the vessels. We should own those vessels, and they could be international lines. They can call to our ports, but even for the regional distribution, our vessels from Nigeria, from Sudan, we really need to get into that space. And Afreximbank has been thinking about that. So what you mentioned about converting MOCA into a continental, basically, entity, The bank is with you there. We would like to probably invite you to Cairo. We're actually working on having a maritime conference before the end of the year to look at some of those issues. So let's work together. We need to move. So let's stay on the sea. The high seas is very interesting for me now, and there are solutions that are coming. So now to you, Mr. Lilian, the Secretary General of the Africa Shippers Council. You have heard the challenge from your colleague. You are also collaborating. Can you highlight some of the key challenges that the African shipping industry is facing, and also tell us what exactly are you doing to ensure that these issues are addressed? I want you to also focus on specific policy issues that we want the AfCFTA and our ministers for transport to also take into account, because we are now working on developing regulatory frameworks that should address some of the challenges. Over to you, sir.
Merci, Monsieur le modérateur. Avant toute chose, j'aimerais, comme mes prédécesseurs, respecter tous les protocoles établis et remercier fermement la SABC de nous avoir conviés donc, à cette session très importante. Alors, l'Union des conseils des chargeurs africains est effectivement une structure technique greffée à l'Organisation maritime de l'Afrique de l'Ouest et du Centre, dont le secrétaire général est juste à côté de moi. Et les chefs d'État donc, de l'Afrique de l'Ouest et du Centre nous ont donné, il y a une quarantaine d'années, une mission. C'est celle de s'occuper des opérateurs économiques importateurs, exportateurs de marchandises, en facilitant donc toutes les procédures de transport, en les accompagnant dans les formalités, les formations, l'information et tout ce que nous pourrions mettre en œuvre donc, pour rendre donc, le transport de marchandises fluide, donc d'un point A vers un point B. Il y a quelque chose que je voudrais quand même préciser avant de commencer à répondre à vos questions, c'est qu'on parle beaucoup dans le cadre de la SVCAF et depuis que nous sommes là, des marchandises qui doivent se déplacer d'un pays vers un autre. Mais généralement, ce qu'on oublie de souligner, c'est que pour qu'une marchandise se déplace d'un point A vers un point B, il faut qu'il y ait quelqu'un qui initie donc, cette opération. Et ces personnes qui initient ces opérations sont les chargeurs. Et c'est de ces personnes que nous nous occupons en essayant donc de trouver des solutions qui pourraient faciliter donc, leur commerce et leurs activités. Avant de répondre à votre question, je veux également vous faire un petit récapitulatif d'une étude qui a été menée par l'Union africaine, je pense dans le cadre de la mise en place de l'agenda 2063 sur l'économie bleue, où on a essayé d'identifier quels étaient les différents problèmes qui se posent donc dans le domaine des transports et de la logistique. Alors, 7 points sont ressortis de cette étude en conclusion. Donc là, je parle du domaine effectivement transport et logistique. Le premier, c'était donc l'application des conventions et accords sur la libre circulation des biens et des personnes. Le deuxième point, c'était la modernisation des ports. Le troisième, le développement, la modernisation et la gestion des corridors. Le quatrième point, la création de compagnies de transport maritime africaines et la création de compagnies de cabotage, on en a parlé ici. Ensuite, on a parlé de la formation des acteurs du commerce. Le sixième point, la sécurité sur les côtes ouest africaines, du moins sur les côtes africaines. Et le septième point, c'est la gouvernance et la coordination des activités. Ici, je viens de résumer tous les problèmes que nous avons et sur lesquels nous travaillons donc pour essayer de rendre le commerce en Afrique beaucoup plus dynamique et relever donc tous ces défis. Alors, qu'est-ce que l'Union des conseils des chargeurs fait sur ces différents points? Vous savez qu'il existe un certain nombre de conventions internationales qui ont été signées, mais qui ne sont toujours pas appliquées aujourd'hui, ou du moins dans leur intégralité dans nos différents pays. Dans l'espace Afrique de l'Ouest et du Centre, que je maîtrise le mieux, nous avons par exemple 5 pays sans littoral. Et aujourd'hui, il existe une convention qui a été prise, je pense, depuis 1963, et qui s'adresse donc aux pays sans littoral, c'est-à-dire que le passage de leurs marchandises, donc des pays voisins par lesquels ils font venir leurs marchandises, vers les pays donc sans littoral, Et il est regrettable de dire aujourd'hui que c'est plus facile pour ces pays, ou moins c'est moins cher pour ces pays, de faire venir un conteneur de la Chine vers les ports qu'ils utilisent, que de faire partir le conteneur donc, du port du pays voisin vers leur espace continental. Parfois même, c'est 2 fois plus cher. Comment est-ce que vous expliquez cela? Simplement parce que les conventions ne sont pas appliquées telles que cela devrait être le cas. Et ça fait partie de notre travail. Donc, nous travaillons justement déjà à essayer de former ces opérateurs économiques qui, pour la plupart dans nos pays africains, sont des petits commerçants, donc des chargeurs occasionnels, parfois nous les appelons comme ça, parce que l'Afrique de l'Ouest et du Centre est dominée donc par des petites structures, des personnes qui parfois ne connaissent même pas les conventions, les règles donc, du transport international, qui ne savent pas comment faire une importation, qui s'appuient parfois sur des personnes ou même essaient de faire des transactions, mais ils n'ont pas les rudiments de base qui font que parfois, lorsqu'ils arrivent à un point, ils sont bloqués et ils perdent même leurs marchandises. Ils perdent un investissement peut-être qu'il a eu à économiser pendant, je suppose, 1 an ou 2 ans, je ne sais pas. On sait comment ça se passe chez nous en Afrique pour lancer une affaire. On a rarement des crédits, donc parfois, effectivement, c'est des économies, des coopératives qui se mettent en place. Donc, toutes ces personnes, nous essayons effectivement de leur donner les rudiments nécessaires pour qu'ils puissent organiser leurs affaires, pouvoir donc déplacer leurs marchandises d'un point A vers un point B avec les rudiments donc du commerce international et puis en essayant de faciliter également donc les transactions donc tout au long du corridor. Il y a également donc des actions que nous menons donc au niveau des ports. Donc comme le secrétaire général a dit tout à l'heure, au niveau du système au Maroc, il y a des organes techniques, notamment donc l'association de gestion des ports de l'Afrique de l'Ouest et du Centre. Au niveau de l'UCCA, nous menons un certain nombre d'études sur les données que nous récoltons sur le terrain auprès de nos opérateurs économiques. Et avec ces études, donc, nous faisons des notes à des gouvernements, aux ports, à pas mal de structures sous-régionales ou avec lesquelles nous travaillons pour essayer donc d'améliorer un certain nombre de problèmes que nous avons, essayer de relever un certain nombre de défis. Et donc, tout ceci va donc dans l'amélioration des conditions que nous avons dans les ports parce qu'il nous revient de la part des opérateurs économiques qu'il est parfois difficile effectivement de sortir à cause des tracasseries portuaires ou parfois à cause donc des ports qui ne sont pas encore aux normes. Mais bien évidemment, il y a quand même un travail qui est fait là-dessus, il faut le reconnaître, mais il y a encore beaucoup de choses à faire. Donc l'UCCA, avec le système au Maroc, essaie de travailler donc, pour essayer d'améliorer les ports que nous avons. Nous dénonçons certaines choses, comme l'a dit tout à l'heure M. Saïba, par exemple, les concessions portuaires qui sont parfois des avantages donc, des chargeurs locaux, essayer de voir comment est-ce que nous pouvons aller, par exemple, vers d'autres modèles. Il y a également le fait que aujourd'hui, les ports, on ne peut plus les considérer comme des espaces clos parce que, comme je vous ai dit tout à l'heure, nous avons par exemple, au niveau de l'espace Afrique de l'Ouest et du Centre, nous avons 5 pays sans littoral. Le port aujourd'hui, il se prolonge dans les corridors, sur les corridors. Et les corridors aujourd'hui, il y a un travail énorme que nous essayons d'abattre là-dessus, c'est que vous pouvez partir, je vais prendre un exemple du Cameroun vers le Tchad ou du Cameroun vers la Centrafrique, et à une certaine époque, vous allez rencontrer plus de 100 barrières. C'est difficile de faire du commerce comme ça. Donc nous travaillons effectivement à la levée des barrières tarifaires et non tarifaires pour qu'au niveau de ces corridors, nous ayons une fluidité donc, du passage des cargaisons. Et je félicite donc un certain nombre d'initiatives qui sont menées ça et là en Afrique de l'Ouest et du Centre, au niveau donc sous-régional ou bien au niveau des pays, parce que il y a des commissions qui se mettent en place, notamment des commissions bilatérales ou bien au niveau des communautés économiques régionales, où les gens travaillent par exemple sur des observatoires, des pratiques anormales pour essayer justement de lever toutes ces barrières, essayer de fluidifier le transport des marchandises. Donc l'Union des conseils des chargeurs africains travaille en étroite collaboration donc, avec tous ses partenaires qui veulent évidemment nous accompagner là-dessus. Les compagnies de transport, aujourd'hui nous sommes dans le cas de la ZECAF, ça a été souligné ici à plusieurs reprises. Je pense que si nous voulons transporter une marchandise d'un point A vers un point B, prenant du Cameroun au Gabon, par exemple, il est beaucoup plus facile de passer par la voie maritime que par la voie terrestre parce que, comme je vous l'ai dit, sur la voie terrestre, vous avez énormément de barrières qui font en fait entrave donc au commerce. Mais aujourd'hui, il n'existe quasiment pas de compagnie de transport.
Yes, maybe on that one, it's a very important point that yes. I think what I wanted to basically highlight is that we need to do that shift to move from the road and focus on inland waterways. The point that you are highlighting is very important, and I think there's also the Sea Link project that Nigeria started. Afreximbank, Nexim has been supporting that. So we'll come back to you when there are questions to probably put some more focus on that one. But I think it's very important what we've highlighted. Implementation, some of the agreements are being signed, they are not being implemented, the private sector is not benefiting. So we need to focus on that one. Let me now wear the hat of Captain Gainmore, and I want to fly straight to Afra and see what is it that is going on in the aviation industry. When I was looking at the statistics, I was actually shocked to learn that in the continent, Africa, in the 1980s, we actually used to have a market share of actually about 45% of the African aviation sector. Now it has actually declined to about 20%. So Secretary General Afra, what is it that you are doing? I heard that you have set up some labs. I don't know what that means, labs and airlines. I got confused, but please, can you probably elaborate on what you are doing in terms of addressing the challenges that we have in the aviation sector and give also some practical recommendations on what we need to do to get the SATAM up and running? There's been a lot of talk. Not all the member states are implementing. So over to you, sir.
Thank you, Dr. Ganmore. First of all, I'm the Secretary General of AFRA, African Airline Association. We are based in Nairobi since 1968. Our vision is sustainable, interconnected, and affordable air transport in Africa, where African airlines will be key players for the continent development. And we promote, serve African airlines and champion African industry. As you said, we have some challenges in the industry. First of all, the challenge is the environment, the operating environment, the high cost of operations. First, the fuel. Globally, fuel represents 25% of carriers' operating costs. In Africa, it's even higher, 35%. And the recent crisis in Russia, Ukraine is increasing this challenge. And we have the issue of taxes and charges. This is really a very big issue because in Africa, taxes and charges facing airlines are higher if you compare to other regions globally. And in many cases, taxes are levied by government and not reinvested to develop air transport, as was recommended by the ICAO. The other thing is market access restrictions. I think you talk about it also. We had the declaration of Yamoussoukro in 1988, the declaration. Not the decision. Then we come to the decision in 99. Still, it was not working. So the government said, okay, let us now go to the single African air transport market. This was in January 2018. So far, 35 states have signed. However, I can tell you, many of them are not complying. We made a survey through our members. For 8 of AFRA members, 11 states committed to SATAM are still denying fifth freedom traffic right or even third and fourth freedom traffic right. This is a very serious issue. So government are committing, not complying, and there is no sanction possible. Nobody can force them to do it if the willingness is not there. The other issue is visa requirement. Still in many countries, for half of Africans traveling in the continent, they need visa before they start their travel. You know, there are 3 flagship projects launched by African Union Commission, the Single African Air Transport Market, the AfCFTA, and the free movement of people and goods. So this needs to be implemented. Policies are there and are very good. The problem is lack of implementation. So as a consequence, today we have an issue of connectivity, intra-African connectivity. I think you talk about it also, how to come here in Cape Town. It's not easy when you are coming from West Africa, for example. We have only 5 countries with more than 20 direct flights to another African country. In 2019, 22% of Africans traveling from point A to B in Africa has to go to a hub outside of Africa. And because of the volume of traffic, 67% of routes under 500 nautical miles are operating daily or less than daily. And most of flights are concentrated in trunk routes. Secondary routes are not serviced. You put it rightly, the market share of the continent went from 3.9% in the 90s to 20%. And from that, African airline contribution from 45% to less than 20%. So we really need to have a good performance airlines to face this situation. So for that reason, the industry and AFRA, we organized last year in June a laboratory. What is a laboratory? During 1 week, in fact, we put together experts of aviation, states, airlines, airports, trade organization. AfCFTA attended also, Afreximbank, tourism sector, to think out of the box and find solutions. So we worked around 5 key projects. The first one being taxes on fuel, because it exists in some countries, it shouldn't. If you look at the Chicago Convention, taxes on spare parts and aircraft also, against same convention, high taxes on operations, and the free routing airspace. This is a big project we are working in to reduce flight times on the continent. And the single African air transport market, of course, it's very important to implement it. And the needed partnership between tourism, trade, and air transport sectors. Because these 3 sectors are interconnected. For us, as the air transport industry, we need to unlock air connectivity, because it's very important to have a very good connectivity. However, no airline will open a route when there is no business, and they will lose their money on this route, operating this route. So we need to create an environment to reduce costs in order for airlines to give affordable ticket fares. And we all know that air transport provides safe and fast delivery. So it's very important for all of us to work out this environment and improve the operation of airlines.
Thank you very much.
Something also important, I want to talk about infrastructure.
Okay.
This also is very important. What we have realized during the COVID, for example, only few airports were equipped with cold storage facilities in Africa.
Yes.
So infrastructure to develop cargo is also a challenge. I stop here for now, and I'm ready to answer any questions.
Thank you very much. I think this is a very important sector that we all need to actually focus on. I think we need to reverse this trend where the African airline share is actually declining. And I don't think finance is an issue because the bank, Afreximbank, African Development Bank, TDB was here, finance is there. So where are we getting wrong? I think we need to actually sit down to see how best we can support the aviation sector to ensure that it plays an important role moving people, business people, moving some of the goods that can actually move faster by the airlines, and importantly, supporting the tourism industry, which is important for most of our economies. So let me now go to Mr. Daniel Macaulay, who basically will help us to weave in the maritime, the aviation, and the logistics. Over to you, CEO of McDan. Please, can you highlight the challenges you are facing and the solutions that you are providing basically in 4 minutes?
Thank you very much. For me, I always ask, when will we stop talking about problems and finding solutions to the problems of Africa? We are sitting here today talking about AfCFTA. And many a time we underestimate logistics. Anything about AfCFTA is about trade. And trade is about movement of especially cargo. But that aspect of our discussion is always underemphasized. There is not going to be AfCFTA without movement of cargo. And I've been almost 31 years in logistics. The same problem I had when I started, I'm still hearing the same problems today. And it is very serious and it's getting worse. For me, what is the solution? Let me give you some few dangers of what had happened in the past few years. We have MOCA, we have a lot of institutions in the African region. You have Ship Owners Association, and there is no ship to manage. What is the job of the ship owners? Managing foreign ships? You have airlines which are moving in the sub-region, raw cargo airlines. But in Africa, we don't have our own cargo fleet. We don't have anything that should move our cargo. And if you want to move cargo from Ghana to Senegal, the cargo had to go to Belgium before coming to Senegal. And they dictate how much you have to pay. By air, there's no one single Pan-African shipping line in the sub-region moving. And I heard our SMEs and our women talking passionately about SME. If you want to move your coffee from Luanda to Ghana, do you think you can load a whole container full of coffee as an SME? In our days, we use ferries. We use small cargo boxes and all that. And we don't have a single multi-purpose vessel in the sub-region across Africa moving the cargo. These are the practical things we have to start talking about. Well, in my sector, what am I doing? I have signed a contract with AfCFTA to provide cargo planes and vessels. As we speak, I'm negotiating for 2 vessels in Japan right now. And I want to call on the private sector to come on board with me. I don't want to be the only owner of a vessel running the African continent. You've all heard about the Black Star Line, which got collapsed in 1982. I'm revamping the Black Star Line back on road again, on the sea. I have about 2 cargo planes, making it an indigenous African cargo airline. So this is what I am doing, finding the solutions. I'm in talk with Afreximbank for about $100 million. I hope you are there.
Yes.
To support my campaign.
Tuko pamoja, we will support you.
We have initiated the discussion, but with my own equity, this is how far I had come. I have over 120,000 square meters of warehouses covered. These are the solutions I'm bringing on board to support the continental free trade. So for me, the private sector should come on board to find solutions to our problems. The Maritime Authority with policies should make it flexible for us. We are sitting in Africa and we are only taxing or taking levies on foreign vessels and foreign airlines bringing cargo to us. There is not going to be after. Let me give you a simple scenario. I'm also a salt miner. I have the biggest salt mine in Africa, so I export. As we speak, I have to go to the Chinese to hire a vessel to move my salt. And the logistic costs never make me competitive as the salt coming from Brazil. So this is how they are going to collapse us. AfCFTA can do all the policies, can do all the negotiation, ratification and everything. But if we cannot move the cargo to make profit, to make meaningful, to make the business meaningful, AfCFTA can never arrive or what we want AfCFTA to be. We will continue having our conferences, we continue having our seminars, we continue having our road shows, we continue having everything if we don't look at some of these problems. It's about time we stop talking about problems and talk about solutions in the sub-region. If you look at the air industry, we are not controlling anything in Africa. I went to the Chinese to rent a cargo. When they realized that I'm going to use the cargo to do African trade, they doubled the price for me. I'm already out of business. You go back to the same Chinese, you want him to manage the business in the continent, he will do it half the price. So it's about time we own our own assets. It's about time we own our own. Transnet is doing well in South Africa, but they are so rich that they are content in the South African sub-region. What happened if Transnet had to move to the west? What happened if Magnan had to move to the south? These are the interconnectivity we have to start talking about. We have to start talking with each other. We have to start talking to ourselves to see where we can bring our strength and our weaknesses together to form one formidable shipping line and airline in the sub-region. So I'm throwing the challenge to those who are interested to come along with me for us to, 10 years to come, we can own about 100 vessels in the sub-region of our own that we can detect the freight rates. In Corona, we were paying as much as $12,000 per one container. If we have our own African vessels, we will be able to detect how much we can subsidize or what we can do. I can choose to take a haircut, somebody can choose to take a haircut to make the business meaningful for our businesses across the continent. Thank you.
Thank you very much. I think you have all heard the challenge, and he is willing to partner with you, those who are ready to basically enter into a partnership. I think he also supported the AfCFTA guided trading initiative. He's so humble, he didn't mention some of those things, but we know that he is actually ready to get the continent to where it belongs, which is basically to the future where Africa can start trading with other African countries to ensure that we create the jobs that are needed by our young people who are really dying trying to cross the Mediterranean. We really need to fix the transportation and logistics challenges. If we have got efficient logistics challenges, we will be able to actually industrialize, develop those manufacturing sectors, and ensure that we are competitive. So thank you very much for your attention. There were a lot of challenges that you also heard from that. There was a lot of turbulence, but we now have to actually get ready to deplane. Thank you very much for your attention. You will send your questions to the AfCFTA Secretariat. There's a lady called Emily. She has been capturing all the key issues, listening very intensively. We need to hold her accountable to ensure that all the solutions that have been provided here are implemented, and Afreximbank will back it with funding. Thank you very much for your attention, and we look forward to a future African continent where transport and logistics is smooth. Thank you very much for your attention and for your time. Okay.
Thank you so
Yes.
much, Dr. Gainmore, for moderating this very brilliant conversation. It was edifying. I will give you a couple minutes to just take a photo before I ask you to please exit the stage and I can take over. Is everyone feeling okay? We're nearing the end of day 3, but we still have a set of breakout sessions that are gonna take place in a few minutes. Just to specify, I did mention it earlier, but there is a change that happened with the venues for the second set of breakout sessions this afternoon. So the parallel session 1 is now taking place in a different room, which is the breakout room 1. And then here in the plenary, you'll have a session titled Promoting Fintechs for Cross-Border Trade. I'll repeat it. The plenary session here is happening and it's promoting fintechs for cross-border trade. So there has been some swaps. I'm not entirely sure that it's been updated on the app, but just make sure that you know that this is about promoting fintech, and I'm going to welcome our moderator in a bit.
It's your turn to drive.
So I said the opposite. So thank you so much. So the first session, which is building synergies in investment, promotion, and facilitation, is happening in breakout 2. And here we have promoting fintechs for cross-border trade. All right, so I'm now going to welcome our moderator for this session. Thank you so much. For this session, as I was saying, on promoting fintechs for cross-border trade, and he will take over Mr. Mike Ogbalu, CEO of the Pan-African Payment and Settlement System. I will please ask you now to join me on this podium so you can take over this conversation. And I will ask you, ladies and gentlemen, to please give him a round of applause and welcome him warmly as he takes on this session on promoting fintech. Thank you.
Hi, let's see. So, good evening, ladies and gentlemen. I think we should get the session on the road. My name is Mike Ogbalu, as I was introduced, and I'm CEO of PAPS. The journey of my life has been an evolution, and I've had to move from when I was really just excited about technology to a point where I was excited about technology making money, and now I look forward to using technology to make impact. The main objective of this session is to provide a platform for African governments, investors, fintechs, and other stakeholders to consider how the fintech sector can achieve sustainability and contribute to cross-border trade in Africa. Okay, maybe I should pause a bit and have people settle down. Okay. So our forefathers understood the importance of intra-African trade and its criticality to the prosperity of the continent. In 1963, in the lead up to the founding of the African Union, or the OAU as it then was, they pondered how they could promote unity and solidarity of African states and coordinate and intensify their cooperation and efforts to achieve a better life for the peoples of Africa, among other objectives. Their first resolutions captured their understanding that intra-Africa trade will be essential for the driving of Africa's prosperity. And one of the resolutions that they passed in 1963 is that Africa would have a Pan-African payment system. The hopes and dreams and aspirations of the entire continent have been aptly captured in the Agenda 2063, the strategic framework for the African Union, the Africa we want, with the AfCFTA being one of its most important and critical initiatives. At the heart of the AfCFTA is the promotion of intra-African trade among African states. In 1963, however, they did not understand the importance of trade. They understood the importance of trade, but did not understand the extent that digital technologies will impact our world. So today, digital transformation is going through a pivotal point in sub-Saharan Africa. Internet penetration has grown tenfold since the early 2000s, compared with a mere threefold increase in the rest of the world. The number of tech hubs on the continent have grown by 50% over the past several years, now numbering more than 600. And the region was home to nearly half of the world's mobile money accounts in 2008, and will see the fastest growth in mobile money technology through to 2025, according to the Brookings Institute. The use of financial technology, in particular mobile money, has become increasingly widespread in a number of member states of the African Union. For example, in Kenya, Kenya is ranked 26th worldwide in digital financial inclusion ranking, and of the more than 395 million registered mobile money accounts in Africa, greater than 150 million are active. In addition, according to the 2018 African Development Dynamics on Growth study, Africa uses more mobile banking than all other developing regions put together. Private sector participation is critical to the success in the shaping of free trade on the continent. African fintech companies will play a major role as private sector players. African fintech companies have demonstrated their ability to surmount the most difficult challenges on the continent with innovation and local knowledge of developing solutions that meet domestic scenarios and solve domestic challenges. Effective partnership and collaboration with fintech community can help chart a path towards success for the AfCFTA and cross-border trade in Africa. As a continent, we have to navigate sometimes conflicting imperatives of governments. When you speak about governments, one of the things you find is that governments, their priorities are politics, policy, and then a little execution. When you talk about big institutions, large businesses, they spend a bit of time building the enterprise, and then they look at commercials, and then they execute. But when you talk fintech, the fintechs, they look at commercials and they execute. So their life is not so complex, and that is the kind of simplicity and energy that we need as a continent. And for us as individuals, we just look for the best value. So these imperatives will need to be balanced. A wise man once said that the secret to walking on water is knowing where the stones are. So we have assembled a fantastic cast to help us dissect the subject. So I would like for you to give a warm round of applause as they come up, as we welcome our distinguished panelists. So first of them is Mr. Boom, the third junior. He's the CEO of DABA, and DABA has built a full-stack multi-asset investment infrastructure for Africa and emerging markets, which is a social alternative investment platform that allows investors of all levels to find, invest, and trade vetted high-growth African companies. A warm round of applause. So next, we'll be welcoming Ms. Michelle Chivunga. Michelle is a renowned global expert covering emerging technologies, digital assets, and digital trade. She is CEO and investor at Global Policy House, a senior government advisor, and also working with the AfCFTA on digital trade. She has won many awards, including Digital Transformation Woman of the Year 2022 and Titan of Africa. Warm round of applause. Next, we'll welcome Mr. Alex Nyingi, Google Africa. Alex is a public affairs manager at Google, focused on public policy engagements in Africa with executive branch officials, regulators, and third parties and communities. Alex is passionate on issues that intersect public policy, business, technology, and he's passionate about shaping the future of how we use and build technology. Last, but by no means the least, is Mr. Babatunde Okufi. Tunde is Group Head of Business Development at InterSwitch Group. Tunde is the Group Head in charge of at Pure Play, a business division of InterSwitch Group. Tunde is a full-stack business development and products professional and enthusiast with over 17 years experience in the spheres of banking, consulting, payments, and information technology, creating long-term value along the way. He's adept at taking ideas from concept all the way through to revenue. So you would see that we've really assembled a very good cast. So we'll just get started. Can I throw you to the next one? Thank you. Okay, so we will start with a general question, and I would like to get your views on this general question before we dive into other questions. The first one is, we're living in phenomenal times in Africa, especially as we see a whole new wave of innovation and fintech activity. But this is concentrated in a few countries. How can we even this growth? How can we take this bright light in a few countries and make it spread across all of our continents? I'll start with you, Alex.
Thank you. Thank you so much, Mike, and welcome everybody to this particular session. Thank you for your time. So I think that's a really profound question, because I think as we talk about development in Africa, it's really important that we look at how we can make the development equitable and also sustainable. And as we talk about the fintechs, yes, there's significant growth we are seeing. But then it's really settled on a few countries. And I think it's part of what we can actually be able to do is that we do need, we do need to look at some of the indicators that are required to enable this to grow. And as we know that the fintech is driven a lot by technology, so even as we look at the statistics, you're able to see that we do need to improve on the infrastructure. So for all the countries that we are seeing the growth is not happening as well, and even for the countries that we are seeing amazing numbers, it's still very limited. It's still a very small number of people actually benefiting. So we do need to look at how do we improve on our internet penetration. So we do need to actually have more people, because a lot of the fintech services are provided on the digital platform, more so the various apps. We also need to address challenges that come with, for example, electrification. We do need to ensure that there is more power is available. So it means that we do need to have various sectors. We do need to harness things like renewable energy. We have one thing we say in Africa is that we do have a lot of sun. So how can we leverage on that sun even more? And the other thing as well, really to be able to leverage on this is that how do we grow our skilled workforce? So we will not be able to leverage on all this if we don't have the right set of skills. And when we talk about skills, it's not only skills for the people who are going to develop the technology, but it's also skills for the people who need to consume these particular services, because if they have the right set of skills, they live and be able to consume it better. A second bit, I would say, is around regulation. So this is still evolving in a big way when it comes to regulation. And with that, I also believe it builds some challenges, because now, for example, as the fintechs try to grow and evolve and try to maybe reach into new markets within African-grown businesses trying to get into new markets, it becomes a big challenge, because same thing that was being conversed here earlier about various goods being able to cross borders, it becomes a similar challenge whereby if you're trying to meet regulations in every single country, then it becomes also a challenge. So it's something as well we need to really look at very well. And a third point as well, I would say, is the whole aspect of access to capital. I know we see more so with venture capital funding, and a lot of that is coming into the fintechs. It seems significant, but then for us to be able to enable even the African-grown fintechs to thrive more, we do need to find new and additional alternative ways of providing them funding right from here within the continent. A fourth area, maybe a final one, will be a lot around awareness around fintech services. One of the things that has proliferated a lot on the continent is the whole idea about mobile loans. Some we could say for good or bad outcomes. But then the thing is that we do need to create awareness in terms of what is additional services that the fintech services are being offered in such a way that we are able to know that these opportunities are there and we can actually be able to thrive from them. So the whole idea is that how do we harness this across the continent? Not just learn from the countries that are doing it very well, but ensure that we set in place these services and practices to ensure that it's really equitable and it's sustainable. Thank you.
Thank you very much. Tunde?
Hello? Okay. It's a pleasure. Can you hear me? Good. It's a pleasure to be with everyone here today. So if we, considering the question, we've done well in some markets, but we haven't done that well in other markets. So in essence, how do we level up? I think one of the first things is partly what Alex just touched on, which is learning from where it has worked. So looking at markets that have gotten things right, what can we learn from them? So obviously that speaks to a need to collaborate a lot more on the continent, and that's why the things that the AfCFTA are doing become, very important. Driving collaboration and learning from ourselves what has worked. So learning markets that have done things in a particular way and have achieved a particular outcome, how can we cascade that learning across? I think that's the first thing. Then obviously, there's a leveling up that needs to happen across the continent. So in infrastructure, you can't drive development where there isn't access. So we need to level up in terms of power. You can't have manufacturing where there's no power. We need to level up in terms of internet access. And so there's a lot of infrastructure leveling up that needs to happen on the continent, and that then layers on what I call like the third or the last capacity. Technology is a leveler, right? Technology is the way a small player can compete against a large player, and we've seen that through history. Technology companies are giants today, the Amazons of this world, where at one point in time, small players who use technology to go after the much larger players. So technology is one way where nations and countries that even once we've learned from each other, once we've leveled up, there will always still be the case of on the continent there are large markets, and there would always be maybe potentially a case of where maybe some markets are ahead of others. How do those smaller markets level up is by leveraging technology and doing things and offering service and trade a lot more efficiently than maybe their larger competition, right? So I think those are very key points and and things to consider in terms of how we can scale and even development across the continent.
Thank you very much. Over to you, Boom.
Do you mind repeating the specific question, please?
So talking about the fact that we have bright lights, we have big markets where fintechs are thriving. How can we have much more markets across the continent where we have thriving fintech companies?
Thank you very much, and thank you very much for having me. So I think in terms of realizing the promise that the AfCFTA has for Africa, there needs to be, in my opinion, clear regulatory environments within which financial technology companies can evolve. Oftentimes, like you mentioned in your earlier address, fintechs, they think about commercializing, executing, whereas governments have policy, procedures, and certain things that may hinder execution. So I think to realize that promise, establishing clear regulatory frameworks that within which fintechs can evolve will allow them to scale their offering across multiple countries and hence kind of like fulfill part of that promise. Secondly, I think fintech in specific was one of the industries that received the most capital in the prior years. About a third over the past few years of the capital that has been flocking into African companies has been dedicated to fintechs. But that is still very, very underinvested in terms of the market that these companies have to go after. So one of the other ways that I think would be necessary to help us achieve that promise is actually funding more fintechs.
Okay, just picking up on what you just said. One of the challenges with regulation is that sometimes you over-regulate and then suddenly it becomes a problem. My understanding is regulators, they think within a box, while the fintech or the entrepreneur is rewarded for thinking outside of the box. So it's interesting that you talked about regulation as a way of helping fintechs to scale. So do you want to speak to that a bit more?
Yes. So oftentimes, as a financial technology company, you're brought to innovate. You're brought to do business in a way that had previously not been accounted for by the laws and regulation of the country or market you're doing business in. And like Mike said, you're rewarded for thinking outside of the box, but that often puts you in a gray area, which if you're growing really fast, you might be stepping on, or there might be the impression of actually you stepping outside of the law. So I think the key point here is and I think some countries have already done a pretty good job in establishing what is called regulatory sandboxes, which provide fintechs, one, the ability to actually do business, go to market, serve customers, bring their solution to light, while allowing governments to catch up in terms of the regulation that is best suited for the services that they're bringing. So I think, developing more regulatory sandboxes across the various markets is one of the ways that fintechs could pretty much, and governments could work together to allow for fintechs to start into market. So I think that would be my main point on regulatory frameworks for fintechs.
Thank you very much. Over to you, Mitchell.
Hello. Yeah, no, it's a really interesting question, Mike. Thanks very much for it. I think I'll kind of flip it a little bit, because for me, why are fintechs why do fintechs even exist? I think fintechs really primarily look to bring in efficiency and try and make things, work a little bit faster, a little bit better, more transparency. So I think for fintechs, like you were saying, it's very much around commercialization and actually action. So they want to action and they want to deliver things, and one of the things to try and even out what we're seeing on the continent, where you have pretty much five countries that are dominating in fintech. How do we move that to the rest of countries in Africa, really is what your question was about. And for me, there's a couple of things. One, even the countries where there isn't that heavy of a fintech ecosystem, it's important that we start to provide the environment for a fintech ecosystem to actually grow. And this means, obviously, you're providing access to finance, you're providing access to information, you're doing the incubators, you're doing the sandboxes that you're talking about to allow these fintechs to be able to come and test even their solutions, right? Because fintechs are also testing these new solutions. And then, of course, fintechs are also leveraging off new emergent technologies, for example. So they're playing around with new tech, or new data sets, or new code that they are writing to be able to bring efficiency into what we call traditional financial ecosystem. So you need to provide the right environment for them to do that. And the guys have already talked about the regulation, which I won't talk about. But one thing I will talk about is also the importance of providing incentives for even fintechs to want to go to these markets. Because as a fintech, even for us, when we're working as a fintech, one of the most attractive things is going to a country where you know that that country has very clear rules about you operating. There's clear rules around compliance, there's clear rules around usage of data, there's clear rules about how you can access data. So a lot of fintechs cannot access data most of the time. They find it difficult to access data, and data really fuels a lot of the activities that fintechs do, or fuels, the products that fintechs are actually producing. So again, that clarity and the incentives that these countries give for fintechs to actually come in would be very, very helpful to grow and move the fintechs into other countries. They talked a little bit also around access to finance. I think, again, capital also is going predominantly to a couple of markets in Africa. We need to shift that, because if you don't have the capital to be able to do your fintech solution and to scale your fintech solution, you're not really going to grow. And to countries who are sitting here today, I think to countries, the benefits of you growing your fintech ecosystem is that you're bringing a new revenue stream, you're bringing a new GDP stream for your country. So it actually makes sense to incentivize these fintechs to actually grow in your markets.
Yeah, thank you very much. And you talked about capital, and that leads me to the next question to you as well. African venture capital and other internally driven capital going towards Africa fintech is still limited. Most of the funding comes from external sources. How can we enable a more thriving internal capital market that boosts financing, especially financing for women-led fintechs?
Yeah, no, really great question. I think it's very much down my path. I'm very passionate about trying to support more women-led businesses, especially women in the fintech ecosystem, because again, we have a little bit of gaps of women participating in fintech. And how we can kind of really change that, I think, is being a little bit more tailored, even when we're providing a capital. So making it quite specific, right, to try and invest into women-led businesses is important. And then again, venture capital, how do we strengthen capital? We need to strengthen local capital markets, and we need to have more investors who are coming within these countries who are actually investing into the fintechs. So again, the capital base has to be a little bit more diverse. and less of the capital that's coming out from externally, because capital coming out from externally also impacts things like IP and ownership of IP. So we want to make sure that IP is also sitting within the continent and is going to drive quite a lot of investment also coming into these businesses. But we also have to provide the women, somebody mentioned skills, I think women also have to be skilled up in the different areas as well to enable them to thrive in the fintech ecosystem as well. I'll say those three things are quite important, yeah.
Boom, I see you nodding vigorously. Do you want to chime in?
Yes, definitely. That's essentially what we do at DABA, and Michelle really covered well, in terms of financing more women. I just want to talk about increasing participation within capital markets more broadly. I think there are a few things that need to happen. One is better investor education. So I think for most, whether you're a high net worth individual, middle income earner, or low income earner, investment education across the continent is very low in terms of what you could invest in that best fits your investment profile. So I think by increasing investment education, you would actually allow more investors to not only participate, but also invest in multiple types of businesses. To Michelle's point in terms of diversifying the capital base, if the majority of your capital comes from the West or outside of the continent, well, you will be subject to the investment bias and mandate and thesis of those specific investors. So they might not want to fund certain business models or certain types of companies which are necessary for the growth of a local ecosystem, right? Today, a lot of the capital goes into payments, for example, when you talk about fintech, but there are other maybe less sexy in business models within fintech, such as maybe debt collection, for example, right? So you need a local investor that understands the pain points to say, yes, debt collection is a very important business model within financial technology that I want to finance. How do we enable that investor to invest? So investor education and also diversifying the types of investment vehicles would be, in my opinion, the few ways, in addition to providing the right investment tools, that investors can have so that they can participate locally, especially on the African continent.
Okay, thanks. And again, this is a trend that we see where you have a young entrepreneur that comes up with a brilliant idea, and within a short time, you have investors from around the world, and then they own the IP, they own the company, But I think that we need to begin to own a bit more of the assets and the values that are created on the continent. And you are right that by trying to diversify those sources and the types of investments that we can cure that. Well, you raise an important point around investing in education. Okay, investment in education, yes, is good, but how does that really, how does that help, to make sure that the source of the capital can be local?
Right. Yes. So an informed investor knows where they're putting their money. So one of the, maybe I should give a little bit of background. For what DABA does is we enable individuals and investment firms to invest in high quality investment strategies across the continent. And so primarily we distribute investment opportunities, make them broadly available. For you to be able to invest, you need to understand what you're investing in. Ways of educating the investor could be active or passive. Active means that you're explaining the concept, you're explaining the underlying asset, you're explaining the performance. Passive is through conversation, webinars. So you're not actively teaching the person. So to achieve those two things, active and passive education, especially locally, we need our commercial banks, asset managers, investment brokers, right, to have more touch points with local investors, right? Far so often they're way too removed and only capture maybe the upper sphere, high net worth individuals, and institutions. That's who they're going for to pretty much get their investment capital. But they don't talk to middle income earners. They don't talk to low income earners and make sure that your investment products reach them. So if you educate those people, you tell them, hey, here's how when you put your money, here's the return you can expect, here's what's going to fund. it's, it's for impact, it's for return, it's a long-term horizon, it's a short-term horizon, they start understanding where their money goes to. Out of a sudden, you have access to a larger pool of capital, because that investor now knows this money that I'm handing over to this asset manager, to this bank, to this investment firm, here's how they're going to invest it for me. Right? So now there is more money available that can fund multiple things. So that's how I think that investor education can actually increase the pool of available capital to fund our local businesses.
Thank you very much. And let's switch gears a bit. Let's talk about MSMEs. We know that MSMEs will be a real engine room or a real driver of growth on the African continent. So fintechs are playing a critical bridging role, helping MSMEs with access to tools to enable them to do business more efficiently. How can we leverage AfCFTA to help scale up fintechs and MSMEs capacity to enable them to bring more value across the continent? Tunde, do you want to start with that?
All right, thanks, Mike. For me, I think it's by leveraging the protocols. So leveraging the protocols on the trade of goods and services, leveraging the protocols on digital trade, because very often when an MSME wants to scale to new markets, the mode and channel is online. It's very often online. So having the ability to trade across multiple jurisdictions seamlessly becomes vital, right? Being able to have a common set of rules and have costs that are harmonized and processes that are harmonized are essential to that. That's think about the small scale trader perhaps trading in craft or something, like in jewelry, being able to trade with a customer in Kenya. We need to have a way to seamlessly capture that value from end to end. And I think the rules that are being defined within the protocols are important to that, because what it does then is that it creates a stable market that people can invest in, entrepreneurs can invest in, and other investors or institutional investors can invest in those those small-scale enterprises. So I think that is essential. Another point, clearly, and it's been touched on a few times here, is credit. So fintechs have done quite a bit already in providing lending services to small-scale enterprises, and very often you find that is the capital that these small-scale enterprises use to run, right? Because large-scale lenders very often neglect these lenders. And I think it's the World Bank. World Bank figures say that the credit gap in sub-Saharan Africa is at about $330 million, right? And today, largely, it's fintech players that are helping to bridge that gap. So when we have a common set of rules and protocols across the continent, that allows and eases up the not just the exchange or the fulfillment of goods and services, but also the access to credit across different, and by that I mean capital, across different jurisdictions. It will clearly help MSMEs scale, because trade is carried out on the back of financing and credit. That's one of the major differences between our markets in Africa and the rest of the world, right? So all of those things coming together, clearly will help MSMEs and fintechs working with them to help us scale across the continent.
No, thanks. And one of the things we find with MSMEs is that a lot of their trade that happens even across the borders tend to be informal. And certainly credit could be one of those incentives that actually brings them into a formal environment and where we can be able to relate with the data generated, okay? But now speaking about credit, in terms of backing those fintechs to be able to bridge that gap is there a role for large corporates or government to be able to support that or to incentivize those types of behavior? Tune?
Yeah, absolutely. There is a role for governments and corporates. The first step, clearly, from from the government's perspective, is defining the rules and the frameworks, right? And you define that within one jurisdiction. But the problem that we have today is that we have 55, 56 different jurisdictions. So let's harmonize that first, or as much as possible, harmonize it across, so the rules are the same, right? Then, obviously, nations can decide to, provide funds and funding themselves, because you mentioned the point around ideas being born on the continent, but very often you then find, foreign or Western investors, swooping in to, own that company, own the IP, and then therefore dictate the direction of that. And that's what we're trying to reverse. We want to dictate our own futures on the continent, So we can then see a case where national, governments create sovereign funds that will, back investments. Today we have sovereign wealth funds in the Middle East and, in Arab nations funding investments in Africa, which is good. The money is good. It's required. But it would be nice to see African, governments start to do some of that as well. And corporates naturally, obviously, have a role to play here. So when you have a fintech player, providing access to credit, very often or very rarely are they the lender themselves, right? They're just providing the technology, the rails, and they're providing access. It's institutional investors. It's large, hedge funds that are often channeling their funds through these, fintech. So corporates already, I would say, are playing a huge role. Largely, most of the informal or most of the micro lending that happens on the continent today is, provided by, corporate investors, so to say, or institutional investors, and not governments. It would be really nice for governments to come to the party as well.
Mike, if you may, I'd just like to add something to the excellent points he's made.
Please go ahead.
So one of the, in my opinion, easier ways would be actually just changing a little bit the limits on how much of maybe a pension funds or a more institutional investor capital pool can be invested in venture capital, for example, or in private credit opportunities. Today, the limits are very stringent. I think it's under 1%. Some funds are actually completely banned from investing in venture capital. So I think being able to, step one, say, hey, okay, we allow you to invest at least 5%, right? That will immediately open up a much larger pool of capital into venture capital and private credit as well, because right now, a lot of these institutions are prevented from investing in these types of businesses.
No, thank you very much. And you spoke again about government, about regulations around pensions. I think we should go back to regulations. And Alex, the regulatory environment can be vague sometimes for fintechs in Africa. Can the Digital Trade Protocol and AfCFTA help provide more clarity around regulation and the landscape in Africa?
Thank you. I think, yes. I think the protocols under the Africa Free Continental Trade Area can actually assist in a very big way, because one of the things is that we do need to look at Africa more and more as one market. And the more we're able to not just look at it as one market, but creating that environment that enables for trade to operate. It means that we as Africa, apart from trading within ourselves, we're able to sit at the global table with a bigger pie, whereby we're able to have a lot more power when you go out there to negotiate, compared to where maybe we go negotiating as individual countries, which, yes, we still need to do that, but it becomes us that we actually have a lot more, there's a lot more at stake, and people want to actually engage with us. So I think that's very important. And I think one of the things that can be done is a lot about putting across what I'll say, let me call them guidelines, or sort of policies that can operate at a continental level, something that can actually even guide other countries as you come up with policies in such a way that, yes, we'll regulate or set up some policy at a local level or at a regional level or sub-regional level, but then it will be within a framework that is looking at as a continent as one particular entity, in such a way as we look at the uniqueness of our individual states, we'll be really serving the needs for the wider continent. Because for us to really say we are trading, we want to move away from whereby we are saying we are a nation of 50 million people, or we are a nation of 250 million people, to talking about being a state of 1-point-something billion people. And you already know, even from statistics, by around 2050, 2063, Africa will probably be the largest or among the largest continents in terms of population. So we really need to look at how is this going to be an asset for us. And the best way for us to do this is to reduce the boundaries. And I liked what one speaker said, I think on the first day, if I'm not wrong, whereby they're talking about the way the roads, the railways, opened certain continents or certain worlds. But then for us, what can actually open Africa is a digital highway, if I can call it as such. So we do need to actually leverage on these assets that we actually have to ensure as Africa, we're really not just creating an Africa for ourselves, but we are creating an Africa for the world, because we are getting to a point whereby Africa will actually be having the largest workforce globally. So it means that we are going to be serving the rest of the world. And we want it to be in a case whereby we have an equal, if not a better stake, better standing than the rest of the world, so that we actually say that we are a world leader, and we are a world leader because we as Africans, yes, we do recognize we are individual states, but more broadly, we are one continent. Thank you.
Yeah, Michelle, would you like to add, given your work with the protocols?
Yes, absolutely. No, I absolutely agree with what Alice was saying there, because the protocol really is set up to create an opportunity to leverage off what we have already kind of happening on the continent, really. We talked about the fintechs. Obviously, this session is very much around how can we support the fintechs to scale and grow. And one of the, the ambitions of the protocol is really to ensure we can provide that right enabling environment, around the regulatory clarity. We're looking at how can we digitize in some aspects to provide more efficiency. So even when we talk about trade, right, or paperless trade, as we call it, because when you're trading digitally, I think things change a bit. You might have digital signatures, you might have, e-signatures. All this stuff has to be considered valid or legally valid, for example, to make it easy for businesses to be able to do business. So that digital highway, I really love that, the digital highway, because it is a digital highway that we're going to be dealing with, right? So when you start to think about what are the legal complexities with dealing with the digital highway, have we got the clarity around the legal side? Very important. Again, that's why the basis of having a protocol or something, the foundation, a legal foundation that provides us an opportunity to do this stuff is really important, especially for the businesses. You also asked about MISMIs earlier on. I mean, if we do not support MISMIs in Africa, right, micro, small, medium enterprises, then I don't see what the point is, because 80% of businesses in Africa are actually MISMIs, if not higher. Right, so the ambition really is to make sure that, again, with the protocol's ambitions, make sure that we can actually support small, medium enterprises. And most of those small, medium enterprises are actually women and young people. And again, why we have another protocol around women and youth. So it's very important, I think, to contextualize in the context of Africa. And as he said as well, this is not just about Africa serving itself. Africa is actually going to be, as you've seen, most of the world is coming to Africa and is hunting around Africa, right? There's a reason for that. Yeah, we've got a young demographic. This is going to continue for years and years. So that's a young workforce that's coming to the market. We are playing around with digital solutions and actually leading the world in certain areas in digital solutions. Be it blockchain, be it artificial intelligence, we're building the next generation of tech, right? Most developers, you'll be surprised by this stat, but most developers, even in the blockchain space, are sitting in Nigeria, right? And are building code in Nigeria. But back to my point around IP, most of them are also having to sell some of that code because they need liquidity to be able to build and scale their business. So we're losing that IP because that is being sold off, right? Because our young developers need some capital. I think we need to change that a little bit. And the protocol is also going to be set to help to change that so that you give these young developers, one, incentives, but also access to investments and capital, and access to data. I keep saying data, 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 data. We've written a lot of papers around this, by the way. I think my colleague Alistair is in the room. We've written papers on why we need to build what I call build data capital in Africa. Because if we don't have data, again, back to your point around leveraging, right? We don't have much leverage. If you don't hold data, if you don't have access to data, you're going to struggle in the world to have leverage. Everything is about data. Even in our world, when we're building tech solutions and as fintechs, we are relying on data, quality data. So if you don't have quality data, it makes it very difficult. If you don't have data, even at a national level, you cannot leverage, and you're sitting in positions of others where you're dependent on others. So the data point is really important.
No, thank you very much. I think if we can pause and take one or two questions before we progress. I see a hand over there, so we'll just take two, and then we'll continue to the end. Please come to the microphone and, sorry. Okay, so we can take the three, but very quickly.
Thank you so much. My name is Doris Marley. I'm a computer scientist and a marketer. We have developed a platform called Mama Mia Soko. It's an online and offline marketing platform. It provides a financial inclusion to SMEs, women and youth-led businesses. And mostly what we offer really depends on some of the regulations that PAPs are supposed to implement with our central bank. It has been almost a year now, ever since we were engaged with PAPs to get a cross-border payment settlement integrated to our platform. And ever since, up to date, we are being faced by the challenge that our central bank is not giving you a positive response on that. And we cannot move forward to provide cross-border payments to our vendors because we are not integrated at the moment, and we do not want to use the Visa and the MasterCards. That is one. Can you find a way to integrate us in any other way possible that we can benefit from the PAPs, even as a pilot program that you're running in countries that you're already operating? If that is the case, then we'll be glad. And another one is, sorry, another one is that you have to consider fintechs as really coming up with ways to invest in their own businesses, and we spend a lot of money supporting the people that we have employed so far. And if we delay with the regulations and creating platforms for us to operate, we are going to be faced with challenges to be able to facilitate and invest more in our companies. And by the time that you come on board, the technology has changed already. We have to reinvest again in the same technologies. So you have to consider investing into us so that we can keep up. Thank you.
Thank you. Quickly.
Hi, my name is Brenda Piercha and I work for Cargill. So in 2021, Deloitte did a study and found that at least 40% of African businesses had some sort of cyber incident, right? Now, this is a global phenomenon and not just an African one. It is literally easier to be a pickpocket compared to robbing a bank. So that means your MSMEs are easier targets. So my question to you is, how are fintechs innovating to build trust of consumers? Because this is where your cybersecurity, data privacy, and trust needs to be basically as bulletproof as possible.
So this question is for who? Okay, so Michelle will take it.
We can give it to everyone.
Okay, please.
Thank you very much. One thing that kept on coming into my mind is to say Happy Independence Day to Zimbabwe. Yeah. My apologies for saying that, but happy Independence Day to Zimbabwe.
Please, can you go on?
Tondera Leona Unjuera again. The first thing I just want to do after celebrating is to celebrate again the way that fintech is actually moving in Africa. And one of the comments that I want to first make is in terms of the the challenges that come with bond investments by institutional investors into venture capital. I think one of the key issues to consider would be using prescribed asset statuses within our countries. I've noticed in Zimbabwe we actually do that, particularly in renewable energy investments by institutional investors. So I just thought maybe from a venture capital perspective, it's one thing to consider. But my question now is a very, very grade one question. Anyone can take it. What is the product development journey within the fintech space? Thank you.
Thank you very much. So there were 3 questions, and I think it's fair for me to answer the first, and then Michelle, and then boom. And then any other person can chime in. I think the first question was around the Mamma Mia platform and discussing with PAPS. PAPS has been on a journey and started, first of all, with building the settlement infrastructure. Now we are done with building that settlement infrastructure in a number of countries, and we have also added commercial banks. I think now we are much readier to actually engage, and I apologize that you haven't had the levels of attention that you had wanted, but I would certainly like for us to take this forward after this session. We are much more ready. Let me also point out that our system is governed by central banks, and central banks in multiple countries have come together and put out a framework for integrating into fintechs. So now we are much more ready, and we're happy to actually take those engagements forward from here. Thank you. So, Michelle?
Yeah, no, I'll answer the question around the cybersecurity, privacy, and creating trust. So I think your question was very much around how are fintechs doing that. And I think, by the very sheer nature of the products that fintechs are building, they're actually incorporating quite a lot around cyber protection. So, for example, most people kind of think of fintechs, either they're solving one thing, or, they're just doing payments, or they're just doing this and that. We're actually transitioning from that now, where we are using different technologies, almost combined, what we call convergence of technologies, to address some of the challenges you've talked about. So where you build a product, you also have within that product, you can have, for example, governance structures in there on how you deal with a particular product or with a compliance issue or whatever it is around governance. Cybersecurity is absolutely core. There's no way that you should be building systems and you don't think about the cyber-proofing that system. So naturally for us, when we are building or developing, it's important that we think about the cyber aspects. And I think the more education that people can have on how to deal with cybersecurity is really, really important. It's not an issue, like you say, it's a global issue where we've seen a lot of cyber attacks. And some of it is just simple education on how to handle cyber issues. But even the technologies, the new technologies that we're dealing with, things like blockchain, things like artificial intelligence, you can embed in there protections, what we call protections, as you build those technologies. So depending on how you even write your code, in the security and the encryption that you embed into that, you can actually start to create a trust. Now, the trust issue, I have to emphasize on the trust issue because we often refer to blockchain as the trust machine. There's a reason for that. So, ladies and gentlemen, blockchain is not about just cryptocurrency, by the way, just to let everybody know. Blockchain, or the underlying technology, actually brings so many other qualities that helps with creating trust. So, by the sheer nature of the way you build your blockchain, or you develop your blockchain, you enable more and more people to be engaged, and there's a lot more transparency because the data is almost kind of shared. And you have a lot more transparency, hence creating trust where you don't necessarily have trust. So you don't always have to say, oh, let me wait to go to a bank, right, or a middle person to be able to verify certain things. You yourself can be able to verify depending on the data and the information that you have. So again, these new technologies are actually enabling trust, right, which is also very, very exciting, given that in the past we haven't really had this level of transparency and openness that we're starting to see that the technologies themselves are actually bringing. And that is what the fintechs are leveraging. So by using more technologies to make things a bit more efficient, right, you're reducing the cost, you're involving more people, there's more transparency, the information is recorded so that you're able to see what happens when, at what time, in real time. That is the efficiencies and the things that these technologies are doing, and it's enabling that trust you're asking for. I hope I kind of answered what you're asking.
Thank you. Okay.
Yeah, just to add a layer on top of the trust issue. So all the things that Michelle said in terms of cyber security and building that security on, building it into the solution. But on the trust side, that speaks, or it could speak to not just a case of maybe someone exploiting the system, but a valid trader. So the trust, how do you build trust between the customer and the consumer? Very often, especially if we're talking about e-commerce or digital trade, very often the what I ordered versus what I got, or because everything is digital, that trusting that once I authenticate, authorize this transaction or the transfer of value, that I actually do get something back in return. And escrow services for e-commerce are one of the ways as well that we can help to boost that trust coefficient, in a sense where a transaction has been initiated, but value doesn't leave until the escrow service, acting as an arbiter, says you've received value, you're happy with value, I can then release funds to the seller. So that's another layer as well to kind of help build trust, which is separate from all the inherent security and everything that needs to be built into into your solution or platform.
Yeah, before we pass on to Boom, so the question on the product roadmap, considering the fact that InterSwitch has been building products for more than 20 years, maybe you might want to talk about the product roadmap as well.
Sorry, help, just what in
So
sense
he asked the question around what is that product roadmap and the development cycle for products for fintechs.
Well, as it relates to intra-Africa trade, perhaps maybe I can talk about what it is that we have done as an entity. And over the years, like Mike said, we've been at this for about 20 years before the term fintech sort of became popular. But one of the first things we did look, how do we interconnect this continent with all the different jurisdictions and hassles? The first things we did was to launch a Pan-African card called Verve. And I know the lady that was asking about how can they transact, saying she didn't want to use MasterCard or Visa. Well, you have an African you have an African option. It's called Verve and it's accepted in a couple of countries. So that's one thing that we've done. The other thing, naturally, in terms of roadmap, the overarching objective for us was to create value across the continent, right? Then in terms of roadmap, the other thing that we looked at is how can we improve access for the underbanked, right? And we built products and services around agents, and agents being able to provide agent banking services. So at the agent, you can do cash in and cash out services. You can do money transfer across jurisdictions as well. Many of us would have seen this with maybe mobile money operators as well. You can go there and pay bills. You can pay for utilities, that kind of thing. So helping create wealth by offering services to agents, helping drive inclusion to the underbanked. Another thing that we've done is to build platforms to help aggregate MSMEs and merchants be able to aggregate them, a platform that aggregates them for them to trade and transact, and very often carry out what is described as invisible trade, where you're not actually shipping actual goods and services across, but digital products. And more recently, obviously, is what we're doing or what we've done with trying to solve or crack the cross-border payment problem or solution, working with PAP. So we've been working on a platform to help facilitate inter-Africa trade. In terms of the product development life cycle, you can see, Mike said we started 20 years ago. I mentioned our first initiative or foray into this was in 2009 in terms of how do we start to fix this. And we've had initiatives dotted across, and those are the kind of challenges that you face when you're dealing with multiple jurisdictions. So hopefully the AfCFTA can help us break down a number of those kind of barriers and shorten the time to develop and take things out, not just for ourselves, but a bunch of, fintech players out there as well. So I hope that helps.
Yeah, that's fine. But maybe after Boom. Boom?
Yes, so the way I understood the question was, what does the fintech roadmap look like, broadly speaking? And as you could hear from Tunde's explanation, just Dia Fintech, how broad that is. But just my attempt to answer to that question is I like to think in systems. I think the roadmap for fintech, generally speaking, and I cannot claim that I know everything about fintech, but I'll try to tell about the system in which I think about what the roadmap could look like. First, I think there is tackling participation. Next is access to services, and then next would be scaling those services. So when you think about what are the types of solutions that need to be built to increase participation within financial markets or access to financial services, you think about KYC, right? Being able to identify a customer, identify a business to make sure that they're a safe and trusted participant within this global market. So that's one, identifying people. So that would be an example of something that falls under increasing participation within the financial services. Next would be the access to different services, right? So fintechs, help enable access to trade finance, access to credit, access to payments, right? So now you're enabling different business lines, right? So you're talking about commerce, you're talking about financing, you're talking about investments. So that is another bucket. So once you've solved participation, you've made a specific service that today is, in an analog or ad hoc, is rendered in an analog or ad hoc manner. You've digitalized it. Now you can scale it, right? So when I think about the fintech roadmap, generally speaking, and this is obviously, could miss a few points, that's kind of like how I think about the fintech roadmap, generally speaking, across the continent. I hope I...
Yeah, Michelle, before you dive in, and thanks, Boom. I want to give each of you sort of 2 minutes to really talk about, fintechs in cross-border in relation to what your organization is doing specifically, okay, to help fintechs who can power cross-border trade, okay? So maybe as you chime in on the roadmap, you can go ahead and do that as well.
Yeah, thank you, Mike. I just wanted to pick up on your roadmap question, because for me, I'm thinking of it in the context of, when you're developing a fintech product, right? Is that what you were asking? Yes, okay. So when you're developing a fintech product and the life cycle of, getting from point A to point B, that's the beauty of fintech as well. It doesn't take as long as what we had in the past. So generally, a lot of fintechs, what they're really solving is actually bringing in new additions to what we have in the traditional financial ecosystem. So whether you're dealing with things like securities or you're dealing with things like, bonds or whatever it is, they're trying to improve those service offering, right? So they're doing it a little bit faster and a bit more efficiently, and they're leveraging off data, like I was saying, to make it easier for them to build these solutions a little bit faster so you can access them. So for us, when we're looking at building a blockchain product, for example, right, depending on whether we're using an existing blockchain or we are creating our brand new blockchain, we're writing our own code, basically. That might take a lot longer. So it could take a year or something for us to write our code, or it could take 6 months, depending on what it is that we want to actually do with that code. So again, it depends on, and that's the beauty on regulation as well. So if you're dealing with, for example, with open source code, where it's already there and you can access that source code, you might be faster in developing the solution that you're trying to develop. So it might take you 6 months to get to MVP, or it might take you a year to get to MVP. But for example, if we are building, which we are looking into building an actual blockchain, a new blockchain completely from scratch to support the functions that we want to do in Africa, especially around trade, then that might take us a little bit longer because of the complexities that we're trying to address. So again, that's how you measure kind of the life cycle of the product, and also it depends on the technologies that you're using as well to try and build your solution. So again, it's very technology driven, and then of course it depends again on how much data you actually have to build your solution. So there's a number of factors you have to consider, through the life cycle to get from point A to point B. Now, answering your question around what are your organizations doing specifically, I think for us, we are really leveraging off different technologies to come up with new products. right? So we're using things like a little bit of AI here. We might use blockchain. We definitely will cyber-proof, because we want all our solutions to have some cyber elements in it for protections. So we'll leverage off blockchain, for example, to build an EdTech platform to support people to learn about blockchain itself, using an EdTech platform and using blockchain to actually measure how people are responding to things. And then using AI, for example, to read the data sets that we're using, right? So that's an example of how we are using the technologies to build new things. The other side that we are doing, especially in terms of promoting cross-border trade, of course, we're quite heavily on the digital trade protocol and really trying to support the regulatory environment to create an environment where SMEs can actually benefit through the protocol, where we're making it easier. When you get cross-border, you don't necessarily have to wait. Your truck doesn't have to sit and wait at the logistics point for 5 days before your goods can move. We can use technology to digitize and automate, right, that process from customs to logistics and all that, so that the information is digitized and is quicker for you to move from your goods from point A to point B. Again, you can use emerging technology to do that, and we're looking at solutions around that. But I'll give those 2 examples as the areas we're covering. There's many more we're looking at.
Thank you very much. Over to you, Alex.
Thank you. I think from talking about now from a Google perspective, one thing is that we look at Africa as being what we call a digital sprinter. By this, we mean that, and we know Africa has been able to leapfrog a lot on the technologies. That's why adoption of mobile technology is probably greater than any part of the world. Adoption of like mobile money, we are leaders on that. So as Google, we see huge potential in the continent. And some of what we are doing is that, one, in terms of addressing around challenges around and opportunities around connectivity. So we are investing a lot into infrastructure. As at the opening session, Minister Patel talked about Equiano, which is a subsea cable that Google has invested in West Africa, which has so far landed in Togo, Nigeria, Namibia, and here in South Africa. And for us, we're looking in terms of how do we improve the connectivity. And another interesting one is about 15 years ago, Google invested in the Seacom cable, which is on the East African coast. So really for us, we've seen huge potential in Africa for a long time. But apart from that is that we're also looking a lot into the last mile access. Because I know, yes, it's fine, we have the cables, and several cables actually, at our coasts, but then how do we address the whole issue of last mile access? And one of them is that we're actually approaching it from a technology perspective, because technology and innovation perspective. One thing is that Google as a company, we do invest a lot, and we do into research, and do come up with a lot of knowledge. And now, even for example, in Congo, in DRC, we are looking at how can we use light to transmit internet across distances, such a way we don't have to lay cables in some areas that is tough terrain. Maybe there's a huge lake, there are mountains. So how are we looking at that? Same thing in urban areas, where in some of our urban informal areas where because of the, because of the nature of the buildings, it's really difficult to have, let's say, very reliable Wi-Fi access. So investing technologies in this, enabling this kind of access across the continent. The second thing is also in terms of building the human capital. And the example, yes, we've been doing a lot, but the example I want to share here is around how we are trying to build capacity around what I'll say regulators, drafters of policies, legislators, and the likes. And one of the things we are looking at is that how do we build a capacity for them to be able to build better digital policies? Because one of the things we need to know is that when it comes to regulation, even not regulating is an option, because it doesn't mean that you always have to put down some kind of regulation, or you can approach it from a self-regulation. So there's various ways of doing this, and then there's an initiative we've been running which we call the Africa Internet Academy, and we work with academic institutions to be able to provide training opportunities in such a way that we can be able to explore various ways of regulating that will work very well for Africa, in such a way that we don't necessarily have to pick what we are seeing in the West and bring it to Africa, but we can try and approach it from an African perspective. The third thing as well, just to harness more and more of innovation and solutions coming from the continent. For example, here in South Africa, Google is investing in setting up a data center. So we'll be able to do a lot more of having a lot more of our technologies and cloud services being available. The same thing as well in Nairobi, in Kenya, we are setting up an R&D center. By that, what it means is that we'll be developing some of Google's technologies right here on the continent, And the other third thing is as well in Ghana, we've actually been having an AI center. So for us as a company, yes, as much as we're a global company, we're also looking at how to invest, how we can be able to build solutions from Africa. Because Africa is also building a lot of solutions that are important to us and important to the world. The last thing is
Okay, quickly.
I've been saying a few last ones, yeah? I think for me, and this is a term I want to pass across in terms of the Africa Free Continental Free Trade Area. One of the things I would like to see it is being a digital fast trade protocol. I think if you are to approach it from that particular perspective, it can really unlock a lot of the competitiveness we have as a continent. So it being a digital fast trade protocol, I think will really unlock a lot of opportunities for us in the continent. Thank you.
Thank you. Tunde, quickly.
Yeah, very quickly, one of the things we're currently working on to drive cross-border trade is, cross-border is building a Pan-African, payments ecosystem. We built this on a private permissioned blockchain infrastructure, or DLT. We say DLT because blockchain gives governments jitters, and it's not just about cryptocurrency. So we built on a private permissioned blockchain, and the aim is to onboard financial institutions and players within, financial services across, different jurisdictions and markets, working closely with PAPS to help, bring the PAPS vision to life. And the ultimate aim for that is seamless exchange of value, where we can transact using our African currencies without having to triangulate against the USD or any other foreign currency.
Thank you. Boom.
All right, thank you. So DABA being a full-stack multi-asset investment platform, we are really focused on the movement of investment capital. So two things that we are doing. First is by allowing Africans from whatever country to invest across the continent. So an investor in Cote d'Ivoire wanting to invest in Nigeria, or an investor in Nigeria wanting to invest in South Africa. So we want our platform to essentially be that go-to investment tool that enables cross-continental investments, whichever currency, and you being able to hold securities from any country. The second thing that we're doing is around increasing investment participation, both locally and globally. So from a global aspect, we're really honing on the African diaspora across US and Europe, being able to allow them to invest more broadly across the continent. And locally is distributing investment products to the people that today do not have access or do not feel compelled by the investment products that are made available. So those are the two things that DABA, as a financial technology company, is doing to facilitate cross-border trade and investment.
No, thank you, panelists. And I believe we've had a very good engagement. You might have other questions, and we look forward to receiving them, and we'll make sure that we do respond to them and get back to you. Maybe you can reach out to the organizers, and then we'll answer and get back to you. We've touched on a number of issues here, and we started with looking at how we create other bright lights, and we talked about learning from where it has worked. We talked about internet penetration, how we can invest more, and of course Google has spoken to some of the efforts that they are making. Electricity, building more digital skills, working with regulators to actually put in place the right types of regulation, and access to capital as being some of the key areas that we needed to look at. We talked about diversifying investment, sources of investment, and the types of investment as one way of making sure that IPs and the value that we create on the continent stays on the continent. For the MSMEs, we talked about how we can leverage the rules within the protocols, the AfCFTA protocols, and also credit to the MSMEs as a way of unlocking value for them. We also talked about cybersecurity as being a fact of actually being a fintech. That is the one thing that keeps most entrepreneurs up at night,
how they mitigate against cyber risk. So clearly, as we are building locally, we have to build to world-class standards and be able to protect the investments and the technology. We talked about roadmaps, marketing and creating the right roadmap for fintechs, and there was the talk around market, understanding the market, understanding the customers, KYCing the customers, deploying the right type of technology and making sure that the idea is able to solve a problem and that we must be able to leverage data along the way and that we should keep the life cycle short. Then we talked about areas that these fine panelists have been supporting cross-border trade under the AfCFTA. So we talked about new technologies deployed to solve different types of challenges. We talked about Michelle's work on the protocols in support of the AfCFTA. We talked about Google's investments on infrastructure from fiber to data centers and investment in R&D in Kenya. We talked about capital actually being unlocked for players within that space. Then we talked about capacity building for regulators as being one of the initiatives, especially Google is pursuing. Then we talked about developing a digital-first trade protocol being one of the initiatives that Google would like to support. InterSwitch talked about its work on a Pan-African payment system in partnership with PAPS to also help using blockchains to help to unlock the value of Pan-African payments. And then from Boom, he talked about helping to facilitate diaspora investments, okay, and also helping to distribute investment products among people who would not have had access to these products. So these are some of the areas. We clearly know that fintechs would be major players in the emerging future of Africa. And with the points that we've listened to here over the last 1 hour, clearly with partnerships between the public and the private sector and the fintechs, we can actually accelerate the growth of Africa, of the African economy using cross-border trade. Once again, thank you everyone for listening, and thank you for the effective participation. Thank you, panelists.
Thank you very much to our esteemed panelists. Thank you to our moderator for this very interesting conversation on promoting fintechs for cross-border trade. You did a great job. Thank you very much. I think someone should be around to take a photo of you really quickly. Hopefully, there's a photographer in sight, maybe. Well, thank you very much for being with us, and thank you to everyone here in the audience for participating and engaging in this conversation. We will now give a little bit of time to the audience in other breakout sessions who were like in other rooms to reconvene here in the plenary room, and we will start again in a few minutes with our closing ceremony. So please bear with us a little bit, and we will be back in a few minutes. Thank you very much.
Ladies and gentlemen, our closing ceremony is about to begin. If we could ask you to please make your way into the plenary, our closing session is going to begin in the next 5 minutes. Please can we get everyone back into the plenary room so that we can close off the most amazing 3 days. Thank you.
Sporting editors had also given me $300 in cash, most of which was already spent on extremely dangerous drugs. The car looked like a mobile police.
Ladies and gentlemen, please make your way back to the plenary. Our closing ceremony is going to begin in 2 minutes. If you can please all make your way back into the plenary, our closing ceremony will start in Hall 9 in 2 minutes. Thank you. Ladies and gentlemen, now that we are in the room, please may we ask you to all take your seats. Please may we ask all our delegates to take your seats. Ladies and gentlemen, please take your seats.
Hello again, everyone. Thank you all for being here. I would just like for you all to please acknowledge the presence here of the Vice President, Matashile, who will speak as part of this closing ceremony, who's just made his way into this plenary room. Thank you all for being with us. This AfCFTA Business Forum, the 2023 Business Forum, is coming to a close. And I want to thank you all. I want to thank you all once again for not only attending this event, this 3-day summit, but also engaging so actively throughout the event with all the discussions that we've had with our speakers, and for giving your insights into this topic that is such a broad and dense topic, and for helping in your very own way to move the conversation forward when it comes to implementing the AfCFTA agreement. I want to thank everyone for being part of this outstanding event that is in service of the single African market, and of course thank our excellencies, honorables, delegates who have made also their presence here so important. Thank you all. Without further ado, I'm going to introduce the very first speaker for this closing ceremony, and I will please ask you to join me in welcoming Cynthia Nyasingbe. She is the Senior Advisor on Private Sector Engagement at the AfCFTA Secretariat, and she will now please give her summary of the 3-day event. Thank you very much.
Thank you very much, Program Director. Thank you. Your Excellency, Paul Mashatile, Deputy President of the Republic of South Africa, Your Excellency Wamkele Mene, Secretary General of the AfCFTA Secretariat, Honorable Deputy Minister Majola, former ministers, DGs, SGs, CEOs of companies, businesswomen, businessmen, delegates, allow me to stand on all existing protocol. Distinguished ladies and gentlemen, good evening. We are nearing the end of the AfCFTA Business Forum 2023. And before we depart, it's just right that we take a minute to just wrap up, sums up what has been discussed during these 2.5 days. I hope that you have found the plenaries, the panel discussions, the conversation interesting, because indeed this is a platform to bring the private sector together to dialogue and see how we can increase trades, intra-Africa trade, on the continent under the AfCFTA. We kicked off the discussions on Sunday in the afternoon with an opening ceremony graced by several dignitaries. His Excellency Mamadou Issoufou, former President of the Republic of Niger and champion of the AfCFTA. We had the Deputy Chairperson, Dr. Monique Nzanzambangwa, Her Excellency Nardos Thomas Bekele, the CEO of Audanepad, President Benedict Orama and Chairman of the Afreximbank. We had also the President and CEO of Africa Finance Corporation, Mr. Samaila Zubaira, Ms. Ojambo Sanda, Assistant Secretary General of UN Global Compact, who one by one delivered important and powerful remarks about the timely opportunity of this gathering and urging all of us as Africans to drive the AfCFTA, to own and drive it. The opening ceremony was also punctuated by the keynote speech from the President of the Republic of South Africa, His Excellency Cyril Ramaphosa, read by the Minister of Trade and Industry, Honorable Ibrahim Patel. The speeches and panel discussions that we had on day one really made it clear that the private sector is the driver of trade and should be at the core of the conversation around the implementation of the AfCFTA. We are creating a one African market of 1.3 billion people, and the private sector needs to prepare itself. It needs to seize the opportunities of the AfCFTA. It means it needs also to work towards expanding its businesses, strengthening its competitiveness, boosting innovation, and creating jobs. Our dignitaries highlighted that while there are huge opportunities under the AfCFTA, there are also several roadblocks that need to be addressed. In terms of challenges, we raised that business continues to face on the continent the lack of access to finance, poor infrastructure, and the high cost of doing business. We need to support investment in infrastructure, including energy, transport, and ICT, so as to reduce business costs while stressing the need to promote regional value chains and the development of local industries to increase intra-regional trade. The private sector was urged to dialogue and identify together opportunities for investment in the value chains that will increase intra-Africa trade. On day two, we went deep diving in the value chains, looking at the nitty-gritty. What are those value chains? What do we need to do? What kind of policies need to be put in place? What kind of policies are aligned with the needs of the private sector? We looked at value addition in the various sectors that have got huge potential for the economic development of our continent. These sectors being agriculture, pharmaceutical, automotive, transport, logistic, mining, clothing, and textile. And when it comes to, for instance, value addition, few points were made. The first point that was made under the value chain was that we need to look at financing. Financing in the sense that today, if we really want to support our businesses to integrate the value chains, access to finance obviously is a huge issue that needs to be addressed. Another session looked at expanding digital trade and interoperable payment systems in the AfCFTA digital trade. That session explores the innovation taking place in the African continent in terms of payment and settlement systems, and it was encouraging to note that a lot of investment has gone into building the fundamental infrastructure needed, such as fiber optics, across the continent for the fintech industry, which is a major facilitator for market expansion and cross-border trade. Operational tools have been developed under the Secretariats and together with its partners such as the Afreximbank. We have the Pan-African and payment settlement system that has been developed to indeed promote I would say cross-border payments using our local currencies. And these are tools that need to be rolled out effectively across all African countries so we can see effective trade happens, we can see our businesses trading seamlessly using digital platforms, and also reducing the cost of doing business. It is expected that the negotiation on the digital trades and IPR protocol will harmonize rules and regulations and set a rigorous framework that will augment intra-Africa trade. That notwithstanding, more investment is needed in the sector. They too also saw the launch of the HER AfCFTA by Ms. Auna Eziakonwa, as Assistant Secretary General and Director of UNDP's Regional Bureau for Africa, and His Excellency Wamkele Mene, in the company of notable African women and trailblazers who are changing the status quo amidst the limitations women face. Her AfCFTA seeks to bring the issues affecting women in trade to the center stage by creating a platform that will supercharge export readiness of women to explore the opportunities in the AfCFTA. That was the only gender theme panel that we had during these sessions, but was a powerful session, just listening to those women who were not only presenting the good things that women do on this continent, but also urging all of us to really look at the women as a key, I would say, an economic impactor on this continent, and therefore we need to make sure that all the conditions, or let's say the environment, is conducive for the development of economic emancipation, but also the development of the women businesses. We also had the opportunity on the second day to discover what we call the AfCFTA Hub. The AfCFTA Hub is a unified electronic gateway connecting e-government portals, businesses and consumer applications, and supranational platforms into one continental digital ecosystem. We were reminded by the presenter of the AfCFTA Hub, Dr. Edem Ajogenu from Afro Champions, that when we think about trade, we always think about just maybe the Ministry of Trade. But in fact, 80% of what happens under trades fall in different sectors, in different regulatory departments, such as health or even the banking systems. When we look at trading, for instance, pharmaceutical products, the regulators such as the Ministry of Health needs to be onboarded. When we look at financial cross-border payments, etc., obviously the financial institutions, those regulators also need to be onboarded. So it makes sense for us to come up with this platform that will be an integrated platform for all these stakeholders, not just commercial stakeholders, but also the regulators in the health sector, in the banking sector, etc., to have a one-stop shop where SMEs can trade seamlessly using, obviously, e-certificates, etc., linked to a digital marketplace. That specific platform evolves around 3 key strategies. First, it seeks to connect multiple digital platforms across Africa to plug SMEs into continental value chains. Secondly, it highly simplifies customs and related trade regulatory compliance procedures. And thirdly, it heavily digitizes supply chains, establish quality assurance to prevent abuse. So we invite all SMEs to register on the AfCFTA hub and have an ID. So the AfCFTA hub, when you register, will generate an AfCFTA ID for the SME. And that ID will be used by all the stakeholders connected to the platform, so to promote or to facilitate the trades using the AfCFTA hub. Pharmaceuticals, the sector of pharmaceuticals has generated a lot of interest from our partners and sponsors. And I think apart from the main program that we had on pharma, there were 2 different side events. One this morning, I believe, conducted by McKinsey, and another one yesterday by the Swiss Africa Business Forum. And so I think COVID really has definitely shown us flames, and we ought to take our lives in our hands and develop our pharma industry. That was what was pushed as a message during those sessions. One figure that we need to have in mind is that $16 billion is really the value of imports when it comes to pharmaceutical products on the continent. And therefore, we hope that by next year, we will be able to prove or to reduce that number by half or even more. So these are the opportunities that were presented. And also, the sessions on pharmaceuticals looked at other issues, such as harmonization of regulatory, of the regulations, I will say, such as the procurement system. There was a strong urge for our institutions, the African Union, to actually come up, obviously with the private sector, to come up with a pooled procurement mechanism that will allow the procurement of good products and the distribution of those products to our populations. Agro-processing was another sector that was discussed. And at that meeting, which was also very attended, the meeting took note of the heavy reliance on import of agriculture and processed foods that could be produced on the continent. In this regard, the meeting also called on AfCFTA secretariats to work with governments to put in place the right policy and support systems that will encourage the population to consume first what is produced locally. There was also a call for more effort, maybe urging the secretariat, the AfCFTA secretariat to work with international development financial institutions, including the Afreximbank, to support the financial requirements to agro-industry development under the context of the AfCFTA. The issue of SMEs financing was also raised in this panel, noting the fact that the requirements for accessing these finances are not commensurate with the existing SMEs business ecosystem on the continent, especially in the agricultural sector. There was a request that the AfCFTA Secretariat work with the partner, with our DFIs partners, to develop and provide catalytic financing to support SMEs in agro-processing and export. And this morning, we had the session on financing itself with our DFIs. Afreximbank was represented. We had our local banks also represented and some investors to look at the offerings that those actors are putting on the table when it comes to financing value chains and financing SMEs. The development of regional continental value chains will require capital. And we know, I was talking just now about the financing of SMEs in the agricultural sector, but it's not just in that sector, it's across all the sectors. It is really le talon d'Achille, as they say in French, of our our countries when it comes to financing the economy of our countries. So we have to make sure that there are innovative solutions that are developed together with commercial banks and the DFIs to provide accessible financing to our SMEs so that they can integrate the regional value chains that we are putting in place, and that we can have, we can really see the industrialization that we want, the strengthening of our industrial capacity. When it comes to, I will go back. Right. Another session that we had was doing business. As you are all aware, the AfCFTA has, as part of the AfCFTA architecture, we have a protocol on investment, which was adopted recently by the heads of states of the African Union. And so that protocol today will regulate all types of activities in terms of trade and investment on the continent. When we try to attract FDIs and encourage our own investors to invest on the continent, it is key that we establish a conducive investment environment. Doing business should be easy, and what investors really want to see is a transparent, credible, predictable investment framework. And this is precisely what we want to achieve with the investment protocol that has been approved. This particular protocol has specific chapters dedicated to investment promotion and facilitation, as well as specific chapters dedicated to investment protection. We heard from the experts, practitioners who have been part of the drafting of this protocol this morning, the likes of Professor Makan, that the investment protocol as it stands today was crafted with the intention to boost sustainable investment and intra-Africa trades. It therefore provides a framework. It therefore provides a framework for and guiding principles, and what is now left for the countries is to negotiate the specific annexes on how it will be implemented at national levels, knowing that not all African countries are at the same level of development. But very important issues were also raised regarding the capacity of government to negotiate huge projects, for instance, and the impact that badly negotiated contracts can have on the continuity of projects investment that have been already established by past administrations. The dispute settlement mechanism was also discussed, and what was also raised was the fact that the question that was really posed also was, how can we make Africa a dispute resolution center on the continent under the AfCFTA instead of always seeking to go abroad in New York or in Paris for our dispute resolution? There was also a call for our IPAs to work in synergy. A lot of competition, it was noted that there is a lot of competition between the IPAs, and maybe we should think about a continental framework to support investment in specific sectors and to support also the diaspora investment. How can we mobilize the remittances that come from our diaspora into productive sectors? Obviously, all these are pertinent issues which show that the conversation is to be continued and that there are many aspects that need to be ironed out. But one thing was clear throughout the discussion is that the adoption of the investment protocol is definitely an achievement that will help bolster investment and intra-Africa trade. There was also another session on transport and logistics. We will not spend too much time on talking about the lack of, the gap of, in terms of infrastructure development on the continent. But one thing is for sure, if we really want to push for intra-Africa trade and make sure that we connect the 55 countries that we have on the continent and we allow for a seamless of movement of goods, of persons, etc., we definitely need to invest in connectivity in infrastructure. We had also a session on the roles of chambers of commerce and business council in supporting SMEs. They are key actors working together daily with the SMEs, with the MSMEs, the micro and small businesses, with the cross-border women. So how do we make sure that they have an active participation in the implementation of the AfCFTA is the question. And I believe that together, through dialogue and partnership, we will be able to put in place a mechanism that will allow effective participation of the Business Council, the Chambers of Commerce, in the support of our SMEs and the implementation of the AfCFTA. I believe I will stop here. These are the main takeaways that we can maybe take with us when we go back. And definitely this is the first gathering that we have. The discussion will continue, the conversation will continue. I hope and we hope that you had a great time with us during the past 2 days and that we will be able to meet next year, but with concrete actions or steps that we will have, we will show to demonstrate that it was not just maybe a talk show, but that we are on the verge of really moving towards this one African market that we are all aspiring for. So thank you very much, Your Excellency.
Thank you very much. That was Cynthia Nyasingbe for offering such a thorough summary of the 3-day proceedings of this business forum, a senior advisor on private sector engagement at the AfCFTA Secretariat. Thank you so much. Ladies and gentlemen, I'm now going to welcome our next speaker for this closing ceremony, representing Comoros, Honorary Ali Boura Musa, Minister of Energy, Water and Hydrocarbon from Comoros. If you could please make your way to the stage and give us your remarks. Thank you so much. Ladies and gentlemen, please give him a warm welcome.
Son Excellence Paul Machatile, vice-président de la République sud-africaine, Monsieur Wamkele Mene, secrétaire général de la zone de libre-échange continentale africaine, Mesdames et Messieurs les ministres, Mesdames et Messieurs les présidents des institutions africaines partenaires de l'ASLECAF, Mesdames et Messieurs les chefs des organes et institutions du système de l'Union africaine et des communautés économiques régionales, je voudrais de prime abord réitérer les chaleureuses et fraternelles salutations de Son Excellence Azali Assoumane, président de l'Union des Comores, à son frère et ami, Son Excellence Cyril Ramaphosa, président de la République d'Afrique du Sud. Il avait souhaité être présent en cette rencontre majeure pour l'accélération de la mise en œuvre de l'ASLECAF, mais des contingences nationales l'ont retenu. Avec votre permission, je voudrais également m'acquitter d'un agréable devoir, celui de remercier les autorités locales de cette belle et agréable ville de Cape Town pour les dispositions idoines prises pour la bonne tenue des différentes activités entrant dans le cadre du Forum des affaires de l'ASLECAF édition 2023. Mesdames et Messieurs, au cours de ce forum, j'ai pu apprécier l'engagement et l'engouement du secteur privé et de la communauté des affaires à s'approprier l'ASLECAF et à relever le défi de donner une impulsion franche et significative au commerce intra-africain. Cela passera nécessairement par la promotion de la production, de l'industrialisation, l'émergence des chaînes de valeur, la promotion des services, du commerce électronique, de la facilitation du commerce, de la connectivité, autant de prérequis dont les éminents panélistes et participants ont été invités à présenter et à analyser les enjeux. J'ai l'honneur de représenter ici l'Union des Comores, petit État insulaire en développement, confronté à de nombreux défis et doté d'immenses potentialités. Située au carrefour des grandes routes commerciales, l'Union des Comores, ces îles au parfum, peuvent devenir, grâce à la mise en œuvre de l'ASLECAF, une porte vers le marché africain. C'est la raison pour laquelle la connexion avec le continent demeure non seulement une préoccupation, mais également la priorité des priorités. Cette priorité, nous n'avons cessé de la réaffirmer au niveau national lors du processus de ratification de l'ASLECAF. Nous le réaffirmons ici devant cette auguste assemblée. L'ASLECAF fera de l'Union des Comores et de toute l'Afrique une destination de choix pour le commerce et l'investissement. En effet, l'Union des Comores a signé l'accord de la ZLECAf le 21 mars 2018 à Kigali, au Rwanda, lors de la 10e session extraordinaire de la conférence des chefs d'État et de gouvernement de l'Union africaine. Depuis février dernier, l'Union des Comores a déposé ses instruments de ratification de la ZLECAf auprès de la Commission de l'Union africaine. Ces dates entreront sans aucun doute dans l'histoire de notre pays et du continent. Sur instruction de son Excellence M. Azali Assoumane, président de l'Union des Comores, des consultations ont été menées au plan national avec toutes les parties prenantes, notamment le secteur privé. Il en est résulté l'élaboration d'une stratégie nationale de mise en œuvre de la ZLECAf. Elle tient compte de la particularité de l'Union des Comores et de son ambition d'être connectée au continent, afin d'y exporter des produits et services et d'attirer les investisseurs africains notamment. Pour cela, par ma voix, l'Union des Comores demande au secrétariat de la ZLECAf et ses partenaires stratégiques de l'accompagner et elle leur garantit en retour d'être le plus fervent ambassadeur de cette zone de libre-échange continentale africaine. La prospérité entendue de la ZLECAf doit nécessairement être partagée aux fils et filles de toute l'Afrique. Les Comores, comme l'a souvent réitéré son président, restent et demeurent dans la vision de l'agenda 2063, celle d'une Afrique intégrée, prospère et pacifique, dirigée par ses propres citoyens et représentant une force dynamique sur la scène mondiale. Mesdames et Messieurs, en février 2023, son Excellence Azali Assoumane, président de l'Union des Comores, a été désigné par ses pairs président en exercice de la conférence des chefs d'État et de gouvernement de l'Union africaine. C'est un honneur fait au peuple comorien. Il en est fier tout autant que reconnaissant. Il se devra donc d'en être digne et il le sera sans aucun doute. C'est au cours de ce même sommet que l'année 2023 a été dédiée à l'accélération de mise en œuvre de la ZLECAf. En tant qu'État partie, l'Union des Comores lance un appel à tous les États non partis à signer et à ratifier la ZLECAf dans le respect strict de la volonté des pères fondateurs. Mesdames et Messieurs, qu'il me soit permis de vous rappeler que la mise en œuvre des autres projets et programmes de l'agenda 2063 est nécessaire à l'atteinte des objectifs de la zone de libre-échange continentale. Je voudrais ainsi évoquer le protocole sur la libre circulation des personnes africaines ou encore le programme de développement des infrastructures pour rendre opérationnels les corridors maritimes. Nous nous en faisons les promoteurs. Mesdames et Messieurs, avant de conclure, je vous invite à reconnaître qu'avec des économies petites et fragmentées, nous sommes marginalisés, exploités dans le système économique mondial. En créant la zone de libre-échange continentale africaine, nous avons amorcé un voyage de changement pour le meilleur. C'est un message fort que l'Afrique envoie non seulement à ses propres enfants, mais également au reste du monde. Je vous remercie de votre notation.
Thank you. Merci beaucoup, Honorable Ali Boura Moussa, ministre de l'Énergie, de l'Eau et des Hydrocarbures des Comores. Merci beaucoup. Ladies and gentlemen, I will now welcome to this podium our next speaker, His Excellency Wamkele Mene, Secretary General of the AfCFTA Secretariat, who will now give his closing remarks. So please allow me to welcome him with your warm applause as he makes his way to the podium. Thank you.
Thank you very much, Madam Program Director, Deputy President, Honorable Mr. Paul Mashatile, and his delegation, Honorable Minister Ali Musa, representing the President of the Union of the Comoros, who's the chairperson of the African Union Assembly of Heads of States and Government, ministers that are still here with us today, former ministers, Deputy Minister Fikile Majola, ladies and gentlemen, it is a pleasure to have reached this point after a very, very intensive program in the last few days. My task today is very simple. It is to thank you for your robust engagement, for your active participation, and of course, for your guidance as to how you foresee the role of the private sector in the implementation of the AfCFTA. In 1990, Professor Adedeji, who at the time was the executive director of UNECA, wrote a very interesting paper entitled The African Alternative Framework to Structural Adjustment Programs. You'll recall that at that time, almost the entire African continent was subject to very, very severe structural adjustment programs. May I quote in part the first sentence of the African Alternative Framework to Structural Adjustment Programs. Open quotes. The structure of the African economy defines the essential features of Africa's central problem of underdevelopment, end quote. Professor Adedeji goes on to say that this character of Africa's economy of underdevelopment includes a weak productive base, characterized by low productivity and productive activities dominated by either subsistence or export-oriented primary production. Professor Adedeji's observation from 1990, in my view, is still relevant today. Of course, the advantage that we have is that we have you as the private sector, which arguably is more robust than it was in 1990. That is why this trade dialogue with the private sector is so critical, so that the observations that Professor Adedeji made about the state of Africa's underdevelopment and the causes for that underdevelopment, that we position ourselves as a continent to overcome them. Investment in the private sector and investment in the value chains that my colleague Cynthia mentioned, agriculture and agro-processing, the automotive sector, pharmaceuticals, transport and logistics, in order for us to significantly enhance intra-Africa trade, we will require investment in those productive sectors to drive intra-Africa trade. The last point I would make by way of observing what we have been discussing over the last 2 days. Yes, we know that, as I mentioned in the opening statement the other day, yes, we know that many countries in Africa are beginning to undergo a context of debt distress. But if we, as a continent, if we learn from the experience of others who have successfully industrialized, we will observe that in the course of these countries' industrialization, the tipping point was when they looked inwards to the domestic market that they have. China, India, and the early industrializers all relied on the domestic market for accelerated industrialization. Now, as a continent, our individual economies are not large enough for not a single country in Africa to be able to drive industrialization on its own. That means that as we consolidate the market of 1.3 billion people, as we said, which by the year 2050 will be in excess of $16.2 trillion, we consolidate the market and we look at ourselves as a continent as an AfCFTA domestic market. So the sectors that we have identified, which are sectors of significant growth, particularly, as we mentioned, the private sector engagement study that we presented on the opening day and yesterday during the World Economic Forum side event, had very, very positive estimates of the role of the private sector, the growth of domestic demand, which will be stimulated by an integrated market. And so we have a very unique opportunity to intensify our engagement with the private sector so that the private sector is a pillar of growth and investment on our continent. So today is the end of the first of its kind, an intensive private sector engagement, which I believe and I hope is not going to be the last. In fact, as the Secretariat and as the African Union, and as you would have heard, AUDA, NEPAD, the African Union Commission, and ourselves are committed to working with you to ensure that the contribution that you make to the AfCFTA enhances intra-Africa trade and creates opportunities for all. You also would have heard that all of the development finance institutions in Africa, Africa Finance Corporation, the African Development Bank, Afreximbank, all of them stand ready to provide all of the support that is required to you as the private sector to ensure that we unlock the potential that our continent has. Our continent cannot be a continent of potential forever. At some point, we have to unlock that potential, and I believe that working together with the private sector, mobilizing private investment, mobilizing investment of our development finance institutions is how we will be able in 20, 30, 40 years' time to ensure that our continent is as globally competitive as any part of the world today. Finally, let me close by thanking again our sponsors who have provided us with the support that we need to make sure that this event becomes a success. I want to thank also Honorable Deputy President. I want to thank the government of South Africa for extending to us all of the facilities that we require to make sure that we succeed. And in this regard, I want to thank the police, the security, the marshals, everybody provided support to us. I would like to thank also my colleagues in the Secretariat who worked tirelessly to make sure that we succeed. 1,200 delegates coming from different sectors of the economy, and of course, coming from different parts of the African continent. So I want to thank my colleagues in the Secretariat. They are by far the brightest and the best that Africa has to offer. And that is why, as I noted on the first day, I do not need experts from a country in Europe to come to sit in my office. All of the colleagues in the Secretariat were exceptionally good in the work that they undertook, but I must make special mention of Grace and Cynthia, my two bosses, whom by now I am sure you know very, very well. They are my bosses. They tell me what to do and what not to do. So I want to thank them very much for the outstanding work that they did to ensure the success of this event. I want to thank a person who has been behind the scenes and who equally contributed, if probably more than anybody, to make sure that this event goes smoothly. Margaret, who is our events manager, I saw her sitting over there, hiding in the corner. Margaret, we owe you a debt of gratitude. Thank you very, very much for all of your help, professionalism, and making it look like it's very, very easy. Thank you very much. I want to thank our program directors who have done an exceptional job in managing our program. I want to thank the speakers, the panelists. We had a very, very high quality of panelists and speakers. Again, Africans whom when we listen to make us extremely proud for their expertise and knowledge. We shall convene this event again next year on the basis of an action plan that will come out of the discussions that took place and the summary that Cynthia read out to you. So I wish all of you a safe journey to your home countries. I am certainly energized. I am certainly re-motivated to make sure that our continent succeeds. Thank you very much.
Thank you very much, Excellency Wamkele Mene, the Secretary General of the AfCFTA Secretariat. Thank you for your closing remarks and for telling us, all of us Africans, that we have a lot to look forward to when it comes to the future for the continent. Please, ladies and gentlemen, allow me to welcome our next speaker for this closing ceremony. I will now welcome to this stage Deputy Minister Majola, Fikile Majola, Deputy Minister of Trade, Industry and Competition of South Africa. If you could please join me here to the stage. And please welcome him, ladies and gentlemen.
Program Director, His Excellency Mahamadou Issoufou, former President of Niger and AfCFTA champion, Her Excellency Monique Nsanza Bagwana, Deputy Chairperson of the AU Commission, His Excellency Wamkele Mene, Secretary General of the AfCFTA Secretariat, Professor Benedict Orama, President of the Afreximbank, Honorable Ministers and Deputy Ministers who are present here, in particular, my colleague, Minister Ali Musa of the Comoros, ambassadors, business leaders, distinguished ladies and gentlemen. We have concluded 3 days of rich deliberations, insightful discussions, frank exchanges, and more importantly, a common determination to fast-track the implementation of the African Continental Free Trade Area. I have no doubt, as we depart to our home countries, we will continue our engagements and concretize partnerships to ensure that we deliver on the promise of an integrated and prosperous continent. Indeed, we can now say without any equivocation that it is now Africa's time. South Africa is both honored and humbled at the opportunity to co-host the inaugural AfCFTA Business Forum. On behalf of the Government of the Republic of South Africa, I would like to express our sincere appreciation to all those involved in delivering a successful event. In particular, I would like to thank His Excellency Mahamadou Issoufou for his resolute commitment in championing the AfCFTA, and His Excellency Wamkele Mene, Secretary General of the AfCFTA Secretariat, for his leadership in facilitating the implementation of the AfCFTA and for organizing this successful platform for private sector engagement. A special thanks to Her Excellency Monique Nsanza Bagwana, Deputy Chairperson of the AU Commission, for her valuable participation in this business forum. To all esteemed ministers, deputy ministers, captains of industry, business leaders, heads of missions, panelists, and delegates, thank you for sharing your wisdom with us. Your Excellencies, esteemed delegates, ladies and gentlemen, it is now my singular honor to request you to join me in inviting His Excellency Paul Mashatile, Deputy President of the Republic of South Africa, to close this inaugural AfCFTA Business Forum. Mr. President, Deputy President.
You may be seated. Program directors, thank you very much, and thank you very much to Deputy Minister Majola. Your Excellency, President Mahamadou Issoufou, former President of Niger, and also African Continental Free Trade Area champion. Your Excellency, Dr. Monique Nsanza Bagwana, Deputy Chairperson of the African Union. Your Excellency, Minister Ali Obora Mosi. Your Excellency, Ministers who are present here today. His Excellency President Azali Assoumani, President of the Union of Comoros. Your Excellency Wamkele Mene, Secretary General of the African Continental Free Trade Area Secretariat. Directors of Afreximbank, ambassadors, and distinguished dignitaries, business leaders, CEOs, members of boards and associations, distinguished ladies and gentlemen. I'm honored to speak to you at the conclusion of the African Continental Free Trade Area Business Forum 2023. The forum has been billed
as Africa's biggest business event to promote private sector participation in the acceleration of the implementation of the African Continental Free Trade Area. We would like to thank the African Continental Free Trade Area Secretariat for hosting the forum in South Africa. For those of you who come from outside our borders, we would like to invite you back to our country for a longer period, because in 3 days, it surely was not enough for you to enjoy our hospitality, especially here in the mother city. Program Director, our continent is moving in the right direction towards one African market. To date, 54 of our countries have signed the agreement. As of February 2023, 47 out of 54 signatories have deposited instruments for ratification. We are well on our way to creating the world's largest single free trade area with 1.3 billion people and a gross domestic product of $3.4 trillion. This represents an important step, a step forward which must culminate in the ratification of the African Continental Free Trade Area Instrument by all African Union member states. The implementation of the African Continental Free Trade Area will improve intra-Africa trade, the continent's share and participation in global trade, stimulate and improve her economy, as well as contribute to lifting millions of people out of poverty. Yesterday, the local press reported on recent remarks by the Secretary General of the African Continental Free Trade Area to the effect that the free trade area holds the potential to inject $450 billion worth of investments into the African economy and help lift between 50 to 100 million people out of poverty by 2035. This would represent a significant improvement to the economy and the quality of life of many of our people in the continent. For her part, Rebecca Grainspan, the Secretary General of the United Nations Conference on Trade and Development, has pointed out that Africa boasts $21.9 billion of untapped export potential. She has suggested that an additional $9.2 billion of export potential can be realized through partial tariff liberalization under the African Continental Free Trade Area over the next 5 years. There exists continental-wide consensus on the need for Africa to reduce structural and regulatory barriers to market entry and to invest in the necessary infrastructure to facilitate intra-African and global trade, more so road and maritime infrastructure. Program Director, at present, the quality of much of the continent's maritime roads and railway infrastructure is less than satisfactory. There are few road links, general poor roads infrastructure maintenance, and a limited regional road linkages throughout the continent's 5 regions. Yet, roads are the predominant mode of transport on the continent, carrying approximately 80% of goods and 90% of passengers. Without infrastructure, rail and maritime, trade cannot realize its full potential. Road transport is therefore an indispensable part of daily African economic activity and critical to facilitating cross-border trade and regional integration. Another impediment we must confront is inefficiencies at border posts. Many officials and unofficial inspection points along transport corridors and low road densities. I'm informed that during the last 3 days, you as delegates have had extensive discussions which identified more impediments to African trade, but also the solutions necessary for the implementation of the African Continental Free Trade Area. The Solutions Program Director that would have been identified will hopefully take us a step closer to the actual investment projects that give renewed meaning to the objectives of the African Continental Free Trade Area. We similarly hope that you have emerged from this conference with platforms for further interactions to follow up on the realizations of the solutions you have identified. This is because, as you would be agreed, it is not enough merely to point out the problems. We have a moral duty to search for answers to the question, what do we do? And so, meetings of this nature or summits of this nature ought to serve as launching pads for long-lasting relations among the African business community in particular, in pursuit of practical programs on economic action. Your interactions, delegates, have hopefully also reflected on the factors we must all continue to watch and attend to for the successful implementation of the African Continental Free Trade Area. This includes, amongst others, factors such as the following: the skills and technologies for the 4th industrial revolution, without which we cannot be globally competitive. Second, national and regional industrial policies to create and support growth of vibrant African economies. Third, public policy instruments to support and promote social and political stability, and the role of the private sector in this regard. Fourth, accepting internal and external migration as a fact of life which can and must be managed in the context of regional and continental integration. Fifth, a deliberate plan to manage rapid urbanization that is currently unfolding throughout the continent, which calls for the imagination, planning, and building of post-colonial new cities that will anchor the continent's economies of the future. And 6, building African unity and solidarity as a sine qua non for the all-round advancement of the continent, including as it relates to the implementation of the African Continental Free Trade Area. Program Director, the African Continental Free Trade Area will become a game changer to the continent's growth trajectory, as some conference participants have already suggested. If you, the continent's business community, together with governments and the working people of our continent, act in unison, refusing to drop the ball. As you continue to exchange views beyond this conference, I would like to suggest that you also study the address by French President Emmanuel Macron on the future of Europe delivered last week at the Nexus Institute in The Hague. Amongst other things, President Macron envisioned, one, a Europe that guarantees security in all its dimensions, a Europe that responds to the migration challenge, a Europe turned towards Africa and the Mediterranean, a model Europe of sustainable development, a Europe of innovation and regulation adapted to the digital world, and lastly, a Europe of economic and monetary power. Program Director, there is a convergence between the issues we have just identified as the factors to watch and attend in the successful implementation of the African Continental Free Trade Area and what President Macron raised with respect to Europe. The notable difference is that Europe faces a different challenge of migration than the African continent. The migration they are mostly concerned about is migration from without, while we have to contend with migration from within the African continent. So President Macron's address provides a strategic inlet on the thinking of an important section of European political opinion on how it will shape the continent's trajectory and its relation with the rest of the world, and also Africa included. Program Director, let me conclude by returning to the question of social and political stability, to which I referred as one of the success factors of the African Continental Free Trade Area. Inarguably, war and peace have a very direct and material impact on the success of continental initiative like our own, the African Continental Free Trade Area. This is why our heads of states and government adopted the May 2013 solemn declaration, which committed the continent to silence the guns by 2020. The fact that the guns are still firing should tell us that we should spare no effort in the quest for peace. It is in this context that we reiterate South Africa's deep concern about the fighting that broke out in the sister African country of the Sudan over the weekend between the Sudanese armed forces and the Rapid Support Forces. We are particularly concerned about the rising numbers of civilian loss of life, the destruction of private and public infrastructure, the likely humanitarian disaster that is likely to arise with the entrapment of civilians in their houses with no access
to food and other basic necessities. Equally, what is concerning is the impact of the conflict on Sudan's neighbors. South Africa, therefore, fully supports the decision of the African Union Peace and Security Council at its meeting held in Addis Ababa, Ethiopia, on April the 16th, 2023, on the situation in the Sudan. We commend the efforts of the Intergovernmental Authority on Development, IGAD, to resolve the conflict. In this regard, we wish Presidents Salva Kiir of South Sudan, William Ruto of Kenya, and Ismail Omar Gwela of Djibouti well in their efforts to secure a ceasefire and an immediate commencement of the implementation of the December 5, 2022 Framework Agreement aimed at returning Sudan to civilian rule, which they have committed themselves to. So the guns should permanently fall silent. I want to take this opportunity to wish all of you well, but particularly the Secretariat. Well done to the Secretariat for this successful program. We are looking forward to this program again next year. Well done, Secretariat. And to all the delegates, I want to thank you once more and wish you well on your journey home. But before you leave, take some time to enjoy the hospitality of our country and enjoy the hospitality of the mother city. Thank you very much.
Thank you, Mr. Deputy President Mashatile, for this conclusion that marks the end of this closing ceremony. Excellencies, esteemed delegates, speakers, participants, thank you all for being a part of the 2023 AfCFTA Business Forum. And as we've heard from His Excellency Wamkele Mene, the next AfCFTA meeting is already set. So we hope to welcome you all again next year on the 24th and 25th of May 2024, which will be marked by new beginnings and innovations, including the Secretariat's new logo that has just been being unveiled normally behind me, and that you can discover on the screen, if someone would put it up on the screen. That's it? Okay. Thank you very much to all of you for being with us, and I wish you all a safe journey home. But in the meantime, we have a cocktail planned for you in the room next door on my right, so we will now welcome you all to join that room and enjoy the cocktail for the next hour or so. Thank you again, everyone, and goodbye.
We'll be landing shortly in South Africa. It's another sunny day in Cape Town, and today we've got something special in store.